cycles, and obviously the US market had a big run up towards the end of last year, which carried through into January and the immediate aftermath of the inauguration of President Trump for the second time. During February, it's been more a question of starting to see and to speculate on what the effects are of a number of these policies. Obviously, the speed with which the Trump administration is moving at the moment is slightly head spinning, so it's taking a bit of time to work out the full implications of all the various policy proposals that are outstanding. But suffice to say, what we now look at as far as the United States is potentially higher levels of inflation. That's the reason why the Fed's a lot more cautious, perhaps, in its interest rate outlook. Conversely, we've had a switch of attention through to Asia and to a lesser extent into Europe. So both those marketplaces have been outperforming the United States during the course of February, and that's probably going to continue for a little while yet.
Okay. So, Stephen, from that perspective, hi, morning, Alex joining in as well. I'm wondering how you place your strategy. Are you confident enough about the signs that you're seeing from China to move out? Because right now we're talking about a situation where the US perhaps is slowing and maybe slowing faster than some had anticipated. And the inflation bugbear is not going anywhere, particularly because those fiscal policies by Donald Trump are going to be inflationary.
That is true. So I fully agree with you on your second point. Those policies will be inflation. The first point in whether or not one's confident enough to be moving money back into China, I think the answer is yes, but with still an appropriate degree of caution. A lot of people, including ourselves, have had very low weightings for China for obvious reasons for a very, very long time. It does appear, however, that the central leadership in China is finally perhaps getting the message. We've seen lots of mood music changes over the course of the last couple of months, most particularly topped off last week by the first time that Xi Jinping has actually been seen shaking hands with Jack Ma of Alibaba. That's quite positive, because if you cast your mind back about 3 years ago, the first trigger point for the major China sell-off was the Chinese central government moving against a lot of the tech players, and Alibaba in particular. So any sense that that position is beginning to change is positive. The reason for the remaining caution is that we need to see some real policy announcements which highlight government moves to dealing with the intractable problems of the property sector and the excessive amount of debt that is bedeviling that sector right now.
Okay, so the question therefore is this, I mean, in the Buffett is not investing in the US either. If we do not see US exceptionalism, if China is making a resurgence, and we're just pointing out how in the Lunar New Year there were some record 9 billion trips, etc., so on and so forth. So consumer confidence plus political posturing, everything looking okay. Is China the place where global flows largely go in the near term? Does it happen at the expense of other markets like India, for example, which have corrected in the recent past as well? How do you see that?
I think there is going to be an element of switching between emerging markets. That's undoubted. And obviously, India had a very strong run. Valuations remain fairly rich there, whereas China, you're looking at some very compelling valuations for certain key sectors outside of property. As far as the point about US exceptionalism, I think that's a description which highlights the degree to which US growth has been driven by ongoing productivity gains, technological expertise, and leadership. That's not going to change overnight. The one thing that is holding the US market back, though, is valuation. It looks pretty expensive. So from that perspective, other opportunities look better, but you definitely have learned the lesson over many, many years. You never write off the US. We're still going to have a significant allocation towards that market because that's where the growth, margin growth, product leadership is still coming from.
Last point then, and a couple of weeks back, Stephen, we were speaking with a global expert, and they were talking about the last hurrah for the dollar. And the likelihood of it losing a little bit of steam. Some part of that has already panned out, but do you anticipate a further weakening, and what are the factors that could lead to that?
Well, I think the position with the dollar really comes down to interest rates. And with the Fed taking a slightly more cautious view on interest rate policy, it therefore means that US interest rates are going to be held at these levels for longer than was originally anticipated. 6 months ago, the expectations for 2025 was 3 or 4 rate cuts. Now we're down to between 1 and 2, both of 25 basis points each. Higher interest rates is supportive for the currency. It's supportive for the dollar, particularly at a time when other countries and other regions like the Eurozone probably going to be continuing to cut in the face of stubborn issues with anemic economic growth. In the US, it's still looking better.
Yeah. Stephen, thanks so much for joining in for that perspective. Thanks so much for joining us and speaking to us on NDTV Profit.
Pleasure.
All right, let's talk about the trade recap. And I'm going to keep this very quick because a lot has changed since the end of last week. And you're likely going to see a little bit of a downtick at the start. Let's see how prolonged that will be and whether it lasts through the session. As things stand right now, it's 127 points lower at the start. But you had a situation with foreign institutions once again sold to the extent of about 3,449 crore rupees, and domestic institutions bought about 2,884 crore rupees. The benchmarks ended what was a choppy session in the red, and you had the Nifty 50, which drifted in a 200-point range and ended about 0.5% lower. Take a look at that number though, 22,795.9, just about 4 points below what is that critical mark that has been pointed out to all of last week. We broke just below that. But if you think about it, that range has still been defended. The broader markets saw selling as well at the end of the week, and you had the mid-cap index that dropped about 1%, and you had the small-cap index that ended about 0.6% in the red. Most sectors ended in the red, and you saw losses led by the auto pack, as well as pharma, PSU banks, realty, all of them losing over 1% each. You had IT and banks that also lost about 0.7% each. The one pocket of strength was metals, and perhaps to a certain extent a strong China bodes well for metal counters around the world. In fact, the underlying prices also should be watched very closely. This pack ended higher by about 1% or so. The broader markets ended the week though with gains, and you had the mid-cap index that gained about 1.8% and the small-cap index that ended higher by about 1.2%. And once again, Neeraj, at the start today, you're going to watch that number, the 22,800 mark on a closing basis.
Yeah, I'm safe to say it will be broken.
Yeah,
and in fact, at the broader end of the spectrum, the numbers would look even weak. So in fact, that's the first line on my trade setup today, Alex, that the key technical levels will be broken today on the downside. I mean, I think that is a given. The question is what next, right? And is there something on the positive side in any fashion up next? And you know, some of these fears got confirmed on Friday itself, wherein while we closed below 22,800, still in that zone, but certainly the weakest performance for the whole of last week. Held out for 4 days, attack, defend, and then kind of give way. But the week ahead could well be tough, and therefore it's very difficult to call bottom levels because, I mean, who knows if the US markets bounce back, etc., and stuff like that. So remains difficult.
Not much in the way of major cues either.
No, yeah, but just the feeling that if indeed the risk-free rate in US is 4.5, right? And I know a lot of people say that it's about India growth and not US, but there is an equal camp which says that if the US risk-free rate is 4.5, why would the last dollar move to emerging markets? If indeed there are inflationary fears stoked out there, then, and the markets may believe that, oh, what if there is actually further rate hikes instead of rate cuts? Why should the dollar move to India or other emerging markets? So expect a tough week ahead. Very difficult to call bottom levels. I think what this correction allows you to do is swap out of weaker names in your portfolio for higher quality names, because higher quality names have corrected 15-20%, right? I mean, and today we'll talk about the Jeffries note on Mahindra and Mahindra saying the same thing.
It's on my list.
Whether it does well or not, okay, so I wouldn't drill too much on it, but whether it does well or not is separate. But the point is there are high quality names which have come down, some with reason, some maybe just because the markets have corrected. So great time, right, to swap out of weaker names into your portfolio because you didn't know the reasons and get into some of the higher quality names. And I mean, large banks probably look the best margin of safety for investors. So that's to be kept in mind. And I'm going to dwell a bit later on the Jeffries note, which is, unless you are going to, which speaks about pockets of opportunity.
No, that is all yours.
Okay, so let's start with the list of stocks on your list first.
I thought Mahindra and Mahindra got beaten down. I personally thought too much, because if you think about it, not even getting into the Jeffries note yet, Neeraj, you and I both know that if you look at the revenue contribution and where the profits come from, you're talking about more than half of the revenues coming in from farm equipment sector, which is tractors and otherwise, mostly tractors, and an automotive segment that is still dominated by ICE. So whether or not a Tesla comes in or a change in the EV policy is something that will change the face of the industry as a whole. But as things stand, the revenues that come in for this company are coming in through an automotive division that is firing on all cylinders based on what you saw in the third quarter, and from its tractor segment. So what is Jeffrey saying? It is maintaining a buy with a target price of 4,075. Pull up the price. The stock is currently at 2,669. So that's upside and a half. The stock is down about 14%. This is what Jeffries is saying over the last 10 days amid concerns over Tesla's potential entry into India, and see limited impact on M&M from Tesla in the near term. It says that it sees a gap in the portfolio prices and EV policy offering lower duty only on limited volumes. It finds M&M's 30,000 EV orders encouraging, as it forms 30% of India's total calendar year 2024 sales, which is quite significant. It is a proven fact. A lack of units were sold in the EV space in 2024. And in fact, those bookings have gone way past 30,000. It was for the first day, 30,000. M&M's 20x core FY26 expected price to earnings is attractive for 18%. And its EPS, or for its 18% EPS CAGR. Basically, the expectation is that the multiple is looking very attractive, considering the kind of multiple you're seeing or increase you're seeing in EPS going forward. So keep that on your radar. It could have a bounce today. Zydus Life Sciences, very quickly, it's at some thumbs up from what I see. It has received a final approval from the US FDA for ibuprofen, which is quite a popular drug, and famotidine tablets. And generally, when you see a final approval, this is something that will reflect in sales sooner rather than later. And so certainly watch out for this stock in trade. Railtel Corp has gotten another order win, 288 crore this time, East Central Railways. And we saw in the last week a couple of these railway stocks react very substantially and very sharply on the upside to significant orders. And this might just be another one. Neeraj.
Well, so certainly watch out for these stocks. Now, remember, there's a Nifty 50 rejig. For whatever it's worth, just laying it out, that Jio Financial Services and Zomato have been added, and BPCL and Britannia have been excluded. The changes in the Nifty 50 stocks become effective from March 28th. Now, you know, this is the lay of the land, that you will get some of these companies which are platform companies. I mean, there are fund manager after fund manager who've come in and said that it's happened everywhere in the world, and these stocks, as they become larger and more liquid, will make their way into the indices. The problem that it does for the Nifty, that it inflates the P multiple for the Nifty quite meaningfully. It will depend, of course, on the weightages as well. So Jio Financial and Zomato, interesting. We'll talk to our guest today about it, about what does something like this do to the Nifty P over the period of the medium term. But I mean, you can't fight this. There is a formula. These stocks are high market cap. They are fairly liquid, I would presume. At least Zomato is. So what's going to happen for sure. So that's just keep an eye out for them. Now, the stocks, and I thought the Jeffries view of where to invest was very interesting. So they have run 2 or 3 screens or trackers or whatever you call it, right? So the stocks, one of the screens is stock with valuations and growth visibility. So how are they doing this? On valuation, they are taking below 10-year average PE multiple and 14% growth. And the growth visibility, as they said, 14% growth and less than 3% downgrades. Effectively, that's the long and short. Now, within this list, the stocks which fit the bill, Adani Port and SEZ, Crompton, SHFL, Shriram Housing, and Apollo Hospitals. So these are the 4 stocks which fit the valuation and growth visibility screen. They move away from valuation and only focus on predictable growth screens. Then the stocks which fit the bill, M&M, TVS Motors, Indian Hotels, Amber, and housing finance companies. And of course, just purely valuation screeners, not looking at growth at all, Samvardhana, Concor, and V-Guard. So if you are really itching to put in money, if you like the Jeffries way of doing things, then these are some stocks that might fit your bill. So keep an eye out for them. Textile names are the second ones, Alex, on my list. Pearl Global, Welspun Living, Gokaldas Exports, and whatever else. Export of ready-made garments from India in January was the highest in 34 months.
Wow, that's great.
Yeah, that's much needed, right? We've been talking about this. Is there a shift because Bangladesh factories shut down, etc.? India has not been able to make the cut, etc. We've seen this now. January was very good. And coincidentally, we didn't know this, of course, until the weekend. But on Friday, we had Pearl Global. They expressed a lot of optimism around what could happen per se. So that was very interesting.
And we had Welspun earlier in the week as well.
Yeah, in the conclave, right? Yeah. Talking fairly optimistically about what could happen. So watch out for the textile names. Could be an interesting turn there. And while there are a lot of others, there is Healthcare Global, Federal Bank, and we'll talk about all of them. But I wanted to point out the Citi note on Indigo with a reason. The reason is Mahakumbh, I presume, right? So Citi is saying they've hiked the target price for Indigo to 5,200 from 5,100. They are saying they've opened a 90-day positive catalyst watch. Why? They say that they see a pickup in overall air traffic demand amidst Indigo's strong market share, and they expect significant improvement in PLFs in Q4, which is a seasonally weak quarter. And why would that happen? Anybody's guess. Mahakumbh. You could argue there is a Coldplay concert thrown in, etc., etc. But it is the 1 month strong Mahakumbh which will effectively lead to this. And then, just broadly, just before we go to our guests, broadly, Mahakumbh plus a seasonally strong April to June, throw in some bit of IPL-led travel, if not for anybody else, then for the teams.
And benign crude.
Reasonably benign. Yeah, relatively benign. 75 is benign, right? Yeah. We've been used to 70, so we feel 75 is not, but otherwise,
yeah, and
from the heady levels,
thereabouts.
Yeah, it's good, right? So it's interesting what they're saying about Indigo.
Very strong load factors, 63% market share in domestic, building on global routes. It is looking positive for this company.
And Mahakumbh, I tell you, Mahakumbh is quite something. Even from Ranchi, there are 3 daily flights, direct flights to Prayagraj.
And you might just see a big flurry of activity as we wind down towards the end.
Yeah,
right? 28th, another 8 days.
26th.
Oh no, sorry.
26th,
another 2 days. Right. Another 2 days.
Okay, but autos is the focus.
It is the focus, in fact, and on the back of this EV policy that is in the works that could see tweaks, you've seen several source-based stories on this platform itself, and a lot of people talking about a potential entry for Tesla here in India and whether or not that is being facilitated. Let's talk about implications, because you saw a few stocks in the automotive pack get hammered hard last week on account of some of these expectations. Whether they pan out is a question mark at this juncture. But Pramod Amte joining in, Head of Institutional Equity Research at Incred Capital. Pramod, thanks so much for joining in. Looking forward to your insight on this. Is it too early to say that there will be a dramatic shift on account of this new EV policy? And what are the implications for the existing players?
I think this policy has been in the works for the last couple of quarters. Pre-election is when the first glimpse was announced about attracting investments by giving concessional import duties. With the recent US visit, these duties are further seems to be in discussion for lowering as compared to earlier thought process of near 40%. So that's the incremental change, which I think definitely gives Indian consumer a lot of choice, especially in the top end of the EV products. Whereas for incumbent OEMs, it's a challenge to price their product as they launch high cost EV batteries into the EV ecosystem. But net, I think the bigger focus for the government is to make the best of the global technology available to the Indian consumer, and the biggest beneficiary in this is going to be the auto component space, where I think some of these MNCs who have initially got some benefit by getting into bigger tier 1 vendors, they can expand into tier 2 vendors, might be 3 years, 5 years down the line.
Pramod, good morning. So here's the question really. So if there are two sides of this coin right now. The ticker or the tape is saying that the street is worried about this. I see brokerage after brokerage coming out and saying, hey, we are not worried. We don't think it's a big earnings impact. We are saying that let's go out and buy. I would love to know, does this change in the policy call for a valuation derating? Is that the reason why stocks are a bit nervous on the bourses?
So clearly, I think, as I indicated, for OEMs, it's a challenge as compared to the earlier assumptions which were being made, especially those who are trying to launch the top end of their product ranges into EVs. So given a choice of Tesla versus others, people would definitely want to opt for BYD or Tesla products, which are well proven in the global market. So the learning curve is relatively lesser. So hence OEMs, there is a challenge. And that is where you have seen the pressure. The assumptions in terms of volumes for these, as some of them indicated, some launch responses might be questionable as these options come to the customer as compared to what the OEMs have been indicating. So I think there is a risk, definitely.
So therefore you believe that valuation derating could happen even if the near-term earnings don't get impacted?
Yeah, I think a couple of stocks have been substantially outperformers, priced for perfection. And that's where any of these policy shocks, which were not built in, have definitely led to a more correction in those stock names in terms of valuations.
Pramod, do I interpret that as M&M? Is that the stock that you're talking about, priced to perfection? Because my argument was, and okay, tell me what you think about my argument, right? You're talking about over 50% of revenue for this company coming from farm equipment sector. Tractor sales are starting to look good. And a large part of its automotive revenue, or actually most of it, coming from its SUVs, which are doing reasonably well as well. You have new launches that have taken or gotten good response. What is the implication on earnings? And how do you rate the Q3? Because the Q3 print looked really good.
You are partially right in terms of the short-term fundamentals, where I think even if you look at the third quarter, this is the only company which has seen earnings upgrades still coming through amongst the OEMs, whereas the rest all people have been adjusting the earnings downgrades. One, the response for products are still good. Having said that, the stock was trading at almost like +2 standard deviation above its 10-year mean on P adjusted for subsidiary value. And this has been one of the concerns for us, and hence we have been on the sideline saying hold rating on the stock, and which has played out when uncertainty emerges on policy, which is not factored in the current rich valuations.
Pramod, the other question is, and I don't know whether you can comment on specific stocks. I'm not asking you for a buy, sell, hold also, by the way, but my question is this. If you can comment on the businesses, my colleague Puneet, who tracks this space, right, pointed this out, right, that for Eicher Motors, I'm moving tracks here, for Eicher Motors, for example, or some of the other companies which have had a change in strategy, focus on sales, not margins, and suddenly you see that expenses impact margins, etc., and the market punishes those businesses. Eicher is a case in point. It's probably happened across sectors to some other businesses as well, as they are trying to shore up revenues. Is this something that the street or somebody like you who looks at these businesses appreciate, or you rather not have the companies do this?
So if I got your question right, is this strategically a change to look at for valuation changes? Is that what the question is?
Like that if this, no, what I mean is, okay, yeah, broadly that, but if the street is punishing, for example, in Eicher Motors, because it changed the strategy and the expenses took a hit and the stock was down 8% after results, is this something that the street is not liking? Is there something like you who looks at this space closely not liking it?
Yeah, I would say specifically to two-wheelers, where our pecking order and where our comfort lies is if you look at even the recent CIM conclave, right? This is the only segment where nearly a high single-digit growth is expected. So the overall two-wheeler space is still very interesting. Second, there is a substantial shift happening from unlisted players' revenue to listed players, which means that by Bajaj entering EVs or to that extent, Ola and Ather getting listed, it's only a matter of time that the profitability should follow. So overall, we are very positive on two-wheeler space with the growth visibility, rural being the driver. The preference might be for individual stocks can vary. Our preference is more for Bajaj and Hero, followed by Eicher. We don't like TVS for capital allocation. Specific to Eicher, I think.
Pramod, sorry, may I request, can I please request you to stay on? We have to slip into a commercial break, but we want to talk about this point that I asked you. Also, a bit of a Q2 review, a Q3 review if you have the time. So please just stay on for a minute. We'll be back in a short commercial, after a short commercial break.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
All right, back with India Market Open in conversation with Pramod Amte, Head of Institutional Equity Research at InCred Capital. And he was just making the point to the question that I'd asked him, but we needed to slip into a break. But Pramod, thank you for staying by. Last couple of minutes, please, and two questions. One from my end is on Eicher, which I asked you. You're just about to answer that. Could you talk about that?
Yeah, I think as I indicated broadly on two-wheelers and coming to Eicher specific, where we have a hold rating, primarily marginal investors are little worried about the change in strategy, but I think this is what is required for them in the medium term. Especially the auto stocks react positively when the market shares improve, which is more of a sales focus than a profit focus. So I think they were anyway at the historical high profitability, and deploying that for getting the sales traction back in action is very much essential, especially where the other competitors like Bajaj Triumph or the Hero Harley have seeded the market. And if the company doesn't respond now to chase these sales, they might be in a bigger trouble a couple of years down the line. So I think this is the right strategy for medium term. So hence our hold rating stays.
Pramod, a review, you've already commented in pieces about this already, but Q3, what did you think for the auto pack as a whole? And any positive signs considering that you have discounting trends that seem to be continuing in Q4?
So I think Q3 has been one of the most challenging quarters, especially on profitability and against analyst expectation. As we are written in a note, almost 90% of our 20 stocks, which we cover in the space, have missed the earnings. And also for the consensus, only one of the stocks where we have seen upgrades coming through. So that shows the extent of expectations versus delivery challenges. Having said that, this seems to be already broadly factored into the market, where the Nifty auto index valuations have slipped below the 10-year mean level. And so they are in a comfort zone. Might be we're in the last leg of earnings reduction as the sector outlook comes through. But I think the government policy has taken some action, either in the form of rate cuts or in terms of income tax cut, which I think should play out around the festival time as we go forward. So at least for the second half of FY26, there seems to be some drivers in place for the volume recovery and profitability recovery. And hence the sharp underperformance should get which should normalize as we get into the going quarters.
Okay, Pramod, I really appreciate your time. Thank you so much for being with us today. And lovely talking. We should maybe try and get you more often if time permits you. But thank you for your time today. That's InCred Capital with their view on autos. Believes that, well, Jefferies may believe Mahindra & Mahindra is a buy. Pramod Amte says that the companies will have challenges because of what the growth was priced in via the sale of EVs, might come under a bit of a challenge. Well, let's wait and watch. For now, the street has voted with their verdict. The stocks are down. Now, what could also have an impact on some other sectors are regulatory moves. The Reserve Bank of India has released a fresh set of guidelines for lenders, scrapping foreclosure charges or prepayment penalties on loans. You want to foreclose or prepay your loan? No penalty on you. It, of course, eases loan burdens, but it's a problem for companies, maybe. Let's understand this. My colleague Subhana joins in with more details on this. Good morning, Subhana. Tell us, what has the recent regulatory change been?
Good morning, Neeraj sir. So, yes, on Friday, the RBI had released these draft norms where they've asked lenders that they will not levy any foreclosure or prepayment penalties on any floating rate loans given out to retail and MSME borrowers. Now, these loans that are granted for business purposes to individual borrowers will also be free, of foreclosure charges. Now, in case of MSME borrowers, what the central bank has said that no charges will be applied to loans up to 7.5 crores, and lenders cannot stipulate any minimum lock-in period for loans to retail and MSME borrowers. Now, it's important to understand that presently the penalty on personal loans for retail borrowers was about 4 to 5% of the outstanding principal. So the central bank is also saying that once all of these guidelines are approved, this will apply to all floating rate loans. And they're also saying that this is in terms of safeguarding the customer's interest, through better transparency and customer centricity by lenders. Now, what impact it would have on lenders, we're yet to see. Largely, what analysts are saying, it could have some impact on their margins, but we're yet to speak to lenders and get more clarity on that. But it's going to be a major move for retail borrowers.
Certainly. Thanks, Subhana, for getting us those details. Neeraj, interesting only from the perspective of aggressive lenders in the space that could come and offer better deals to customers. The reason that they would shift now is that there is no foreclosure charge, and so you could see consolidation in a few aggressive pockets. I think there's going to be an interesting space to watch over the course of the next couple of months once this comes through.
Yeah, most certainly. And this is something you keep an eye out for. Very quickly, also keep an eye out for, I'm going to ask this to Parag Thakkar. RBI announced on Friday that it will inject liquidity through a $10 billion buy-sell swap. They are doing all it takes to have liquidity out there in the system, which is probably good news. Now, is this a big positive? Remains to be seen. I tell you though, financials are in focus. If Alex and Subhana spoke about that pocket of financials which will face foreclosure charges, losses, because they will not be able to charge anymore. There are multiple reasons why INCRED has downgraded State Bank of India to a hold. Puneet Johnson with some details of that note. Puneet, good morning.
Hi, good morning, Neeraj. So definitely it's a big downgrade coming in from INCRED. They've, downgraded to a hold from an ad rating earlier. So, target price is also cut to 795 from roughly 1110 rupees per share earlier. So it's an anti-consensus, downgrades on something like an SBI where the valuations have been around 1 time price to book for FY26. And they are essentially saying that you should brace for lower return ratios going forward. It's mentioned that, they're expecting the return of asset ratio to also moderate in this fiscal year and going forward as well. And they're estimating the return of equity also to decline to 14% over the next couple of years. Essentially, the non-core income, which contributes materially to the return of assets, is quite difficult to forecast. And we just had Subhana mention that as well, and some of the key aspects. They're estimating that the core earnings growth will be impacted because of recent repo rate cuts, and hence the risk-reward ratio is better for large private banks.
Got it. Thanks, Puneet, for getting us those details. By the way, liquidity, as Neeraj was pointing out, absolutely critical for the transference of monetary policy changes. You had a rate cut, but for that to percolate into the system, you need to have liquidity, and that's what the RBI is trying to fix. Already you've had a few banks, including State Bank of India, cut lending rates. But let's shift gears. We're doing a lot of that today. Let's talk about power stocks. And you've seen some of these stocks go up in the recent past on account of an expectation of a hot summer, but in certain pockets the expectation is that the summer is not going to be as hot as last year. Let's talk about some of those aspects. We've got a great conversation lined up with Bernstein in just a bit, but to set things up, we're joined by Mihika. Mihika, what are the key aspects to focus on in your opinion?
Yeah, so I don't know about the summer, but the stocks have definitely heated up in the past week. When you look at the BSE power and utilities indices, it's up over 4.5% in the last 5 trading sessions, and this is just last week. Now, in terms of the stocks that could see strong gains in that have seen strong gains in the last 5 sessions, you have 18% NLC India, JSW Energy up 15%, followed by a CSC and NHPC at 10%. Now, in terms of the potential triggers, well, number one was this power consumption trend that has picked up. Jan 2025 saw 2% year-on-year growth in power demand. However, Feb 2025, and this is just the first 2 weeks, has seen a 6.6% year-on-year growth as per JM financial data. Even if you see the peak power demand is up 6% year-on-year to 237 gigawatts in Jan. The first 2 weeks of February showed the same kind of trajectory, and this suggests a likely rebound in power demand in coming months. Now, the second potential trigger is the boost that energy storage as a theme got last week. The government has mandated 2-hour storage in all renewable capacities. This can be in the form of battery energy storage as well as pumped storage system, which has put stocks like SJVN, NHPC, JSW Energy, Tata Power and Adani Green in focus, which are already involved in the space. And lastly, we've seen certain ratings upgraded in the past month. Last week on Friday itself, we had Adani Energy, JSW Energy and Suzlon all gotten and buy call initiated. In the last month, we've also seen NHPC upgraded by CLSA to a buy, Tata Power upgraded to a hold by HSBC. We've seen JSW Energy upgraded to a buy by both Investec and Elara in the last few days of January, and Suzlon Energy was also upgraded to a buy by Nuvama Research in the last week of January.
Well, thanks for that, Mihika. Well, let's talk about some of these points with an expert, Nikhil Nigania. He's director at Bernstein Johnson right now on the show. Nikhil, good morning to you, and thank you so much for taking the time out and speaking with us. This is Neeraj here. Good morning. Before we get down to the brass tacks of how would you look at this bucket, which has also seen a correction with the rest of the market, just a word on power demand. I for one didn't think that there was any material dip necessarily, but clearly, as Mihika is saying, that there is a pickup seen in the last few days and weeks, and factors point towards an uptick and a significant one in demand for the next few. How have you observed the pulls and pressures in the pocket in the last, let's say, quarter or thereabouts?
For sure. Thanks for having me on the show. So firstly, on power demand, see, that is the biggest driver of the sector. For any capex to happen in the sector, for any growth that ways, and earnings as well for merchant power plants, power demand is the most important thing. So power demand, historically, India used to see like 0.8x of GDP, real GDP kind of a growth multiple. Last 3 years, 2021 to 24, it grew at 8-9% CAGR. That's why the sector did so well during that phase. Last 6 months, though, power demand growth slowed down to low single digits, even dipping in some months Y-on-Y. A key reason for that being high rainfall. February, as rightly said, February, we finally saw some demand uptick. First 14 days saw 6.5% power demand growth. Long term, our view is 1x of real GDP growth. That's how we would forecast power demand. That's our base case forecast of power demand. And globally, it's accelerating. Globally, as people switch from using energy in terms of fossil fuels to electricity, there is an acceleration of power demand, which is the medium-term story we have for power sector. But near-term, though, to be honest, it's difficult to predict. We saw a lot of trades happening into summers for power shortage. But first half of this calendar year, at least our expectation is power demand might not grow as fast given the high base that we have of last year. And as you also mentioned, weather possibly could be warm, but not as warm as last year, which is a big driver for demand.
Nikhil, just wondering about what the best prospects are. So you mentioned that it's tough to predict, but having said that, you've also said that the best is likely behind for wind and thermal equipment and transmission and capex estimate revisions as well. I'm just wondering what the implications of that are, because you don't only play the power producers, you also play the transmission and distribution players, you play the equipment manufacturers. Are you essentially saying that the valuations are too high to justify where they stand right now and the prospects are not very bullish going forward?
No, see, overall on the power story, we are positive, but there are pockets or themes where we see some headwinds. So, medium term, we definitely think the power capex is going to be massive in India. But the spaces where we see headwinds, number one is wind. Wind, as we have said earlier, wind land acquisition for wind, getting large, good land parcels with wind speeds is very challenging. So while the intent is there by the government, executing wind power plants are not easy. So that is why we are a bit concerned on wind. On thermal equipment, again, we love NTPC. It continues to be our top pick. But thermal equipment per se, the challenge we are seeing is batteries as well. So batteries have become very cheap, much faster than anyone envisaged. So when we are trying to solve for non-solar hour power, battery becomes a good challenger to thermal power beyond what government has planned. And third point is transmission. Transmission as a theme, we are positive, but we don't expect further capex revisions to happen beyond what the government has already announced, which is 9 lakh crores by 2032.
Nikhil, sorry, come in on this one, because the story, and rightfully so, I'm not saying it's a wrong one, but the story that comes out after every quarter from some of these wind power equipment companies, for example, right, is about the 500 gigawatts by 2030 wind's share out there, because there's only as much that solar can do and hydro can do, and therefore wind is inevitable, if you will. But I hear you say that there is an issue there. I saw your note which says PPAs are not getting signed in certain cases as well. So are the valuations prohibitive for some of these wind power equipment companies or even power generating companies, if you will? And again, the reason that I ask this specifically is because, like every other sector, this sector has also seen price derating, and people would believe that if indeed the Q3 results or the commentary is anything to go by, then the things are smooth, and therefore this give an opportunity. You beg to differ.
So on valuations, to your point, so if you break it down into two parts, valuations for developers and then valuations for equipment suppliers. So our coverage is more on the developers, which is the likes of NTPC, Power Grid, etc. See, developers valuation, if you look at the global multiples, globally utilities trade at about 10 times EV/EBITDA. The state-owned companies, which we like, NTPC, Power Grid today are at about 9x EV/EBITDA. So they are cheaper than even global peers, not just Indian peers for that part. The private utilities, though, are slightly pricier despite the correction. They are about 12 to 14x EV/EBITDA. So hence our preference towards state-owned entities to play this trade. Now, coming to equipment suppliers, we don't cover those stocks specifically. But what we can see from a demand perspective is wind, for example, as you said, government is very keen to push it. Orders look very good for wind, new wind assets. But even if I quote a renewable CEO who earning call happened just a couple of weeks back, he said it's unlikely that India will see more than 5 gigawatts of wind come in a year, right? And government aspiration was at least 10 gigawatts a year of wind capacity addition. Because land is a challenge, as I said, and battery is also negative for wind, right? Because for non-solar power, people were going to wind, but now they can go to batteries as well. They can reduce wind, increase batteries, given how cheap they've become.
Interesting. So, and you've already mentioned, I'm just reiterating, NTPC, Power Grid, and you like REC PFC as well. The last point that I want to raise with you, Nikhil, is, and it's interesting, I saw this in your note, nuclear energy. You find it interesting, you find it a good prospect, but the thing is, you say that you would be very surprised if a private player takes a jab at it, and that's based on how regulations currently stand. How do you play this theme, if at all? Because a lot of people argue, yes, of course, if India has to achieve its targets and its power needs, will definitely have to be served by nuclear, whether it's modular or otherwise.
So nuclear as a theme, and the government push is very fair, right? Again, why is there such a big noise on nuclear recently? Everything is to solve for non-solar hour power, or firm power. People know renewable will come, solar will come. But the challenge is, how do we get base load power, which is there when the sun is not out? Among the multiple options, one is nuclear, which is clean. So that's why the push on nuclear all across the world. And it's not too expensive. Levelized cost of nuclear power is 6 rupees. A new thermal plant costs 5.5, so it's not really that expensive. The biggest challenge in nuclear power plants is the construction timeline. It can take 10 years on average in India to set up a nuclear power plant. A greenfield plant, Gorakhpur, which we are building, the work started in 2018 and expected to get commissioned in 2031. So that's how long it can take. So for the asset to become cash flow positive, it can take multiple decades. So that's why we feel it's a risk one should take only if you have a cost plus kind of a business model, which state-owned companies do, but not private ones. So we are not super keen on private developers chasing this opportunity, given how long the construction take and the risk associated. To play the theme, either you play a developer like NTPC or the JV with NPCIL, or you play the equipment supplier. So L&T we cover, which does the engineering construction work for nuclear power plants in India. So we like L&T, and then there are smaller names which we don't cover, like Walchandnagar, etc. But we don't have a view on them since we don't cover them.
Nikhil, unfortunately at this time, we can only spend so much time on a conversation, but this was so good. I was wondering if on nuclear, the NIMBY effect, which is not in my backyard, comes into the picture as well, and all of those conversations. But I would urge Nikhil, at some point of time in the next 2 weeks, if your calendar permits you, to join in for a slightly longer conversation, because it's a fascinating story and some of the insights that you've given in your report are worth putting out there. So looking forward, hopefully, to talking to you soon.
Same here. Thank you for having me on.
All right. That's some very good insights, including the one on wind power, and I want to take that conversation to our guest Kush Bora and Parag Thakkar, of course, join in, and we'll talk about a clutch of others, because even in power, Alex, as I think a message from Parag Bhai only suggested, or maybe otherwise I read it somewhere, that in select cases promoters have started buying. Is that are people saying that okay, the correction is overdone, if you will? But just one quick question: wind power, wind equipment. It's an interesting point if CEOs are coming out and saying that no matter what happens, it will not go above 5 megawatts per annum, whereas the expectation was that some point of time it will reach maybe 8 or 10. Does it cap the valuations, Parag Bhai, of a Suzlon, Inox Wind and everybody else in that ecosystem?
So basically, I don't have these stocks in my portfolio.
Which is fine.
And basically, I have a limited knowledge on this entire renewable theme. But I generally don't buy into narratives. I see cash flows. I am a cash flow lover. I don't believe in narratives till they actually convert themselves into cash flows. And as he also very rightly pointed out, there are some targets which are set by government, but there are some challenges also on the ground. And so he rightly pointed out that land acquisition is a challenge in wind equipment, wind business. So definitely I will be also cautious. And generally it is not my nature to go with the narrative.
Okay. So then, but the data point that Neeraj was just mentioning, which is promoters going out and buying, have you been witnessing this?
Yeah. That's an interesting trend which I see. Three things which have turned positive in the market, which is completely unnoticed by markets. One is dollar index turning from 110 to 106 now. Correct. The second is that government is taking its steps. They boosted consumption in the budget. Now government spending has started. RBI is doing its bit by infusing liquidity at every, whenever there is a shortage of liquidity, they are there to provide liquidity in the system. They cut repo rates to boost consumption and private sector capex. And now the fourth thing has come, which is promoter buying. See, at 26,000 when we were actually selling in the market, a lot of promoters were also selling and PE funds also were selling, right? Now, after a long time, in this mid-cap and small-cap correction, I am seeing promoters buying. Just to give you one example, and it is a stock which we own in the portfolio, Jindal Steel and Power. Now, promoters have bought worth 790 crores in last 10 trading sessions. Okay, it's a huge, I would say, faith, because they know, and if you see their earning call, they have said clearly that in whatever they have said is that their capacity is going from 9.6 million ton to 15.8 million ton in 3 years. And so, this is with backward integration, which will improve margins. So, their EBITDA will go up from 9,000 crore to around 16,000 crore by FY27. Correct. And current market cap is 89,000 crore, net debt is 13,500 crore. I would say that if they actually do 17,000 crore EBITDA with backward integration, which is structural EBITDA, then they can give 8 times, you can give 8 times to them. So 1,36,000, and net debt is not rising too much. One interesting thing again they have said on the call is net debt to EBITDA will not exceed 1.5x in spite of 60% capacity addition. So that gives you a 30-40% upside on the table. Yeah? A small developer, I'll tell you, recently listed developer like Arcade Developer, the promoter is buying. TVS, the new recently listed company, TVS Supply Chain Solutions. Promoters, TVS Motors has bought 88 lakh shares from the market. So there are interesting things happening when in this fall of the market, where promoters have started buying, which is a great news for me, because promoter knows the intrinsic value of the business. Promoter is excited now. Why JSPL must be buying? Why promoter is buying? They know that their projects are now going to commission, and every quarter there will be improvement in the volumes. And if prices supports, and if you must have read the Tata Steel, Mr. Narendran has also said that at this steel prices, it is very difficult to put capex, which will cap the capacity increase. Plus, if government does something on safeguard duty,
sure.
It's a shot in the arm.
Okay, so we'll talk about all of this. But viewers, I urge you, do not go out and buy a stock just because the promoter is buying. You need to study it. Because there are a clutch of names wherein promoters have been buying for 6 months and the stocks have come off. So please do your own due research. Do not buy it because a promoter is bought or because it's being discussed out here on television. Forget our channel. Anywhere. Please do your own due diligence.
It's not for trading.
It's not for trading for sure. No, we are from an investment perspective.
Intrinsic value, understanding wise.
Yeah, but sometimes the promoter may also go wrong. So please do your own due diligence. That's my limited request. Okay. Now the charts will look bad today. We need to make it a bit of a rapid fire here right now. Kush Bora, thank you so much for joining in today. We'll start off lower. What are the charts telling you if we start off 100 points lower?
There's a good possibility that if we do start 150 points lower, we might see a bit of a rebound from there. If the team can quickly bring up an 18-month chart of the Nifty, you'll see that beginning of 2024, and we spent good 4 or 5 months in that 21,500 to 22,500 band, which perhaps could be a near-term bottom, for the market. I know it's still some distance away, but that essentially what it does is that it brings us closer to the 22,500 first level of that strong long-term support that the Nifty is looking at. So if we do get that dip of 150 points, I think this might turn out to be a buying opportunity. In fact, for the last week or so, I've been discussing that there's a strong possibility of a rebound on the Nifty. We've been getting that, but nothing more meaningful than an intraday bounce. And that is also reflecting in the numbers where FIIs were short 84% on index futures for a week, and now they've gone 85%. At such low levels, increasing shorts, I think there is perhaps a short covering rally around the corner. If nothing else, I think the expiry month, this is the monthly expiry, right? Week. So that alone might perhaps give us some short covering bounce. The only challenge is that the resistance levels have shifted from 23,300 to 23,000 now, and that's the first level that I will look for on the upside.
Okay, so keep in mind, viewers, when we'll ask Kush Bora at 9:20 whether he's going out and buying the Nifty if the Nifty starts off 100 points lower, right? So thankfully, Kush allows himself to be put in the dock, which is great. Kush, very quickly, your stock recommendation. You slip into a break, but your stocks very quickly.
I'm still going with a long and a short. I'm still finding opportunities in a market like this. So Global Health, Medanta, the stock has seen a beautiful run up over the last 8-10 sessions, last 2 sessions on the back of very good volumes above the 200-day moving average. So 1270, 1305 are your targets. 1200 is where you place that stop loss. On the short side today, I have delivery with targets of 269, 265 and stop loss at the 277 mark.
Time for a short break. We'll be right back with the pre-open session. Stay tuned.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Welcome back. You're watching India Market Open, and we've spoken about this already, but I think we should delve a little deeper into these latest RBI norms on the foreclosure or prepayment of loans. It could have implications on competitive intensity in the space, and my colleague Somit has just pulled up some data. He said that floating rate MSME and loan against property form as much as 27% for a few NBFCs, and you could see reduced product profitability in the space on account of this. Remember, no foreclosure means that you as a customer could be approached by another lender, and shopping for loans becomes easier and more lucrative for you, and indeed for aggressive lenders as well. Do you see that as well, sir? And do you see the competitive intensity reducing NIMs for certain players?
See, already NIMs will be under pressure because of the repo rate cuts, right? So that is a known negative for banks, right? Because deposits will get repriced at a lower rate at a later date. So 1 or 2 quarters of NIM depression is given, and then depending upon how deep or shallow the rate cut cycle is, right? So this is a very small factor in my view. But I recently attended Federal Bank's analyst meet, and where I was super excited with the CEO's clarity on improving NIMs in long run.
Okay.
Once this entire pressure around rate cut stabilize, I think his focus on improving CA within the CASA thing, just by focusing on their own customers.
Sure.
So I think, and at 1.1 times FY27 book value
It
and
looks
10p, it's a great buy.
Very, very quickly before we go to the next conversation, very quick. Anything that you find worth buying in the financial space? Bajaj Twins looked interesting a couple of weeks back. What does it look like, Kush?
On the banks, I think HDFC Bank and ICICI Bank both are at the 200-day moving average support, and we've seen them rebound in the past, so that will definitely be on my radar. Friday also, when the entire banking lot was under pressure, HDFC Bank saved Bank Nifty, some further blemishes. Bajaj Finance, yes, but I think they've run up quite a bit, so consolidation is par for the course. If it does hold up above the 8250 level today, then Bajaj Finance for a second round of buying from here on could be considered.
Okay, now more conversations, and Mr. Indrajit Mukherjee, Vice Chairman of Texmaco Rail and Engineering, joins in to talk about everything that is in that bucket, maybe Outlook 2025 as well. Mr. Mukherjee, great having you. Thanks for joining in. Just around market open, so we might have a short time, but I would love to get your perspective, sir. The street seems to be a bit, how do I say, cautious about the prospects for the next 12 months post the budget announcements. Put into perspective how Q3 was for you, and how do you expect, more importantly, 2025, calendar year 25 to be for you in light of the recent budget announcements?
Hi, good morning to you, and I'll make it very short. I think, let me respond to your second question first. We had a pretty good third quarter. Despite all the challenges in the supply chain, there were some critical components were missing, but we still were about 49-50% over the same period last year, where PAT has gone up, the EBITDA is inching up, and it's been about almost double of same period last year. Coming back to your next, let me also go back to the first question to say that our numbers are almost flat despite all the problems that we had in the productions of wagons. But coming back to your second question, I think you have used a very, very appropriate language, appropriate word, by saying one has to be very cautious. I have to do some speculation here. And the speculation is that the railway capital allocation has been kept the same as last year, and yet government is looking for higher freight loading and at least an 8 to 9% higher revenue coming from the freight. So I know there are restrictions of congestions on the tracks, but I think in order to make that to happen, it's going to be giving us, there is a bit of encouragement, and we see light for the future because the wagon procurement has to go up to do these 8% because there always some wagons go out of service. Plus, there are lots of private players like steel producers and iron ore producers, coal producers, cement. They all want their private wagons. So I see a tilt of orders moving from the Indian Railway to the private players trying to buy wagons.
Got it.
And of course, it's going to help us in our rail construction and our electrification wing.
Mr. Mukherjee, you're giving us fantastic headlines when you say that Texmaco Rail is looking at light at the end of the tunnel. But having said that, give us a sense of the order book. You stood at 7,600 crore at the end of December. Give us a sense of execution heading into 2025 and how much do you expect this order book to grow?
See, this the number of wagons that we are making is much more than the wagon intake. So obviously the order book or number of wagons are incrementally diminishing. But we are also with many inquiries which have come to us, which are from private sector as well as from the export segment. In fact, I'm very happy to say that we have bagged a substantial export order from Africa just last week. So I think at the end of the day, I wouldn't say it's a par for the course, but I think as time passes, we will be able to gather more order. In any case, our order book is full for the next 1 year and 3 months. So about 15 months, we are already full on the wagons. Same is in the electrification side. EPCs started doing well, and we are making good amount of money in the electrification. EPC, which is rail construction, we are looking into some various value-added areas to move in. It's still too early to say, but I think we will move into some very strong areas which will give us a strong boost to our EPC business. So all that I can say, the market is speculative, very difficult to say what's going to happen, but I like to remain optimistic.
Just one final question, Mr. Mukherjee. Because you've done so well, right, in the last 18 odd months, could it be a year of consolidation or could it be the year of an encore of the growth rates that we've seen in the last 12 to 18 months?
It is a major consolidation period for us. As you know, that we also have acquired a company from Baroda, which is the Jindal Rail, which brings in lots of design development. So it's a year of consolidation and also a year of differentiation for us. We want to be different. We want to bring in some unique selling proposition. And that's the reason you must have heard, you must have seen that we have signed up an GCC as well as a design development agreement with Trinity Industries, which is the largest in the world. Trinity is from the US. So I would say it's a consolidation period while adding on to bringing more differentiation to our business portfolio.
Okay, Mr. Mukherjee, we wish you all the best for that. And during this consolidation period, may it strengthen your internals even more than what you anticipate. Thank you so much, sir, for taking the time.
Thank you, Neeraj and Alex, both of you. Thank you very much.
Well, that's cautiously optimistic Texmaco Rail, but all of these stocks have really come off. Parag bhai, this wasn't a narrative really. I mean, they showed in the numbers, the order books, etc. People touted this to be a 15-year story. Somehow this budget has disappointed the hopes of a few people. Is this correction an opportunity to buy into some of the select railway names?
Maybe. I'm not, but from the key takeaway from me from in the budget was that after 10 years, they are focusing on consumption and putting more money in the hands of middle class who will spend on autos or FMCG or deposits. And so for me, and generally, if you see the FMCG pack, the auto pack, they generate free cash flows, they generate high ROCs. So it's a good investable pack for us. So I'm focusing more on that and playing infra through L&T and Jindal Steel and Power kind of names. And of course, financials will play the entire thing. For example, there was no talk about housing in this budget. Yeah. But for example, we own companies like India Shelter and Navas Finance.
You also own Federal Bank, if I'm not
wrong. Yeah, Federal Bank, 100%.
There was an analyst meet, Parag bhai.
Yeah.
What do you make of it?
So basically, long term...
Sorry, if we have spoken about it.
We did.
Okay, sorry. But long term, you're constructive.
Long term, very constructive. The focus of Mr. Manian on improving ROI in long run and NIM and profitability as I said, by focusing more on car within their same clients, and by focusing, and remember, Kotak Bank has expertise in lending to tractors and construction equipment and CV, which was not there in Federal Bank. So which Mr. Manian will bring over next 2 to 3 years, and ROAs will gradually improve in spite of the near-term pressure on margins because of the repo rate cuts.
Interesting.
And one thing which I would like to say that I was talking about is housing finance companies. These housing finance companies who are lending in tier 2, tier 3 cities, they lend at 14-15%, right? And their cost of fund is below 9%. They are in good spreads. It's a completely secured book. And something like India Shelter, which is available at just 2 times FY27 book and 13 PE. And if you see, the growth rates are 30-35%. So these are very interesting names in, I would say, and of course with a disclaimer, these are all long-term views and these are all stocks in our portfolios. It's a big disclaimer, and markets are very reckless, as Neeraj said. You know, it will be not good for anybody to just go ahead and buy the stocks just because of my recommendation.
All right. Speaking of landing in tier 2 and tier 3 cities, Interglobe Aviation City has maintained its buy rating. Neeraj spoke about this earlier. Mahakum. The implications of that on this particular stock. It's up 8% over the last 1 month. Puneet joining in to tell you what Citi is saying and why it has a buy rating. Puneet?
Well, thanks for that. They've also, increased their price targets to roughly 5,200 from 5,100 earlier and opened a 90-day positive catalyst outlook on Interglobe Aviation. Now, they mentioned that, they're seeing a pickup in the overall traffic, which is, of course, aiding earnings. And the demand also seems to be, holding out going forward as well. They maintain that Indigo's strong market share is another key positive to look at as well. They're expecting a significant improvement in PLFs in Q4 of FY25, which is generally a seasonally weak quarter. That's another key positive. And one final point they're mentioning is that, part of the increase, of course, as you rightly said, is because of Mahakum, and a higher demand could manifest itself into better yields going into Q4 of FY25. So essentially, it's a in a weak quarter is expected to perform better, and hence the 90-day positive catalyst coming in on Interglobe Aviation.
Let's wait and watch if it works. Thanks so much for that, Puneet. Now, before we get in Soni Patnaik in the conversation as well, Kush Bora, aviation stocks, SpiceJet, Interglobe, good to see it 8% in a month higher, right? What do the charts say?
So relative strength apparent. SpiceJet is not something that you want to consider, so I wouldn't even leave that out. As far as Interglobe goes, I think we've seen a bulk of the move already. I'm not saying that it can't move higher from here, but 4,500 is a bit of a resistance. And if you see, on the daily charts, the volumes on the way up now are starting to thin out. So if I did have this position from slightly lower levels, I would book partially, hold the rest with a stop loss around the 4,400 mark, which is the 200-day moving average support. I wouldn't really go out and buy a fresh just yet.
Okay. Just very quickly, some stocks that we've missed marking. So EPL is in focus, just before we get in Sony. Epsilon is going to sell about 24.9% stake in the company to Indorama Netherlands for 1908 crores, 240 per share, about 1% premium, and which is why I think the stock is just about flattish. The other one is HCG, wherein there is a deal that has happened in Healthcare Global and should pull up HCG or Healthcare Global for you. It's happening at 11% discount to the current market price. For now, HCG, because KKR and CVC are coming into the fray, marginally doing okay, so keep that in mind. Last one is Federal Bank, had an analyst meet, kind of Parava has spoken about it, but just want to see what it's doing in the pre-open. Flattish right now. Soni Patnaik with us. Soni, good morning. We're just 2 minutes away from market open, Soni, so quick fire conversation with you. First, Kush was of the opinion that if we start 150 points lower, we may show a bounce back as well because it's expiry week. Do the derivative position show you that?
Good morning, Neeraj. Thank you for having me on the show. And the answer would be no, it does not. I think, last Monday also I shared the same opinion that 23,000 point would be another round of fresh selling. The target is 22,500. I still stand by the view. It has to test 22,500, 22,400 levels before showing any meaningful bounce back.
Okay. Soni, then, hi, morning. And what would you go out and buy today, or would you be cautious?
Good morning, Alex. So I think it rather would be cautious. So go with, balanced approach, of course. a buy decision can come only if the levels are matched. So I would watch out for SBI Life, which has given a decent closing, but that's a condition. Condition is that only if it crosses a 1505 mark, then one can actually look into buying of SBI Life. It has decent positions. It may consolidate markets quite choppy, but the condition is that to buy above 1505 for targets of 1530 to 1550, and then you need to keep a stop loss of 1480. But if the levels are not triggered, I think it's better not to buy that right now.
Okay. And do you have anything else that you're watching? And of course, some of the early rates coming through, Sony. Any other stock on your radar this morning?
Yes, so another would be a sell idea in PFC, which one can sell in the range towards 391 on rise and on any declines towards 388. I think that's a range where one can do a fresh round of selling in futures, keeping a stop loss of 403, and a good positional target can be seen towards 370 to 360 odd levels.
Okay. All right. So it's a sell on PFC. Kush, I'm just wondering whether you're seeing anything interesting in the first few ticks, of course, early minutes. But what would be your most strong buy right now?
I think I'll go with a delivery short sell idea that we had discussed. Okay. So continue on that 269, 265 targets, 277 stop loss. City Union Bank was a short we discussed on Friday for a second target of 150. Very close to that. Not a bad idea to book profits on that if it does come closer to that level.
Okay, Sony, if you can give me a 20-second answer on Mahindra and Mahindra, it's the most talked about stock currently.
So the stock is looking weak because it has closed below its 200 exponential moving average. It becomes a sell on rise of a structure until and unless it can again take out the 3,000 odd mark. Downside, it has a scope to test 2,500 odd levels. So avoid any fresh longs at this position. Rather, one can look into a sell on rise for short term.
Okay, now viewers, because we have Sony with us and Kush with us, we are going to focus a lot on trades once the market open is done, because the market will start off weak today. So looking wobbly, 160 points lower, in fact, 22,631. The level of 22,800 or the zone of 700 to 800 has comfortably been taken out. Banks lower too. Reckon IT too might be lower. Okay, let's just get the Nifty IT, please. Yep, 1% lower. Mid caps and small caps will come up on your screen next. 1.2% lower for the mid cap space. The small caps, 1.1% as well. So after 3 days of outperformance or 4 days of outperformance, small caps have resumed back to actually falling a lot more than the Nifty has. Let's get the heat map on the screen and show you what's moving and what's not. Well, M&M is in the green. That's quite surprising. And there is a bit of Dr. Reddy's. Why I say surprising is because it's fallen so badly for the last few days that it's interesting to see it in the green at such a time. In fact, autos are doing okay today because you see an Eicher and a Maruti in that list as well. Financials maybe not all that bad because you do have Kotak Bank out there. But beyond that, look at the list of losers. Actually, it's a wide array of losers. ONGC down 2%, maybe a crude impact. HCL Tech down 1%, Trend down 1.5%. You have Wipro and Bharat Electric, Power Grid NTPC, Hindalco. So metals, power, IT, capital goods, consumption, oil and gas, it's a fall across the board. We don't have a single sector driving the downside. Yes, IT might be the biggest loser, but it's not a single sector kind of a thing. And of course, the defensives are right here. HUL, ITC, Nestle, Tata Consumer out there in the list of the better performing stocks. But nearly all the stocks in the red except for one Dr. Reddy's and maybe a Tata Consumer. Not a good start, Alex.
Hey, no doubt. And we were anticipating this, perhaps to a certain extent. This is worse than what we were anticipating. But let's see if some of that dust settles in just a bit. It's a big bang open on the downside. Basically, let's see if these individual stocks that we're speaking about will see moves. Because I know we were talking about Mahindra and it opened in the green, but it's since then given up a little bit of ground, and let's see how far it goes. But apart from that, you have the likes of Healthcare Global, which we spoke about at the start. Let's pull that up and see where it's at, because KKR is set to acquire up to 54% equity. It's up and about and 4.4% at the start. Strong move up there. Zydus Life was on our radar as well. It has gotten final approval for ibuprofen as well as one more drug. Not doing too much at the start. Let's see, we'll have to watch out for this over the course of the session. Sometimes after the first hour, you see a bigger move. Interglobe Aviation, we were speaking about it this morning. Citi has an upside potential of 15% on the stock. It has a buy rating. A lot is working as a tailwind for this company, and it is up on about 0.6% in the green. Gabriel India is in a new pact with Tractive. It's down about 1%, though. This is a positive for the company, and not immediately seeing a reaction though in trade today. Of course, the texture of the market itself is not very strong at the start today. Utkarsh Small Finance Bank is also a thumbs up, but the stock is down 2.5%. The update here is that the company will consider an equity fund raise. RVNL was also on my radar because of an order win. Let's pull that up. The order is for 156 crore rupees, but the stock is down about 1.5% or so. You've seen some of these stocks reverse early losses on account of these order wins. Let's see if this is one of them as well. A couple of thumbs downs here, and Bharti Airtel was something to watch today. Let's see if it's not doing too much. It's just about flat. It is increasing its stake in its Africa unit, and this is soon after an IPO there. And so some might argue or wonder why this is being done. And of course, the fine print or the detail and the story there perhaps still emerging. And finally, NBFCs. Let's pull up as many as we possibly can just on the back of this RBI update on foreclosure or pre-closing of loans. And this is certainly something to watch over the course of the fourth quarter and maybe heading into the next year as well. Not doing too much. In fact, the Bajaj twins moving in opposite directions at the start. I would actually look at some of the banks as well if we possibly can, because what you will likely see is pressure on the personal loan side. Already you've seen a little bit of offtake there come off a little bit, but you could see competitive intensity play out in the space, and NIMs, which are, as we've already pointed out, heading downwards, could be heading even further. You could see more contraction in the fourth quarter and in the first quarter of next year, Neeraj.
The small caps are taking a brutal beating, 1.86% lower, so the breadth is not looking great. VIX is jumping up. IT is being taken to the cleaners, 1.4% lower. Kush Bora, opening thoughts. Is this the dip that you would want to initiate a contra long via options, if not futures? And a word on the IT stocks in particular.
So won't really go out and initiate a contra long. The thesis for going long was, to anticipate a short covering bounce, or rather, ride the bounce once you get it. We've not seen that. If you see the initial, opening couple of minutes, there was a 30-40 point kind of a recovery that was seeming like something that, could build on, but hasn't really been the case. While there have been select pockets, stocks which have actually rebounded from lows of the day, not enough to instill that confidence that yes, the markets are perhaps going to see that rebound. So it's not a preemptive move. It's something that, once it comes about, you go out and, take a long position on. So anyway, as I said, given the support levels that we're looking at 22,500, fresh shorts really don't make sense. So I will rather wait it out. If and when I get that bounce is when I will consider, a long trade on the indices via options, via futures, but more of a short covering rally play. Now, as far as, the IT stocks goes, a lot of them have seen hammering. In fact, if you see the US, Nasdaq, it's seen quite a bit of negative RSI divergences over the last month or so, and now we are seeing that too cool off. Some rub-off effect of that also will come about. Not very constructive on TCS, Infosys, some of these large names. We still continue to like HCL, Tech and Persistent. So maybe these are the stocks that you'd want to consider from a positional standpoint as well. At the moment, the kind of setup TCS and Infosys are suggesting, I think there could be some near-term pressure on these, that you would continue to see going forward in the next couple of days at least.
It's looking weak. Real estate as an index is amongst the most impacted ones, and everything from a Prestige to a DLF to a Macrotech or Godrej Properties is all being punished. Soni Patnaik, opening thoughts here. We spoke about IT and the index, but a word on the index, of course, would you initiate any shorts also? Who knows, right? I would love to understand from you if you're doing that. And a word on real estate names, because the punishment being meted out there is almost continuous.
So Neeraj, if we look at just about the index, then Nifty, of course, we can see aggressive writings. It has just started around 22,700, 22,800 mark. The gap down has already played its part today. Perhaps if you see towards the 22,650, 22,680 range, maybe then that level for intraday could be a fresh round of selling. The support does stand still at the same levels that I've mentioned, 22,500 to 22,400 range. It has to test that level before it shows any meaningful bounce back. So continuing with the sell on rise, of course. Now the real estate, of course, all the stocks have taken quite a beating today, and fresh selling from even current levels is difficult. However, DLF still looks weak to me on charts. It has given a very fresh breakdown. And the next level of support for DLF comes around towards 645. So one can sell DLF on small rise towards 675, keeping a stop loss of 690. Targets of 645 can be seen.
All right. I'm just wondering whether any of these pharma names should be looked at. Kush, a few topical ones based on news flow over the course of last week. But as I look at the screen today, in fact, in any pocket, there are only a handful, maybe 2 or 3 in each index that are gaining ground. Any opportunities there? Asking because traditionally you would look at pharma or healthcare names as defensives, right?
So if you're looking for comfort, I think the comfort in the pharma names is that they've not fallen, at least some of them have not fallen as much as the market. So for example, something like a Divi's is consolidating within a broad band, 5,500 on the downside to about 6,000 on the upside. Dr. Reddy's, if you see, some of these stocks are actually holding ground. So there is relative strength, so to speak. But the pocket that we continue to like, in the healthcare space and not pharma in particular, is something that I've spoken of, over the last 15 days, which is the hospitals. Now look at something like a Narayana Hrudayalaya. Spikes, you've got volatility, but overall, if you see the trajectory, it's been pointing higher. So if you want to play the healthcare space, I think the hospital space is something to go by. So Narayana Hrudayalaya continues to be on our radar from a long perspective.
Okay, Narayana Healthcare.
You are
keep it simple. Yeah. But let's talk about the PSU banking pack, okay? Because this is a pack that has been under pressure in the recent past, and if we can pull up the index constituents, all 12 of them are in the red currently. The index as a whole is down over 1%, and there you go, right? Everything from a Bank of India down 1% or so, all the way up to an IOB, which is down about 2.2%. I'm just wondering, Soni, at what level do you see any chance of getting in, or is this a situation of falling knife?
I think certainly seems like a falling knife, and I don't think I would be the one to try to catch it either. There's no data point which is suggesting any sort of a contra buy at current levels, and regardless of how optimistic we would like to feel, there's just nothing that I can comment right now to say that it could be a buy. I think just wait it out. There's some heavyweights also in the entire banking space which are indicating at fresh shorts or a breakdown happening. So that can drag the overall index again towards the 48,000 support. Now, if that level were to break for Bank Nifty, I think all the entire sector will continue to take the beating. So I think it's just, it's wise to wait and watch for a while and not try to catch that falling knife.
The market is responding to Jeffrey's note, I must say. Mahindra & Mahindra is 0.5% in the green. Let's wait and watch. Interestingly, even Maruti is. Remember, autos were pummeled out of shape in the last week on these concerns, and now some notes coming out there that it's okay. And the other one which is also looking okay is pharma, again a sector that really got damaged. Everything which got hit because of tariff or Trump concerns is holding out today. Dr. Reddy's, Sun Pharma, Maruti Suzuki, Cipla, Mahindra & Mahindra. Think about it. And of course then the defensive bent for an ITC or a Nestle or a Tata Consumer, which is kind of looking okay. But this is only the Nifty. The broader markets and the small cap 250 is now down 2%, and it's not looking very pretty out there. Final thoughts. Now, Kush Bora, you gave us some ideas back then. It's been 30 minutes since open. Some of the stocks have reacted. Levels have changed. Is there anything that pops up on the screen? Maybe as a short idea, maybe as a contra long.
No, I'd continue to go with delivery on the short side, but I do maintain, my long trade on global health. The stop loss could be revised lower because of the volatility, but other than that, the stock did rather well to recover from the lows. But again, because the market is persisting, the stock gave up. I think delivery on the short side continue. I think we discussed this for targets of 216 and very close to that first target. If someone wants to initiate, then for a second target of 265, lower your stop losses now to the closing price of Friday, but continue, with your shorts on delivery.
Okay. It's the textures improved just a tad bit for the Nifty 50 from what Neeraj saw at the start, with only 2 stocks in the green. Right now you have 12. But on the downside, if you can pull up the contribution currently on the points to the Nifty 50, you will notice that HDFC Bank is contributing a bulk on the downside, as much as 44 points, because the stock is down about 1.5%. Sony, HDFC Bank, how would you play it? Would you stay far away, or at some point would you say that you would buy?
Alex, coincidentally, when I was looking at the charts of HDFC Bank, and as scary as it looks, it is breaking below its 200 exponential moving average. It has also given an option chain breakdown, and that breakdown has come below 1690. So usually if it's able to close below the 1680 mark, there's a possibility that positionally it can test towards 1640 to 1620, which brings about another 3 to 4% of a correction or a downside. And that would again drag Bank Nifty index also as a whole. So I think right now it's looking a bit weak. 1680 is the resistance. Were it to close below it, one can look for downside support levels towards 1640, and below that would be 1620.
So, diametrically opposite view, perhaps in the studio, Kush Bora is seeing some reasons why you should consider buying HDFC Bank, going long. Why?
I think today's a day when Sony and I don't really meet on the views.
Don't see eye to eye.
Don't see eye to eye.
It's because you're not sitting in studio together. Sony, that means that you have to join us the next time Kush is here.
Absolutely.
Well, no, just on the HDFC Bank, my reasoning for buying it from a positional standpoint, 6-12 months, is because the bank does not sustain below the 200-day moving average for long. In the last year and a half, it's only been below the 200-day moving average for 8 to 10 odd sessions, late January, and then has rebounded from there. So this dip, from a technical standpoint, it might look like, of course, there is weakness, but this might not sustain is the point. So if you've got, a slightly medium-term horizon, then this might turn out to be a good buying opportunity on HDFC Bank.
Okay. Well, on that note, and on a weak note rather, but maybe hope for some improvement. The last time that India beat Pakistan in a one-day international, the Nifty bottomed out 2 weeks after that. Yeah, this was October 2023, and October 27th was when the Nifty bottomed out. The victory happened on October 13th or 14th. I think the Bulls will be hoping for that. It just happened on 23rd.
Grab whatever straw you can, right?
Exactly. Whatever can help. But Sony, Kush, thank you so much for joining in, both of you. Really appreciate your time and look forward to more conversations. Well, but on that note, it's time to get in a big fund of voice to try and understand, one, a sense of the Q3 review, and two, whether the markets would pay heed to that maybe a little bit of quarter-on-quarter or sequential improvement, or is it still looking tough? Venkatesh Balasubramanian, he's the MD and co-head of research at JM Financial Institutional Equities, joins us right now on the show. Venkatesh, good having you. Thanks so much for waiting by. I will just finishing some of the daily conversations. Now, before I get to Q3, Venkatesh, just the argument that people are making around the valuations at which we are trading at, and whether we should trade at average valuations, or at average valuations, do we get a chance to buy? Or because the Nifty is not showing growth, why should the Nifty be at average? It should be below average valuation. So why at 18 times? Why can't the Nifty trade at 17 times or 16 times fundamentally? What is your argument there?
Okay. So what we believe is, at this point in time, the broader market is trading 1 year forward at close to almost 19 times based on our numbers. If you see the historical long-term averages, average PE multiples for the Nifty 50 have been closer to 17 times. We are still maybe 10% away from there. Given how the economy is, how earnings growth is, see, the economy is okay. We are seeing a lot of positives coming through. One is obviously government capex has once again started picking up for the last couple of months. We are also seeing that reservoir levels in India at the start of the year were very good, which basically means that rural consumption this year should be decent. The income tax cuts in the budget imply that urban consumption will also be good. Other than that, the fact that we personally believe that the EPS cut cycle, or at least for large caps, has already ended in the second quarter. Our numbers suggest that third quarter numbers have actually been ahead of expectations. The ask rate for the fourth quarter is quite weak. So we don't expect any more earnings cuts. We personally believe at this point in time, the market can very well trade at around those 17 or 17 and a half times 1 year forward, which is maybe another 5% or 7% down from current levels. So at our own expectation is worst come worst, you could see another 5 to 7% correction on the broader index.
That's interesting, and I think, Venkatesh, a lot of people will take heart from that. But the thing is, if we look at that correction at the index level, you're talking about quite a considerable amount of pain at individual stock level, right? And you've seen that play out already in the correction we've witnessed so far. In your opinion, based on the stocks that you track closely, have a few of these names gotten beaten down more than you think is appropriate? And from that perspective, are there any that you think that people should pay attention to?
Yeah, of course. When it comes to large caps, clearly, again, before I talk to you about individual stocks, as you approach this year is not about making money. It is to make sure that you don't lose money this year. So the key message, first message is stick to large caps, be very wary of small caps and mid caps. So that is the key message here. There are certain stocks where valuations levels are very, very reasonable in large caps. Just to give you one name, Maruti is very reasonable. Reliance Industries looks reasonable. ITC looks reasonable. Larsen and Toubro looks reasonable. Bharti looks reasonable. So we have quite a few names. So it's not like one or two names. There are quite a few names where valuations looks very, very reasonable. And we personally believe that people could gradually start building positions in these names. I would still be very wary of small caps and mid caps. The re-rating in small cap and mid cap, if I can remember it correctly, started from July 2020 and valuations went completely berserk. Even after this recent correction, small caps and mid caps are trading more than one standard deviation above the mean. So I don't think the correction in small caps and mid caps is over.
Okay. So you mentioned a few names on the large cap space, but there's one, at least from my perspective, glaring omission, particularly because it is dropped over 10% at least, right? And 14% as of Friday in 10 sessions. I'm talking about Mahindra and Mahindra. Post that, do you see any interesting value in that stock?
So we really like, after Maruti, our next best pick on the auto side is actually Mahindra and Mahindra. Maybe valuations had run up a little bit. And if you pull up long-term PE band charts, you will see it may be slightly on the expensive side. But I think post this corrections, valuations have become reasonable. So we would be very, very constructive on Mahindra and Mahindra.
Okay. What about, and I'm only asking because, and obviously your views are not as short term as what's happening in the market today, but asking because this is one of the sectors that is getting beaten down at the start of the week. IT as a pack is down over 2% as we speak to you, Venkatesh. And there's so much that is a question mark around the US growth story and all of that from the perspective of these IT companies that have revenue exposure there. How do you play that space?
So specifically on IT, we believe we really like a couple of companies there. One is obviously TCS, and the other company which we really like there would be KPIT. So these are two companies which we are very, very constructive about for the current year. Now, you did mention about the dichotomy between short term and long term, which is something which you brought up. See, in January, FI selling has been unrelenting. So if you pull up the charts for January, out of 22 out of 23 days, we have seen FII selling, and FIIs have sold around $8.4 billion. The selling has continued in the month of February so far. It's another, say, $3.5 billion of selling. I think there was a little bit of excitement in the second half of last week, I think. But I think on that particular day when FIIs bought, it was basically buying the Bharti block. So I am not sure whether the FII selling has ended. So while the economy is doing well, while your earnings are kind of rebounding from the trough, there are still a few technical factors which are actually negative over the short term. And that makes us very, very wary about the short term. One is obviously the FII selling. I believe you people would have also noticed the fact that in the month of January, SIP inflows have been a little bit on a month-on-month has been slightly negative. You would have also noticed the fact that new SIP additions, net SIP additions, which is basically new accounts added minus the accounts closed, are actually negative in the month of January. This is the first time this has happened in the last 12 months. The correction has continued in February. We will not be surprised if again the net additions are negative. And now why is that happening? Over the last 12 months, SIP returns across mid caps, small caps, and large caps have turned negative. So we are a little worried about these technical factors playing out. While economy has started kind of looking up, earnings growth has bottomed out, and now it will start looking up. But there are these technical factors which worry us a lot about the short term. But over an year or 2 years time frame, we believe that India and the Indian stock markets is in very good shape.
Okay. Now, Venkatesh, so let's assume that the worries are well regarded. I was trying to understand where is it that you find the confluence of decent reportage and commentary in Q3? No major worries about order inflows if it's that kind of a business over the course of the next couple of quarters at the very least, and maybe valuations looking reasonable. Is there a confluence of all of these three factors currently in the market?
Yeah, I actually gave you a couple of names, basically Larsen & Toubro and BHEL. But if you are basically talking about the entire capital goods universe, see, third quarter numbers were quite good. It was not that it was bad. I think capital goods, we saw almost like 40% kind of growth. The problem in capital goods as a sector, if you look beyond an L&T or a BHEL, valuations are absurd.
Venkatesh, sorry to cut you, but the skeptic would argue that how is it that one can argue for the valuations of BHEL being quote unquote reasonable?
Okay, see, BHEL is coming out of a trough. Okay, you had a 10-year trough where you've hardly had any order inflows. Thermal capex had come to a standstill. Now the whole thing is kind of rebounding. So you've seen massive order inflows over the last 2 years. You need to remember that power is a long cycle play. It is not a short cycle play. So once the capex cycle starts here, it is not like it is going to stop in like 2 to 3 years. It will definitely continue for 4 to 5 years. So when it comes to BHEL, the numbers are only started rebounding now. Order inflows have started coming. It usually takes you 3 years to execute a power plant. So as the execution kind of picks up, you will start seeing better revenues, which will bring in operating leverage, which will lead to margins improving. And if you actually look at numbers, maybe on say 26 or 27, valuations are very, very reasonable vis-a-vis the historical numbers.
Okay. So you are saying on FY27 earnings, BHEL trades at what, sub 30 times or thereabouts?
Maybe? Yeah, most definitely.
Most definitely. Okay. The other question, and we were just talking to somebody else, Venkatesh, on the power sector, since we are now kind of breaching that some of the targets that are set are very stiff, but the execution on the ground, the PPAs being signed, etc., aren't quite happening. So the conversation was about the wind sector, wind power sector, and therefore whether the generational companies or the equipment suppliers, have they seen a bit of a near-term top, considering that I mean, apparently I was told that one of the CEOs in a con call said that they do not expect that the wind sector will see more than 5 gigawatts of addition in any given year in the future as well. How are you thinking about the wind sector, both the players and the equipment suppliers?
Okay, so you need to clearly distinguish between the IPPs and there is the equipment suppliers. It is possible that when it comes to equipment suppliers, there is a short-term peak which is forming. So stocks could kind of stagnate or consolidate here. It will be very difficult for them to kind of, continuously keep going up. Because what happens when it comes to equipment supplies, people basically trade it on order backlogs and order inflows. If order inflows are kind of, even if they are flattish on a YOY basis, the stock actually stops going up. Maybe the upsides on the equipment supplier is less, but there are quite a few, renewable IPPs which I've listed where there is significant capacity growth and EPS growth expected over the next 4 to 5 years. We would definitely look at some of those names.
Interesting. Venkatesh, a quick view on this one. It's a development on the regulatory front in the BFSI space with regard to foreclosure of loans. Now, we've already seen quite a few regulatory moves in that space, and that's had a bearing on lending growth as well. Some of the aggression that some of these lenders were displaying has gotten tempered somewhat because of those risk weights being increased, etc. But now, if you're doing away with foreclosure, would the interpretation be that shopping for loans from the customer's perspective becomes easier and pricing of loans has to be that much sharper, as a result of which you could see some more depression in net interest margins, which have already been trending lower?
See, I haven't had a look at this. I need to have a look at it and then get back to you on this particular question.
Okay, so then let me ask a broader based question, which is based on the trends that you've seen and not accounting for today or this latest update. Are you expecting there to be a little bit of pressure on the downside, considering that deposit growth is not coming through as strongly as you would hope? Lending growth, to a certain extent, getting tempered in the pockets that I just spoke about, and in the microfinance space, asset quality in particular, right? And agri as well. So, where do you see strength and where do you see sustained weakness continuing in the NBFC space?
Yeah, I personally believe on the deposit growth side, things could kind of start rebounding. Because as you know, over the last, 3 to 4 years, a lot of household savings was going into the stock market. Now, the incremental savings could continue going into the smart stock market, but maybe the portion that people are apportioning towards deposits might actually go up. Now, that should be beneficial for banks as a whole. I think that was one of the bigger complaints that a lot of banks had over the last 2 to 3 years, that everything is going into the markets and we are finding it very difficult to increase our deposit growth. So I think that could kind of reverse, or at least even if it doesn't reverse, that decline could kind of get arrested, and I think deposit growth could start going up again. We still remain on the NBFC side. We are still very, very positive on a few names. We really like Bajaj Finance. We like Bajaj Finance in the current year. The reason being that, the RBI rate cut cycle has already started. And we believe actually Bajaj Finance could actually do much better than some of the banks on the Nifty this year. We also like housing finance names. Microfinance, the pain, maybe there are a couple of quarters more of pain there.
Very cool. Venkatesh, good talking to you. On your note, thank you so much for sharing your views as well. Appreciate your time.
Thanks for having me on the show.
That's the view from JM Financial. Now, just before we get to the next corporate in focus, and that is KIMS really, because Krishna Institute of Medical Sciences, they have taken over operations of UA IMS Hospital, and we'll get to that conversation in a moment. Just put the spotlight on Airtel, Bharti Airtel. Company will increase stake in Airtel Africa. Now, it's a curious transaction, and the reason why it's curious is because Rucha will tell us that. Rucha, good morning.
Yes, so Bharti Airtel is set to increase its stake in Airtel Africa, which is its subsidiary. Now, this is interesting because Bharti already has around 57.3% stake in Airtel Africa, and it plans to acquire an additional 5% stake in the company. Now, talking about the 5% stake, which will happen at the current market price, which implies a cash outflow of about 2,500 crore rupees. Now, the only reason that Bharti did Airtel Africa IPO in June 2019 was to, remove its stake and reduce the intensity. But the whole question here is that by increasing its stake to 5%, this will imply more of cash outflow and investment in Airtel Africa. Now, talking about the dividend policy, which is critical over here. Now, dividend policy is critical for visibility on capital allocation, number one, and also for its investors. And this is what the analysts on the street also say. And analysts also say that this is the key for holding and re-rating valuation for Bharti Airtel as well. But we are still waiting to know what is the intention of Bharti Airtel to increase its stake in Airtel Africa, because mind you that Airtel Africa's market capitalization is about 5.1 billion GBP, which is around 55,000 crore, and this additional 5% stake will increase Bharti Airtel's stake in Africa subsidiary to above 60%.
Okay. Rucha, thanks for that. Now, that's the word on Airtel, and maybe a bit negative. No dividend policy, not having of non-core. Interesting. Anyways, Krishna Institute of Medical Sciences, as I said, has taken over the operations of one hospital, Sangli. Similar agreement with Splendid Hospitals post this as well. And therefore, the question is, how is the growth within that bucket looking like? Dr. Bhaskar Rao, Chairman and Managing Director of KIMS Hospitals, joins us right now on the show. Dr. Rao, good morning, sir, and thank you so much for taking the time out. Are you following the string of pearls strategy, wherein one is growth happening organically, two, you will keep on biting into smaller assets or assets every now and then in order to show inorganic growth as well?
See, good morning. What is happening today? Now we are having almost 3-4 hospitals are coming up in this financial year, and we don't have the bandwidth of financial leverage to use if there are any opportunities that are coming. And apart from that, any inorganic things to take it to coincide with our habit and then the culture of the people, the governance and everything. Instead of losing those opportunities, we are taking about an opportunity and O&M contract. And next 2 to 3 years, once our financials are getting better and we'll be able to understand the growth of that particular company, how we can able to improve that. At that time, we have a call option of buying out from 60% to 80% of the stake, or maybe 100%. That is the understanding which we are able to looking at it. It's a call option. There is no compulsory. It all depends upon how we can able to turn around the existing facility.
Interesting. Now, I'm not comparing the two sectors, sir, but hotel companies have been doing this very effectively, wherein instead of putting in capital behind an asset, they are entering into agreement wherein the O&M is of the brand and the land and the project belongs to an owner. I haven't heard this before, and which is why I'm curious. Is this something that hospitals like yours could actually do a lot more effectively, wherein you will manage the O&M, not put in the capital behind the capex and ownership of the asset? And is that a more margin accretive option?
So the entire process is that initially we were thinking about an opportunity comes, how we need to hold it on that and assess. See, basically, whenever you're running inorganic hospitals are there we need to be able to look into the governance, how it is going, and the financials, and there is a potential to scale up. And by adding our thing, they are not able to get the right talent for them. That's why they are approaching us. Once we have an opportunity to improve that financials and the potential that there is there in that region, if we can able to assess properly next 2 to 3 years, and anyhow we are entering into, apart from the O&M, like unlike the hotels, we are also putting a call option that we should be able to buy out the asset with a certain multiples which we mutually agreed at that time. That is the reason. So it looks like a great opportunity for us, where we understand that area. We also see how the consultants we can able to improve and putting the right people for the right talent. With all those things, I think this is a better model. But anyhow, we are seeing now, if it is going to be yields in next 1 or 2 years, we will be able to how to ramp up and turn out, and then we can able to assess. By doing, we are not losing anything, but by not doing, I think we may lose the opportunities that we are coming across.
Fair call. Oh, so you are effectively saying, sir, this is not a strategy that necessarily will last. Right now, it is opportunistic, and you are taking advantage of the same, if you will.
Correct.
Okay. Okay. Sir, a word on
that is good. If that is going to be proved to be better for the organization, maybe we can also, one of the strategy we can able to follow moving forward in the next few years.
Got it, sir. Okay. How about results? Because I mean, and what is your feeling about the next 12 months? Because when I look at your trailing 12 months numbers on almost all counts except for maybe margins, you've done very well on the growth front. Do you expect the template to continue, 20, 22%, 25% kind of growth to continue? But will that also continue at the similar margins, about 26 odd %, or do you hope to improve upon that?
See, basically what is happening now, another 3 hospitals we are starting, 2 in Bangalore, 1 in Thane in the next 1 or 2 quarters. During that time, the revenue may be coming, the bottom line may not come for 2-3 quarters because of the loss funding and all those things. With that, the revenue keep improving, and then ultimately when it comes to maturity or after the break-even point, definitely we are confident that we can able to overcome that same margins what we are able to make, even better than what we are doing, because these are the 3 important hospitals are in a high ARPOB area.
Okay. But I'm just trying to understand, sir, as you look forth to FY26, and I'm not looking for a specific guidance, but I mean, my curiosity was that do you reckon a 20 odd % or slightly higher than that growth is possible? What's your view there?
See, what we are telling in the quite from 18 to 20% growth is there. We will targeting to achieve that growth. I'm very confident that we can able to achieve that growth.
Point well noted. Okay. One last question, sir, before we wrap up. Any other O&M kind of a contract that is on the annual that you may have done or is going to come up? Are you in more conversations? Because I did hear you say that you will explore and figure out whether this becomes a permanent strategy or no. But because you've done one, is there something else that is on the annual?
Yeah, we already done about 3 hospitals, 1 in UMS in Sangli, another 2 are in Guntur. Guntur one is already started about 2 months back operations. 1 more is yet to start in the next couple of months. And maybe 1 in Splendid we are done in Hyderabad.
Yeah, Splendid. And I
believe as of now for this financial year. And next year we will see if there is anything, how this is going to be turned around in the next 3-4 quarters. We'll come to know what our thinking has been materialized or not.
Okay. Dr. Rao, appreciate you taking the time out and speaking to us. Thank you so much, and all the best for the quarters ahead, sir.
Thank you. Thank you very much.
Right. That's Kim's. Well, takes over the UAIMS hospital in Sangli, similar agreement as he said as well, to Splendid hospitals, which will possibly happen. So 3 or 4 of such O&M contracts that they have done. Do we need to take a break? Because we should do that in a moment. Just want to mark that the market is now trading arguably the lowest point of the day, comfortably below 22,600. So that is a problem. We need to slip into a quick break. Back with more.
very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी. हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है क्या?
Moments from now, you'll have Quality Power electrical equipments listing. The issue price was 401 to 425, and finally the total subscription was about 1.19 times. Gone are the days when you saw 50 to 100 times being the norm. This market sell-off has brought down the excitement in the primary markets too, and naturally so. Nothing otherwise anticipated. Let's see how Quality Power is listing. Can we just have the stock price up, please, very quickly, of Quality Power, and see what the listing price is like? Just about flat, 427 for now, holding out. Remember, it provides high voltage electrical equipment and solutions for electrical grid connectivity and energy transition. Well, that's with regards to the IPO. Quick market check before we get in a couple of other stories as well. In moments from now, we'll also probably try and cut to PM Modi speaking at the MP Investment Summit. IT is the pain point. Nifty IT is down 2.23%, and I want to see the gainers and losers in that index. I'm sure there are hardly any gainers, if at all, largely losers, all of them losing out. LT Tech, which climbed up on the Macquarie note a couple of days ago, is down 5.5. Persistent is down 4. Emphasis down about 2.5. HCL Tech, Wipro, LTI, Mindtree, it's across the board. And the top 8 names have lost over 1.5% apiece, but the kind of cuts that have come into the ones which have been doing well recently, LTTS, Persistent, etc., is very, very large. So, you know, and I remember on Persistent Systems, a note had come from JP Morgan that these are the levels from where they would want to buy into Persistent, because it's a quality franchise that has corrected. The market is not having any of it. 2.2% lower for Nifty IT, and clearly counting. Okay, more news and updates. The Nifty 50 rejig and the impact on valuations, more importantly, because something that we were talking about in the morning too. Anushi Johnson to talk about this. Anushi, good morning. And one, of course, I'm sure most of our viewers would know, but for the few who might not, tell us about the rejig and what's the impact on valuations.
Hey, morning, Neeraj. So first I'll start about the exclusions and the inclusions as a part of the NSE reject, which is going to be effective from March 28 onwards. So firstly, in the exclusions, we have Bharat Petroleum Corporation. And now this has a market cap of around 1.1 lakh crore, and Britannia Industries with one market cap of 1.16 lakh crore, which are going to be excluded from the Nifty 50 index. While on the inclusion side, we have something like a Geo Financial Services with a market cap of 1.48 lakh crore, and Zomato, the market cap of 2.21 lakh crore. Now, do note that this reject happens when the 6-month average free float market cap is at least 1.5 times of the smallest constituents. In this case, what we're looking at is BPCL and Britannia. And as mentioned, adjustments will be taking effect from March 28 onwards. Now, the crucial point here to understand is what is the impact going to be on the Nifty 50 valuations going forward. Now, if we consider the trailing PE of these Nifty 50 exclusions which are taking place, BPCL and Britannia both have a comparatively lower PE multiple as to the inclusions which are going to be there. Now, if you look at BPCL, the trading PE multiple is 8 times, which is in line with the energy sector, which is there, while Britannia has a trading PE multiple of 57 times. Now, this compared with a trading PE of something like a Geo Financial Services, which commands a PE multiple of 96 times. Along with Zomato, with over a 320 times of a PE multiple, there is going to be an impact on the overall Nifty 50 as we speak. So the trailing old PE, this is according to the ICICI note now, that stood at about 22.1 times, which will now be revised around 22.6 times. So we are looking at around a 2.5% of a premium. Do note that in the past few inclusions that we are seeing, this not only include the current inclusions, which is Zomato and Geo Financial Services, something like a Trent and even BL, if we see, they also command over a higher PE. Now, Trent had over 109x of over 100 times PE multiple. So we are looking after 2018 and after the new age inclusions which are taking place, they command a higher PE multiple as what the exclusions have been. Now, what is going to be the expected flow picture on this NSE reject that we are looking at? BPCL and Britannia would see outflows around 201 and $250 million respectively, while Geo Financial Services and Zomato will see inflows of $320 million and $631 million respectively. So this is the overall picture building up. PE multiple after the September peaks that we have seen has already been on a correction mode. This is because of the market fall which is taking place. But with these new inclusions, now with the higher PE now coming back to picture, the question would be, is there correction? Is there more correction on the card? So this is something that we should be watching out for.
Got it. Okay. Anushi, thanks so much for that. And, just the lowdown on what happens. It's very interesting. Sometime in the afternoon today, we'll try and talk about the kind of, with a guest about the valuation impact on the Nifty multiples as well. Remember, there's not very heavy weightage on the index for these stocks for now, I would reckon. But let's wait and watch. Okay, on to the big brokerage call of the day, and that has to be the Citi note, which have maintained the buy rating on Interglobe Aviation and have hiked the target price to 5,200 rupees from 5,100. Puneet Johnson with more on the report, and the reason why I'm doing this again on the show is because it's a very interesting note in which, Puneet, I believe they have made some mention of Mahakumbh as well.
Well, definitely, Neeraj. As you rightly said, target price hiked to 5,200 rupees per share, and they've opened a 90-day positive catalyst on Indigo. And the Citi note has mentioned that they're seeing an overall pickup in air traffic demand, and that augurs well for the market leader specifically. They're also seeing Indigo's strong market share to be maintained and actually grow going forward as well. Now, there are two other key points that they're making in this very interesting report. The first one is, of course, that they're expecting an improvement in passenger load factor going forward in Q4 itself, which was generally a seasonally weak quarter. So it's a positive for the listed pair. The other aspect is that part of the increase is, of course, because of the overall demand that could be attributed to the Mahakumbh, as you rightly mentioned. They're expecting that the higher demand will itself manifest in earnings in Q4 of FY25, and that will eventually lead to better yields as well in this particular quarter. So overall, it's a positive note coming out on Interglobe Aviation at a time where they're getting into, the planes have been delayed, but overall, the Mahakumbh effectively is working effectively to say a Maha share price as well.
Okay. And interestingly, the stock is in the green. So that is the one interesting piece. Now, the viewers, the only thing is where I can't get my head around is whether this will hold true for the others as well. I mean, Air India is not listed, we know, but SpiceJet is. And can there be some optimism around SpiceJet too for this? Because for them too, after all that has happened, could Q3 have some positives because of this? Well, 2% higher for SpiceJet to win the session today. Be mindful of this. The Interglobe far more stable in terms of numbers, load factors, market share. SpiceJet is a small market share player, but could there be a strong Q4 on the back of this? Because remember, in the City Note as well, they say that usually this is not a strong quarter. This time around, it could well be. And yes, courtesy Mahakumbh. And then we followed up with a fairly strong Q1 anyway, which was holiday season, IPL, and some more stuff. Nevertheless, let's move on to some other stocks in news. Federal Bank had reported a 5% decline in net profit at 555 crore in the third quarter. But in an analyst meet, the bank says that they aim to be amongst the top 5 or 6 players. I think they're currently number 7 or number 8, if I'm not wrong, across key metrics. Now, they've said a number of things. Let me get in Somit to try and highlight what all did Federal Bank say. And Somit, interesting, I mean, that they had a note where they sounded ambitious, but brokerages are not necessarily sounding very, very constructive.
Yes, it was an important analyst day for Federal Bank, given the fact that it was the first one that was done by the new MD and CEO, KVS Manian, and he has laid out a detailed strategy of how they plan to bring the bank to the top 5 private bank bracket by FY28. Now, the new CEO launched a 12-theme business strategy to increase the bank's return on asset. Now, Federal Bank is currently the 7th largest private bank by asset with a return on asset of around 1.2%, while the top 6 banks have a return on asset of around 1.4 to 2.2%, and this is where he wants to be the bank over the medium term. That is what the strategy is. Now, if you look at the biggest driver for return on asset as per KVS Manian will be enhancement that would take priority over others, and that will happen by an improvement in the current account ratio. Now, currently, if you look at they plan to increase their CASA to around 36% from 30%, and this increase of 6 percentage point that we will be seeing, most of it will be coming in from the current account, and that is what around 4% is what he's aiming to get that from increasing current account, and that is something that will that is something that will also aid the company's return on asset going forward. Now, apart from this, the bank is also aiming to grow its net interest income faster than credit growth, and is also seeing that he also believes that fees income could grow much faster compared to its net interest income going forward. Now, the bank will focus on improving the share of mid-yield assets from around 31% that is currently to 34%, and high-yield asset ratio could increase from 5% to 8%, and these factors will aid the bank's net interest income as per the new MD and CEO. And the other factors that would aid the fees income would be trade forex, cash management, and increase in cards. These are the 3 points, these are the 3 things which will aid the fees income, while the other factors will aid the net interest income as per the new MD. Now, the new MD also clearly mentioned that they do not expect any repricing of deposit to happen anytime soon, despite the fact that there has been a 25 basis points rate cut, and they're also saying that the competitive intensity continues to remain high in the market, and they're also expecting another rate cut to come in April 2025. But despite that, they're not expecting deposit to be repriced, and competitive intensity would remain higher, and because of this, the net interest income for short term could be under pressure as per him. Apart from that, he's also saying that the focus will be on improving the granular liability mix, which in turn will drive the net interest margin for the banks going forward. And given that they currently have a very comfortable capital ratio, they do not plan to have any fundraise anytime soon. And when it comes to expansion plan, he said that the bank aims to open nearly 400 to 450 branches till FY28, and this will be based on selective state level expansion. So it is not that they will only expand in the southern region, they might expand in other regions as well, but it will be selective as per the new MD, and around 400 to 450 branches is what the bank is planning to add till FY28.
Yeah, well, interesting takeaways, 1.5% higher for Federal. Somit, thanks for pointing all of these out. Important material from that analyst meet. Now, getting Mihika in to talk about the metal sector and why India needs safeguard duties on steel imports. Now, Mihika, one can always make a case either side. I'm trying to understand what is the case being made for these duties.
Yeah. So, steel counters were in focus last week because safeguard duties were expected, but nothing has been announced so far. Now, the latest news flow that came in was when Trump announced 25% tariffs on all steel imports on February 10th. Now, in terms of who got impacted, well, the countries that got directly impacted included Canada, Brazil, EU, Mexico, South Korea, and Japan. And directly, India did not get impacted because of our immaterial exports to the US, which was only 1% as of FY24. But now there's a talk about how the steel exports could be redirected to India. India has free trade agreements which could allow more imports from other Asian players, and it could be, according to ICRA, there's a potential redirection of 4 million tons per annum of steel exports from Japan and South Korea initially. If you look at India's steel import picture as a whole, China already accounts for 25%. Korea is at 20%, Japan is at 17%. Vietnam has also emerged as a player at 8%, and other countries aggregate to 28%. And in terms of India has already been facing pressure from imports, especially cheap steel imports from China and Vietnam since FY24, and more imports being redirected to India could bring down domestic steel prices and thereby hurt the industry's earnings in FY26 as per reports. Now, an update on the safeguard duties. Well, the investigation for anti-dumping on China and Vietnam exports to India was initiated in September 2024. As per different managements, safeguard duties of around up to 25% was expected in the first 2 weeks of February. But now, as of today, no announcements have been made. And this is very important for the sector. Anything above 5% would be positive for the Indian steel industry. The safeguard duties could bring domestic steel prices up, which thereby helps the company's margins as well as their capex investment as per Morgan Stanley. And a potential duty could allow companies to hike their prices by 2,000 to 2,500 rupees per ton as per Nuava research. Lastly, if you have to talk, if the safeguard duties do come in, whether it's 10% or 15%, which is what analysts have been expecting, there could be a bump up in the FY26 consolidated EBITDA estimates of various players. For example, Steel Authority of India, 40% hike in their FY26 estimates on account of a 15% duty. JSW Steel at 28%. Tata Steel at 22% jump to their consolidated EBITDA, and JSPL could see a 15% hike to their consolidated EBITDA if a 15% duty is announced.
Okay, Mihika, thanks a lot for that. So certainly keeping this in mind for sure. Now, just awaiting. Okay, I think we now have the management of Garden Reach Shipbuilders. I mean, this order win of 123 crores is really but an excuse to get into a conversation with Comrade P.R. Hari, retired the chairman and managing director of Garden Reach Shipbuilders. Sir, thanks so much for taking the time out and speaking to us. And I'll be honest, I mean, this is an excuse to get you in and try and understand about the larger picture, because a 123 crore order, I'm sure, doesn't move the needle. But can we just talk about it for a minute? I mean, is there some peculiarity around the order that you would want to reiterate?
Thank you, Neeraj. Yes, as you rightly said, 123 crores is just about 0.5 or 0.8% of our total order book. But what is interesting, I'll cover the broader perspective later, but what is interesting about this particular order is that for the refit, it's an export order for the refit of a ship that has been built by us for Mauritius. That ship is coming back to us for refit. But coming to the broader picture, current order book stands at 23,877 crores. And this comprises of 10 projects consisting of 40 platforms, including 17 warships for the Navy from 4 projects. These naval projects include very important and high-value projects like the P-17 Alpha project, where we are in a state of confidence, where we can state with confidence that the ship is will be delivered before the contractual time, and the ship is ready for sea trials, getting ready for sea trials. The other 3 projects are also on track. In the survey vessel large project, 4-ship project, 2 ships already delivered. The anti-submarine shell watercraft, 8-ship project, the first ship is currently at sea for her sea trials. So projects are moving in the right direction. What is also interesting is that just about a couple of years back, the contribution of exports in our total order book was just about 0.5%. And as on date, we are executing 8 ships, that is from 3 projects, export orders, and put together, they contribute nearly 4.5% of our order book. Also, we are executing 2 projects for the specialized research vessels. Actually, we are the only shipyard in the country today executing specialized research vessels, one for the Ministry of Earth Sciences and one for the DRDO. So this in a nutshell gives you the order book disposition. And I would also like to state that in this financial year, we will be concluding contracts for 2 more projects, one for 2 multipurpose vessels for a German client as a continuation of the project which we are already doing, and 2 more research vessels for the Geological Survey of India for coastal research vessels.
Okay. Now, and therefore that, I mean, not that there were any fears, but if there were fears, it allays any kind of fears because the book to bill looks very, very strong. So therefore, that is not an issue. Sir, the question that some people would have thought or asked or wondered of is that there has been a heady increase in defense spending and therefore defense orders, and therefore both your growth, book to bill ratio and the order inflow, all 3 have looked promising in the last 3 years. Can 1/3 of that argument, which is future order inflows, cool off relative to the past few years in the next 2 or 3 years?
Very interesting question, but no fear, since you said that could be an apprehension. What I would like to state is that if the collective order book of all the Indian shipyards today, the major shipyards is, to put a ballpark figure, maybe about 1,10,000 or 20,000 crores. What is on the anvil in the next two years? I mean, on a conservative estimate, conservative assessment, in the next, that is from now for the next 18 months, RFPs for nearly 210 platforms are expected. And the estimated value is around 1,70,000 crores. I'll just give you a glimpse of just 3 projects, high value projects in this. The next generation corvettes, which we are eagerly looking forward to, the project, the technical evaluation has been completed, and we expect the price bid to be opened a couple of months from now. And the order value is expected to be to the tune of nearly 40,000 crores.
Wow. Okay.
Split between, of course, 2 shipyards. The next project, high value project, is the P-17 Bravo project. The RFP is expected in the coming year, that means the FY 26. And the order value is expected to be around 70,000 crores, 70,000 crores, 7 ships. Another high value project is the mine countermeasure vessels, that is a MCME project, 12 ships, 32,000 crores. And a plethora of smaller platforms for both the Navy and the Coast Guard. So 210 ships on a conservative estimate, around 1,70,000 crores. And just to answer your question, coming to GRSE, there are total about 5 to 6 major shipyards in the country. So even again, I would like to go moderate, that is not too conservative, not too aggressive. The share in this pie of 1,70,000 is going to be substantial. I think that will give confidence to you as well as the viewers.
Fair call. Comrade sir, the question, okay, can I push you a little bit more to understand that if when you say substantial, would it be comfortably mid-teens? Would it be higher than that? Would it be lower than that? I don't want us to go back with a presumption of what you were trying to say.
Okay, I'll give you a clear indication. In our assessment, the order book by the end of next financial year, that means by FY 26 end, is expected to be the tune of around 40,000 crores.
Interesting. Okay. So, but even so, I'm just trying to, if you can, that is, that out of the total order inflow, whether it's, let's say whether it's 170, 150, maybe slightly more, who knows. But let's assume it is the number that you're talking about, ballpark. You would expect mid-teens at the very least coming to you, if you will? Mid-teens kind of order share? Would that be a fair assessment?
Yes. Okay. Mid-teens would be a right assessment.
Mid-teens would be a fair assessment. Again, viewers, remember, it could be slightly higher, slightly lower, depends. But as of now, the management believes that that's the kind of number that could come in, which actually is great. So then, pray tell us, sir, what's the nature of these kind of, how do I say, order wins coming in? Because there are 2 aspects to your future profitability, right? One is the nature of the orders coming in slightly high margin any which ways? Two, because you're doing this O&M, as you just mentioned, this 123 crore, I believe, is a bit of operation and maintenance as opposed to it being something else, right? Is O&M typically a higher margin work? And is the share of O&M in your business over the course of the next 5 years going to go much higher than what it would be right now?
Absolutely. Coming first to the shipbuilding orders, all these shipbuilding orders are likely to be on competitive basis, moderate. Now coming to exports as well as ship repairs, like the one which we have just received, there the margins are definitely much higher. So what we intend doing is to spice up our overall order book with export orders as well as what is there from the ship repair segment. Just to place things on record, ship repairs, we had not been fully aggressive on ship repairs just about 3 years before. After that, we took the initiative to set up a dedicated ship repair vertical, and the results are here to see. Our current revenue from ship repairs and the overall revenue is just about 2%. But what we intend doing, to answer your question, in the next 5 years, we intend increasing the share of ship repairs in our order book as well as from our revenue recognition, maybe threefold, that to put again a conservative estimate.
Okay. Interesting. I was just doing some back of the envelope calculation, sir. So one, I mean, if I do a basic math, and maybe I'm wrong here, but your trailing 12-month revenues are about 4,500 crores, right? You've done nearly 3,400 crores of revenues for the last 9 months or this year thus far. Even if I do 5,000 crores for FY25, ballpark, and it could be a few hundred crores here and there, but let's say 5,000 crores for FY25, and then I put in just the order book, expected order book that you mentioned that you will have at the end of FY26, you could be showing a growth of maybe 30% or a 25% CAGR growth very easily for the next 4 years at the very least, based on just a static order book. I'm just trying to understand, based on your vision of where you want GRSE to be over the next course or next 5 years, and the capacity constraints that you may have, what is the outlook like to your mind?
Okay, again, very sharp and intelligent or persuasive question.
Thank you.
Just to place on record, now shipbuilding, unlike any other industry, the gestation period is long.
Right.
For example, let us assume that we get a 25,000 crore order in the coming financial year. For the order to translate into revenue recognition, it will take 2 years, because the projects which we expect or what we anticipate are long lead time projects. And it is exactly at that period of time where our current order book will start depleting. So perhaps the right kind of progress can be expected, which means the current order book, all the projects are in a maturity level where the revenue recognition is actually happening as evident from our numbers. And we intend maintaining this tempo. Since you asked about a growth rate with respect to revenue, see, in FY22, let us just take 2 financial years. FY22, our revenue was 1754 crores. FY24, it was 3592 crores. That means almost 200% growth. But if you take a 5-year segment, our CAGR has been about 25%. From the current order book and what we expect, of course, there are expectations. All put together, we intend maintaining a nearly 25% CAGR over the next 5 years too.
And which is great.
And you had asked another question about capacity.
Yes.
This has been a focus area for us. See, we are actually 4 shipyards in Kolkata, 3 dedicated facilities for shipbuilding and 1 dedicated facility for ship repairs. Our shipbuilding capacity was 20 ships concurrent construction. During the last year, we ramped it up to 24 ships, and in the current year, with the modernization going on, we intend increasing it to 28 ships, and during 2026, we want to cross the figure of 30. We also have a very strong network of partner shipyards, both on the eastern seaboard as well as the western seaboard, where we do part construction based on their capacity, spare capacity. Having said this, with the kind of two aspects have steered us to a decision to go and explore the feasibility of setting up a greenfield shipyard either in the west coast or the east coast in one of the industrial shipbuilding clusters. The two aspects I mentioned, one, the exponentially growing demand for ships in the global scenario, and with most of the global nations, the European nations, looking at India as a destination. And the second is a slew of initiatives by the government, starting from the shipbuilding financial assistance, the taxation and customs duty incentives, and of course the Maritime Development Fund corpus that has been recently set up. All put together, we know our capacity is good, but we intend ramping it up in the coming years.
Got it. I'm squeezed for time, but I'm just if you can give me a 60-second answer, sir. This is lovely to know. Just one final question. Due to the geopolitics the way it is right now, do you sense more and more global orders coming your way over the course of the next 3 years?
Absolutely. You said it right. Considering the geopolitical scenario, global geopolitical scenario, the order expectations for us, all the Indian shipyards are going to be high in the coming years, in the next 3 years, 5 years, because this is a period where shipbuilding is back to focus. So now to the next 3 to 5 years, clear visibility is there. It is only the requirement is for us to ramp up our capacity to meet the expectations and requirements of the global customers.
Well, music to the ears, and lovely to see your confidence, sir. Thank you so much for taking the time out and speaking to us. Really appreciate it.
Thank you. Pleasure.
That's Garden Reach Shipbuilders and a very confident management, by the way. I hope you can go back and hear some of the numbers that he's spoken about. But for now, we need to cut across to the Madhya Pradesh Global Investor Summit, which is being held in Bhopal, of course, aims to attract investment in the state. Chief Minister Mr. Mohan Yadav is addressing the event.
विधायक देश और विदेश से बड़ी संख्या में पधारे इस निवेश के महाकुंभ के अवसर पर सभी माननीय उद्योगपतिगण, मैं आज के इस अवसर पर ग्लोबल इन्वेस्टर समिट 2025 में पधारे हुए सभी प्रमुख उद्योगपतियों, निवेश बंधुओं, यंग इन्वेस्टर और विभिन्न देशों के जनप्रतिनिधियों का स्वागत करता हूं, अभिनंदन करता हूं। हमारा सौभाग्य विश्व में सर्वाधिक लोकप्रिय और हम सबको गौरवान्वित करने वाले यशस्वी प्रधानमंत्री माननीय श्रीमान नरेंद्र मोदी जी की उपस्थिति में मध्य प्रदेश आज इस ऐतिहासिक आयोजन का साक्षी बनने जा रहा है। ये हम सबका सौभाग्य है। इसका महत्व और इस नाते से भी बढ़ जाता है, ये यशस्वी प्रधानमंत्री की उपस्थिति आज भोपाल में एक नया रिकॉर्ड भी बना रही है। आमतौर पर भोपाल शब्द को जैसे ही ग्लोबल या गूगल पे हम सर्च करें तो तुरंत भोपाल करते ही भोपाल गैस त्रासदी के माध्यम से एक अपनी अतीत की एक काली छाया को लेके हमेशा से अपने आप में यह कष्ट महसूस करता था। लेकिन आज माननीय यशस्वी प्रधानमंत्री की मौजूदगी के बाद अब भोपाल हमारी ग्लोबल रूप से एक अलग पहचान बनाने जा रहा है। मेरी अपनी ओर से बहुत बहुत बधाई, बहुत शुभकामना। ये आशीर्वाद आपको हमेशा हमारे लिए, भोपाल के लिए अब हमेशा अविस्मरणीय रहेगा। इस अवसर पर जब मैं अपने प्रदेश की बात करता हूं तो वन संपदा, खनिज संपदा, जैव संपदा, जल संपदा से भरपूर मध्य प्रदेश में आपका अभिनंदन है, आपका स्वागत है। देश के हृदय प्रदेश मध्य प्रदेश में भोपाल देश की स्वच्छतम राजधानियों में से एक, राजा भोज की इस नगरी में, झीलों की इस नगरी में पुनः आपका वंदन है, अभिनंदन है। यशस्वी प्रधानमंत्री श्रीमान नरेंद्र मोदी जी के नेतृत्व में और उनके मार्गदर्शन में मध्य प्रदेश सरकार सतत विकास और औद्योगिक निवेश की दिशा में लगातार अपनी निर्बाध गति से आगे बढ़ने के संकल्प को धारण करके गठन के साथ लगातार आगे बढ़ रही है। आज जब हो रही ग्लोबल इन्वेस्टर समिट तो इसकी थीम ही अपने आप में उत्साहवर्धक है। अनंत संभावनाएं जो मध्य प्रदेश में उद्योग और निवेश की असीम संभावनाओं को दर्शाती है। अनंत संभावनाएं केवल एक विचार नहीं बल्कि मध्य प्रदेश के प्रत्येक क्षेत्र में अवसरों की व्यापकता को दर्शाने वाला दृष्टिकोण है। आदरणीय प्रधानमंत्री जी ने सबका साथ, सबका विकास, सबका प्रयास, सबका विश्वास का मंत्र दिया है, जिसमें यह संदेश समाहित है, जब संभावनाओं के अनंत आकाश में हम सब मिलकर आशाओं की ज्योत जलाते हैं तो एक नहीं बल्कि सभी के आंगन रोशन होते हैं और यही हमारी सनातन संस्कृति की गौरवशाली विरासत भी है। माननीय प्रधानमंत्री जी के नेतृत्व में भारत को 2047 तक विकसित भारत बनाने का संकल्प भारतवासियों ने लिया है। हमारा लक्ष्य देश को $35 ट्रिलियन की अर्थव्यवस्था बनाना है। ऐसे में विकसित भारत के इस लक्ष्य को प्राप्त करने के लिए विकसित मध्य प्रदेश समस्त प्रदेशवासियों के साथ अपना महत्वपूर्ण योगदान करने के लिए प्रतिबद्ध है। इसी अनुक्रम में हमने आगामी 5 वर्ष में राज्य की अर्थव्यवस्था को दोगुना करने का लक्ष्य निश्चित किया है, जिसको आपके आशीर्वाद से लगातार हम गतिशील हैं। 1 वर्ष पूर्व निवेश और औद्योगिक विकास की इस यात्रा को रीजनल इंडस्ट्री कॉन्क्लेव के माध्यम से बाबा महाकाल की नगरी उज्जैन से प्रारंभ किया। यह पहली बार रीजनल इंडस्ट्री कॉन्क्लेव की शुरुआत हुई, जिसके अगले क्रम में जबलपुर, ग्वालियर, सागर, रीवा, शहडोल, नर्मदापुरम जैसे संभाग केंद्र तो थे, लेकिन रीजनल इंडस्ट्री कॉन्क्लेव पहली बार जब हुई तो वास्तव में ये एक अलग प्रकार का हमारे लिए उत्साह और उमंग का वातावरण बना। इसी क्रम में हमने इस रीजनल इंडस्ट्री कॉन्क्लेव को और सफल बनाने के लिए देश के अन्य राज्यों में, खासकर मुंबई, कोयम्बटूर, बेंगलोर, कोलकाता, पुणे, दिल्ली में इन्वेस्ट इन एमपी के अलग अलग प्रकार के रोड शो का आयोजन किए। न केवल देश में बल्कि देश के बाहर भी अंतर्राष्ट्रीय स्तर पर यूके, जर्मनी और जापान में भी मध्य प्रदेश की विकास गाथा को प्रस्तुत करते हुए आपके नेतृत्व में भारत के बढ़ते कदम से विश्व के लोगों को अवगत कराने का प्रयास किया, जिसका हमको प्रतिसाद बहुत अच्छे प्रकार से मिला है। इस यात्रा में मध्य प्रदेश सरकार देश विदेश के उद्योगपतियों से लगातार सतत संवाद करते हुए उनकी आवश्यकताओं एवं भविष्य की चुनौतियों को हमने समझने का प्रयास किया और निवेश को प्रोत्साहित करने के लिए एक रोडमैप तैयार किया। इसी परिप्रेक्ष्य में हम अपनी निवेश नीतियों और निवेश फ्रेंडली इकोसिस्टम पर लगातार कार्य कर रहे हैं, जिसके आधार पर निवेश प्रोत्साहन के लिए 18 नई नीतियां लेकर हम आए हैं, जिसका लोकार्पण आज माननीय प्रधानमंत्री जी के माध्यम से मध्य प्रदेश में पहली बार होने जा रहा है। इन नीतियों से हमारा प्रयास उद्योग जगत की आवश्यकताओं को प्रदेश के विकास के मार्ग से जोड़कर बढ़ना है। हमने कई नए क्षेत्रों को भी ध्यान में रखते हुए सरल, निवेश अनुकूल और प्रासंगिक नीतियों का निर्माण किया है। नीतियों का प्रभावी क्रियान्वयन, सरलीकृत व्यापार एवं बाधारहित व्यवसाय हमारी उच्च प्राथमिकता है। इसके लिए मध्य प्रदेश सरकार द्वारा जन विश्वास अधिनियम पारित किया गया है, जिसके उद्देश्य जटिल एवं अप्रासंगिक प्रावधानों को कम करना, सिंगल विंडो सिस्टम को बेहतर बनाना, शासन में पारदर्शिता लाना। मध्य प्रदेश निवेश के प्रयासों हेतु लगातार प्रयास कर रहा है। इसीलिए हमने वर्ष 2025 को उद्योग एवं रोजगार वर्ष मनाने का निर्णय लिया है। उद्योग एवं रोजगार को बढ़ावा देने के लिए ग्लोबल इन्वेस्टर समिट के बाद हम अलग अलग 6 विभागों में शहरी विकास विभाग, पर्यटन विभाग, खनिज, नवकरणीय ऊर्जा, सूचना प्रौद्योगिकी एवं एमएसएमई के अलग अलग प्रकार के समिट करने के भी योजना पे काम कर रहे हैं। किसी भी प्रदेश के औद्योगिक विकास के लिए 4 मूलभूत आवश्यकता होती है: भूमि, जल, बिजली और कुशल कार्यबल। बाबा महाकाल की कृपा से मध्य प्रदेश में सरप्लस बिजली है, भरपूर पानी है, विशाल लैंड बैंक है, कुशल मानव संसाधन है एवं यहाँ की कानून व्यवस्था भी अनुकूल है। इसके लिए इसके अतिरिक्त सर्वाधिक सरकार की प्रतिबद्धता, जो आपके आशीर्वाद से केंद्र सरकार और राज्य सरकार डबल इंजन की सरकार अपने सभी निवेशकों के लिए एक सरल, प्रभावी एवं त्वरित गति से चलने वाले वातावरण को उपलब्ध करा रही है। यही औद्योगिक विकास के लिए इकोसिस्टम का काम करेगा। सकल घरेलू उत्पाद जीएसडीपी में मध्य प्रदेश बड़े राज्यों की श्रेणी में सर्वाधिक तेज गति से बढ़ने वाले राज्य में अपने प्रमुख स्थान पर है। मध्य प्रदेश में भाजपा की सरकार ने अधोसंरचना के विकास के अभूतपूर्व उपलब्धियां हासिल की है। मेगा फुटवेयर क्लस्टर मुरैना, नवकरणीय ऊर्जा उपकरण निर्माण मोहासा बाबई, पीएम मित्र पार्क धार सहित कई बड़े प्रोजेक्टों पर लगातार हम आपके नेतृत्व में आगे बढ़ रहे हैं। विक्रम उद्योगपुरी उज्जैन में मेडिकल डिवाइस पार्क भारत सरकार के माध्यम से 900 एकड़ का पूरा हमारा डिवाइस पार्क, आज की स्थिति में हमको दोबारा इतनी लैंड एक्वायर करना पड़ रही है। यह आपकी दूरगामी नीतियों का परिणाम है कि मेडिकल डिवाइस पार्क में इतनी सफलता मिल रही है। इसी के साथ साथ 6 नए औद्योगिक विकास क्षेत्रों का भी हम नए प्रकार से संकल्प लेके आगे बढ़ रहे हैं। 13 नए औद्योगिक पार्क न केवल पूर्ण हो रहे हैं बल्कि 20 और औद्योगिक पार्कों की आधारशिला रखी जाएगी। मैं आने वाले समय में हमारे सेमीकंडक्टर पार्क, नवीन आईटी पार्क इत्यादि के माध्यम से हमारे यहाँ पर न केवल आकर्षक रोजगार बल्कि निवेश की भी बड़ी संभावनाओं के आधार पर आपके आशीर्वाद के साथ सरकार के कदम से कदम मिला के भारत सरकार के साथ चलने के लिए मध्य प्रदेश सरकार तत्पर है। प्रदेश में पर्यटन की भी अपार संभावना है। यहाँ बाबा महाकालेश्वर, ओंकारेश्वर न केवल ज्योतिर्लिंग धार्मिक पर्यटन को बढ़ावा दे रहे हैं बल्कि इससे जुड़े हुए ओरछा, दतिया, भोजपुर, भीमबेटका सहित ही हमारा वन्य जीव का भी इकोसिस्टम लगातार लोगों को पर्यटन में आकर्षित कर रहा है। पर्यटन की जब हम बात कर रहे हैं तो न केवल फॉरेस्ट बल्कि मेडिकल टूरिज्म में भी हमारी हेल्थ पॉलिसी के माध्यम से हम एक नई छलांग लगाने के लिए तैयार है, जिसके लिए हम अपनी सरकार के माध्यम से ये ध्येय वाक्य अतिथि देवो भव की इस भाव को चरितार्थ करेंगे। मुझे इस बात की प्रसन्नता है जब आप यहाँ विराजमान हैं तो न केवल हमारा विश्वास आत्मविश्वास को मजबूत कर रहा है बल्कि आने वाले समय में जैसा कि हम सबका संकल्प है, बड़े से बड़ा और छोटे से छोटा निवेशक भी हमारे लिए अतिथि है। सभी के लिए मध्य प्रदेश में अनंत संभावना है। इस अनंत संभावनाओं को विकास में फलीभूत करने के लिए मध्य प्रदेश सरकार अपनी प्रतिबद्धता आपके नेतृत्व में दोहराने के लिए तत्पर है। माननीय प्रधानमंत्री जी के ऐतिहासिक नेतृत्व में मध्य प्रदेश सहित पूरा देश आर्थिक प्रगति के नए युग में प्रवेश कर रहा है। बड़ा उद्योगपति हो या छोटा व्यापारी, किसान हो या युवा, महिला हो या गरीब, सभी के लिए आदरणीय प्रधानमंत्री जी का विकास आधारित दृष्टिकोण समृद्धि के नए रास्ते खोल रहा है। मध्य प्रदेश सरकार ने गरीब, युवा, अन्नदाता एवं महिलाओं को केंद्र में रखते हुए 4 मिशन आरंभ किए हैं। इनके अंतर्गत नीतियों के प्रभावी क्रियान्वयन के लिए विभिन्न विभागों के मध्य समन्वय स्थापित करते हुए आउटकम केंद्रित लक्ष्यों पर भी कार्य किया जा रहा है। आदरणीय प्रधानमंत्री जी के मध्य प्रदेश के विकास को आशीर्वाद के आधार पर अग्रसर करते हुए मुझे इस बात की प्रसन्नता है, एक तरफ जब नर्मदा से हम मालवा, निमाड़ और इत्यादि क्षेत्र को सरसब्ज कर रहे हैं, वहीं यशस्वी प्रधानमंत्री ने विश्व के पहले नदी जोड़ो अभियान केन बेतवा लिंक परियोजना और पार्वती कालेसिन चंबल लिंक योजना के माध्यम से मध्य प्रदेश और पास के राज्यों को अलग से आशीर्वाद देकर के एक नई दिशा दिखाई है, जिसमें मध्य प्रदेश में 41 लाख आबादी को पेयजल की सुविधा मिलेगी, 9 लाख हेक्टेयर से ज्यादा क्षेत्र सिंचाई की उपलब्धता हासिल करेगा, साथ ही औद्योगिक क्षेत्र को भी जल की सुविधा उपलब्ध होगी। मध्य प्रदेश बिजली के क्षेत्र में भी सरप्लस स्टेट है। रीवा और ओंकारेश्वर के सौर ऊर्जा संयंत्र देश को रिन्यूएबल एनर्जी की नई दिशा दिखा रहे हैं। औद्योगिक इंडस्ट्रियल कॉरिडोर, उद्योग संरचना, शहरी विकास, हवाई सेवा, शिक्षा, चिकित्सा, नेशनल हाईवे, पर्यटन, पर्यावरण, कृषि सहित सभी क्षेत्रों में अत्याधुनिक तकनीक और गुणवत्ता के साथ प्रगति हमने सुनिश्चित की है। यशस्वी प्रधानमंत्री के नेतृत्व में मध्य प्रदेश को विकसित और औद्योगिक मध्य प्रदेश बनाने की यात्रा प्रारंभ हो चुकी है। विचारों से योजना के साकार होने तक, कृषि से सेमीकंडक्टर तक, निर्माण से लेकर निर्यात तक, आईटी से लेकर फिल्म टूरिज्म तक मध्य प्रदेश एक बेहतर भविष्य को आकार दे रहा है। मध्य प्रदेश ने अपनी भौगोलिक स्थिति, संसाधनों और अधोसंरचना के माध्यम से निवेश अनुकूल वातावरण निर्मित किया है, जो देश की प्रगति में भूमिका निभाने के लिए अपनी अग्रणी भूमिका निभाने के लिए तत्पर है। हमारे मध्य प्रदेश की विशेषता में यह है कि एक बार जो यहाँ आता यहीं का आकर रह जाता है। हमारा मध्य प्रदेश ऐसा परिवार है, आप मध्य प्रदेश आए और मध्य प्रदेश के विकसित करने के संकल्प में सहभागी बने, इसी अपेक्षा के साथ मैं यहाँ हृदय से सभी पधारे हुए सज्जनों का आभार मानता हूं। मैं पुनः यशस्वी प्रधानमंत्री श्रीमान नरेंद्र मोदी जी का आभार मानता हूं, जिनके नेतृत्व में मध्य प्रदेश पुनः एक नई उड़ान लेने के लिए आगे तत्पर है। मेरी अपनी ओर से एक बार फिर सबका वंदन, अभिनंदन, बहुत बहुत धन्यवाद। भारत माता की जय।
बहुत बहुत धन्यवाद माननीय मुख्यमंत्री जी, मध्य प्रदेश के समग्र और सतत विकास की तरफ आपके दृष्टिकोण को साझा करने के लिए। देवी सज्जनों, मध्य प्रदेश जैसे कि आप जानते हैं हमेशा से अपनी समृद्ध सांस्कृतिक विरासत, अपने ऐतिहासिक और आध्यात्मिक वैभव, अपने प्राकृतिक सौंदर्य के लिए जाना जाता रहा है। पर आज मध्य प्रदेश एक फ्यूचर रेडी स्टेट भी है, जो अपनी हरित ऊर्जा के लिए, नवाचार के लिए, अपने आईटी, ऑटो, एग्री, फार्मा हब होने के लिए, अपने स्मार्ट सिटी, स्मार्ट हाईवेज के लिए भी जाना जाता है। और इन दोनों का सुंदर समागम, हेरिटेज का और प्रोग्रेस का, विरासत का और विकास का। और इसके
All right, the latest from the Global Investor Meet in Madhya Pradesh, beaming live from Bhopal. You heard the Chief Minister of Madhya Pradesh talk about various aspects of his state's efforts to bolster growth there. Let's talk about the markets though and where they stand right now. And you've had a rough start to the trading week, currently trading with cuts of about 1%, very close to the low point of the day, if not at the low point of the day for the Nifty 50. The support really is something that has shifted quite dramatically over the course of the last few trading sessions, and 22,500 is now what you need to watch out for on the downside. Very clearly broken past that range of resistance or rather support that you saw earlier on in last week. The broader markets are seeing bigger drops, and you have more than 1% for the mid-cap index. You have cuts of more than 1% for the small cap index, and all told you have the market breadth very firmly tilted in favor of the declines. And a few sectors stand out here where the cuts are very, very sharp, and particularly the IT space is standing out as the big loser in trade today. The only pocket of strength is pharma. But let's delve a little deeper into the IT pack. If we can pull up the contributors, just take a look at some of the movers there. You see L&T Tech, of course, losing the most, down over 5% at this point. But everything from an HCL Tech to an Infosys also losing ground. When you're talking about the contributors on the Nifty 50, of course, you have a few names that stand out on the downside. And among them, you have the heavyweight financial names that are under a little bit of pressure today. Reliance Industries also contributing to the downside. HDFC Bank currently contributing as much as 44 points to the downside for the Nifty 50's 36 point move at this point. Not too much to speak of in terms of the gainers, and in fact there are only 10 of them currently on the Nifty 50. Among them you have Mahindra & Mahindra, which is making a tad bit of a comeback, up about 0.6%. Remember, this is a stock that has been beaten down over the last few sessions, down over 12% or 13% or so over the last 10 sessions or so. We will turn back to Ask Profit in just a short while. We've got Saurabh Jain, who is Equity Head Research at SMC Global Securities, and Brijesh Ail, Retail Research Head at IDBI Cap, joining us this morning. Gentlemen, thanks so much for joining in. We'll come to you in just a bit. I understand we have to take a very quick break. We'll be back on the other side to take all of your questions. So do stay tuned.
Very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with.
Welcome back. You're watching Ask Profit. This is where we answer all of your stock-related questions, and to that end, you can send them to us on the WhatsApp number that is on the top of the screen, or you can call us on the number that is at the bottom of the screen. Joining us in this half hour is Saurabh Jain, who was with us in the last half hour, as well as Ajit Mishra, who's the Senior Vice President Research at Religare Broking. Gentlemen, welcome. Actually, Ajit, welcome and good morning to you. Revati is calling us from Chennai. Is the first question this side of the break. Revati, good morning. How can we help you today?
Yeah, good morning.
Please go ahead.
I have 50 shares of M Cloud.
Okay.
Bought at an average price of 79 rupees. This is for a long-term view. I want to know whether I can add more.
So you're talking about McLeod Russell?
Magellan.
Okay, I'm not able to understand the stock that you're talking about. Revati, can you help me with the full name of the stock?
1 second. MAGE. I don't know the spelling. 1 second.
At what level did you buy it at?
79 rupees.
Oh, so you're talking about Magellanic?
Yeah.
Magellanic Cloud, which
Yeah.
is not the stock that we thought that you were talking about. We thought you were talking about McLeod Russell. You're talking about Magellanic Cloud, which is a 3,800 crore market capitalization company. It is something that was originally incorporated with ROC Kolkata in 1981 in the name of South India Projects Limited. It is in the IT services space. So you bought at levels of 70 something, you said, 79. And you have you bought it for the short term or the long term?
No, this is not the one.
Okay, then, okay. So maybe we can call you back, Revati. You can find out what the stock is and then we'll help you answer your question. But do keep the stock name ready so that we can figure that out. All right, in the meanwhile, let's turn to the next question. We've got a question from Chandru, who's writing in from Salem in Tamil Nadu, and he has bought 2,000 shares in Ward Wizard Innovations. If we can pull that stock up and talk about it. It's Ward Wizard Innovation. He's bought at levels of 61. The stock is currently at 28. Ajit, what can you say about this, if at all you can give some advice?
So Alex, this stock I've never heard before, and I guess it's not listed on NSE as well. So I can't comment. I don't have this data available readily with me right now.
By any chance, Saurabh, do you have any view on this?
No, Alex.
Okay, unfortunate. Viewers, this is, you're throwing googlies at me this morning. I must point out that I like straight and flat batting wickets, particularly when the market is itself throwing bouncers and googlies consistently. So please have some mercy on me. Tejas Networks is the name of the counter that we're talking about next, and Supraja is bought at levels of 1,227. Quick view, because I understand that the Prime Minister is going to speak soon. Ajit, any view on this one?
So Tejas, Alex, we've seen a very sharp decline of late, especially in the last 2 months. Earlier, the trend was clearly positive, but it has now turned negative. And though due to the oversold position, we may see some bounce or respite. So he should stay put with 700 being the closing stop loss for existing position, and utilize any recovery towards 900 to reduce a bit.
All right, so that is the view on Tejas Network. International Gemological Institute. This is a relatively new listing, and we've got Himanshu from Jaipur that is bought at an average price of 521. He's looking for a view and whether or not to buy at the current level. Saurabh, this is a company that operates on both traditional diamonds as well as on lab-grown diamonds. What would you say about the fundamentals? Would you buy in for the long term?
I think fundamentals are quite good, and it is a relatively new listing. So we should wait for, I think, 1 or 2 quarters how the things shape up. While the company is quite optimistic about the growing business in the man-made diamonds, and they are expecting that the revenue share would gradually increase. And particularly, I feel, in my opinion, I think what I heard is that going forward, there are 2 more companies located outside India which would be merged with this company and will enhance revenue and profitability. So in my sense, it is a good company. I would recommend a hold.
Okay, so it's a hold. Sun Pharmaceuticals, and in fact, if anything, the only pocket of strength, relatively speaking, today is the pharma pack. It is trading with gains of about 1/3% in a market that is looking pretty weak at this point. And we've got Vijay from Coimbatore, who's bought at levels of 1,764, 90 shares, and he's wondering whether to keep adding if it drops 10% from the current market price. Saurabh, I mean, of course, we don't know if that's going to happen, but would you suggest adding at the current level, or would you wait to add more?
See, if things stands at what there are, then it's a kind of a portfolio stock, and one can add on a decline of say about 10%. But when tariffs picture will come into the picture, I think if US moves ahead with some kind of a tariffs on the Indian pharmaceutical company, then you may find these companies' stock prices may correct more.
Okay. All right. So that's certainly something to watch. But by the way, you've had functionaries from key pharmaceutical companies, including Wockhardt, that have told NDTV Profit that these tariffs are unlikely to have any meaningful impact, because the prices would basically, the tariff increases would be passed on to the consumer there, and it's not very easy to shift the production of generics. That's the perspective that we got from Mr. Habil Khurakiwala. I believe we've got a next caller from Pune. Chandrasekhar is calling us. How can we help you, Chandrasekhar?
Hi, good morning, gentlemen.
Good morning.
Good morning. So I'm asking for that. I hold NBCC. I purchased the NBCC at the price of 99.50.
Okay.
Okay, and now it's down. So my question is, shall I hold for some time or exit from that?
Okay, so you bought 1,000 shares. What was the time horizon that you had in mind, Chandrasekhar?
1 to 2 months.
1 to 2 months. All right, very quick view on NBCC, Ajit?
So Alex, we have had volatile swings in the stock in the last 1.5 months, and now we are currently trading closer to the lower band of this range. So in this 80 to 100 range is something that stock has been hovering in. So I would recommend Chandrasekhar to continue with his position with a closing stop loss at 75, because he has already seen a decent damage on his initial investment. First hurdle could be close to around 88, wherein we have short-term averages placed on the weekly chart. And once we cross that area, then probably around the buying zone. So near-term look sideways to negative. So
started speaking. I'm going to have to interrupt. The Prime Minister started speaking at the Madhya Pradesh Global Investor Summit. Let's listen in.
श्री मोहन यादव जी, अन्य सभी महानुभाव, देवी और सज्जनों, सबसे पहले तो मुझे यहां आने में विलंब हुआ, इसके लिए आप सबकी क्षमा चाहता हूं। विलंब इसलिए हुआ क्योंकि कल जब मैं यहां पहुंचा तो एक बात ध्यान में आई कि आज 10वीं और 12वीं के छात्रों की एग्जाम है और उसका समय और मेरा राजभवन से निकलने का समय क्लैश हो रहा था और उसके कारण संभावना थी कि सिक्योरिटी के कारण अगर रास्ते बंद हो जाए तो बच्चों को एग्जाम देने के लिए जाने में कठिनाई हो जाए और ये कठिनाई न हो, बच्चे सब एक बार अपने एग्जामिनेशन सेंटर पर पहुंच जाए, उसके बाद ही मैं राजभवन से निकलूं, ऐसा मैंने सोचा। उसके कारण मैंने निकलने में ही 15-20 मिनट लेट कर दिया और उसके कारण आप लोगों को जो असुविधा हुई, इसके लिए मैं फिर से एक बार क्षमा मांगता हूं। साथियों, राजा भोज की इस पावन नगरी में आप सभी का स्वागत करना मेरे लिए गर्व की बात है। यहां इंडस्ट्री से विभिन्न सेक्टर्स के अनेक साथी आए हुए हैं। विकसित मध्य प्रदेश से विकसित भारत की यात्रा में आज का ये कार्यक्रम बहुत ही अहम है। इस भव्य आयोजन के लिए मैं मोहन जी और उनकी पूरी टीम को बहुत बहुत बधाई देता हूं। साथियों, भारत के इतिहास में ऐसा अवसर पहली बार आया है जब पूरी दुनिया भारत के लिए इतनी ऑप्टिमिस्टिक है। पूरी दुनिया में चाहे सामान्य जन हो, अर्थनीति के एक्सपर्ट्स हो, विभिन्न देश हो या फिर इंस्टीट्यूशंस, सभी को भारत से बहुत आशाएं हैं। पिछले कुछ हफ्तों में जो कमेंट्स आए हैं वो भारत में हर इन्वेस्टर का उत्साह बढ़ाने वाले हैं। कुछ दिन पहले ही वर्ल्ड बैंक ने कहा है भारत आने वाले सालों में ऐसे ही दुनिया की फास्टेस्ट ग्रोइंग इकोनॉमी बना रहेगा। ओईसीडी के एक अहम रिप्रेजेंटेटिव का कहना है, फ्यूचर ऑफ द वर्ल्ड इज इन इंडिया। कुछ ही दिन पहले क्लाइमेट चेंज पर यूएन की एक संस्था ने भारत को सोलर पावर की सुपर पावर कहा था। इस संस्था ने ये भी कहा कि जहां कई देश सिर्फ बातें करते हैं, वहीं भारत नतीजे ला करके दिखाता है। हाल ही में एक रिपोर्ट आई है इसमें बताया गया है कि ग्लोबल एरोस्पेस फर्म्स के लिए कैसे भारत एक बेहतरीन सप्लाई चेन के रूप में उभर रहा है। ग्लोबल सप्लाई चेन चैलेंजेस का जवाब वो भारत में देख रहे हैं। मैं ऐसे कई एग्जाम्पल यहां कोट कर सकता हूं जो भारत पर दुनिया के कॉन्फिडेंस को दर्शाते हैं। ये कॉन्फिडेंस भारत के हर राज्य का भी कॉन्फिडेंस बढ़ा रहा है और आज ये हम मध्य प्रदेश की इस ग्लोबल समिट में भी देख रहे हैं, महसूस कर रहे हैं। साथियों, मध्य प्रदेश पॉपुलेशन के हिसाब से भारत का 5th लार्जेस्ट स्टेट है। एमपी एग्रीकल्चर के मामले में भारत के टॉप के राज्यों में है। मिनरल्स के हिसाब से भी एमपी देश के टॉप 5 राज्यों में है। एमपी को जीवनदायिनी मां नर्मदा का आशीर्वाद भी प्राप्त है। एमपी में हर वो संभावना है, हर वो पोटेंशियल है जो एमपी को जीडीपी के हिसाब से भी देश के टॉप 5 राज्यों में ला सकता है। साथियों, बीते 2 दशकों में मध्य प्रदेश ने ट्रांसफॉर्मेशंस का नया दौर देखा है। एक समय था जब यहां बिजली, पानी की बहुत सारी दिक्कतें थी। लॉ एंड ऑर्डर की स्थिति तो और भी खराब थी। ऐसे हालत में यहां इंडस्ट्री का विकास बहुत मुश्किल था। बीते 2 दशक में, 20 साल में मध्य प्रदेश के लोगों के सपोर्ट से यहां की बीजेपी सरकार ने गवर्नेंस पर फोकस किया। 2 दशक पहले तक लोग एमपी में निवेश करने से डरते थे। आज एमपी इन्वेस्टमेंट के लिए देश के राज्यों से सब राज्यों में टॉप के राज्यों में उसने अपना स्थान बना लिया है। जिस एमपी में कभी खराब सड़कों के कारण बसें तक प्रॉपर नहीं चल पाती थी, वो आज भारत की ईवी रिवॉल्यूशन के लीडिंग स्टेट्स में से एक है। जनवरी 2025 तक करीब 2 लाख इलेक्ट्रिक व्हीकल एमपी में रजिस्टर हुए हैं। ये करीब 90% ग्रोथ है। ये दिखाता है कि एमपी आज मैन्युफैक्चरिंग के नए सेक्टर्स के लिए भी एक शानदार डेस्टिनेशन बनता जा रहा है। और मैं मोहन जी को बधाई देता हूं, उनकी टीम को बधाई देता हूं कि उन्होंने इस वर्ष को उद्योग और रोजगार वर्ष के रूप में मनाना तय किया है। साथियों, बीते दशक में भारत ने इंफ्रास्ट्रक्चर के बूम का दौर देखा है। मैं कह सकता हूं इसका बहुत बड़ा फायदा एमपी को मिला है। दिल्ली मुंबई एक्सप्रेसवे जो देश के 2 बड़े शहरों को जोड़ रहा है, उसका बड़ा हिस्सा एमपी से ही होकर गुजरता है। यानी एक तरफ एमपी को मुंबई के पोर्ट्स के लिए तेज कनेक्टिविटी मिल रहे हैं, दूसरी तरफ नॉर्थ इंडिया के मार्केट्स को भी ये कनेक्ट कर रहा है। आज मध्य प्रदेश में 5 लाख किलोमीटर से अधिक का रोड नेटवर्क है। एमपी के इंडस्ट्रियल कॉरिडोर्स मॉडर्न एक्सप्रेसवे से जुड़ रहे हैं। यानी एमपी में लॉजिस्टिक्स से जुड़े सेक्टर की तेज ग्रोथ तय है। साथियों, एयर कनेक्टिविटी की बात करें तो यहां ग्वालियर और जबलपुर एयरपोर्ट्स के टर्मिनल्स को भी एक्सपांड किया गया है। और हम यहीं नहीं रुके हैं। एमपी का जो एक बड़ा रेल नेटवर्क है, उसको भी मॉडर्नाइज किया जा रहा है। एमपी में रेल नेटवर्क का 100% इलेक्ट्रिफिकेशन किया जा चुका है। भोपाल के रानी कमलापति रेलवे स्टेशन की तस्वीरें आज भी सबका मन मोह लेती हैं। इसी तर्ज पर एमपी के 80 रेलवे स्टेशनों को अमृत भारत स्टेशन स्कीम के तहत मॉडर्न बनाया जा रहा है। साथियों, बीता दशक भारत के लिए एनर्जी सेक्टर की अनप्रेसिडेंटेड ग्रोथ का रहा है। खासतौर पर ग्रीन एनर्जी को लेकर भारत ने वो कर दिखाया है जिसकी कल्पना तक मुश्किल थी। बीते 10 वर्षों में करीब $70 बिलियन यानी 5 ट्रिलियन रुपये से अधिक रिन्यूएबल एनर्जी सेक्टर में ही इन्वेस्ट हुआ है। इससे पिछले साल ही क्लीन एनर्जी स्पेस में 10 लाख से अधिक जॉब बनी है। एनर्जी सेक्टर के इस बूम का भी एमपी को बहुत लाभ मिला है। आज एमपी पावर सरप्लस है। यहां करीब 31,000 मेगावाट पावर जनरेशन कैपेसिटी है, जिसमें से 30% क्लीन एनर्जी है। रीवा सोलर पार्क देश के सबसे बड़े पार्क में से एक है। अभी कुछ दिन पहले ही ओमकारेश्वर में फ्लोटिंग सोलर प्लांट भी शुरू हुआ है। सरकार द्वारा बिनाय रिफाइनरी पेट्रोकेमिकल कॉम्प्लेक्स पर करीब 50,000 करोड़ रुपए का इन्वेस्टमेंट किया गया है। ये मध्य प्रदेश को पेट्रोकेमिकल्स का हब बनाने में मदद करेगा। मध्य प्रदेश का जो इंफ्रास्ट्रक्चर है, इसको एमपी सरकार आधुनिक पॉलिसीज और स्पेशल इंडस्ट्रियल इंफ्रास्ट्रक्चर से सपोर्ट कर रही है। एमपी में 300 से ज्यादा इंडस्ट्रियल जोन्स हैं, पीथमपुर, रतलाम और देवास में हजारों एकड़ के इन्वेस्टमेंट जोन्स भी डेवलप किए जा रहे हैं। यानी आप सभी इन्वेस्टर्स के लिए यहां बेहतर रिटर्न की अपार संभावनाएं हैं। साथियों, हम सभी जानते हैं कि औद्योगिक विकास के लिए वाटर सिक्योरिटी होना कितना जरूरी है। इसके लिए एक तरफ वाटर कंजर्वेशन पर बल दे रहे हैं, दूसरी तरफ हम रिवर इंटरलिंकिंग का मेगा मिशन लेकर भी आगे बढ़ रहे हैं। मध्य प्रदेश की खेती, यहां की इंडस्ट्री इसकी बहुत बड़ी बेनिफिशियरी है। हाल में ही 45,000 करोड़ रुपए के केन बेतवा रिवर इंटरलिंकिंग प्रोजेक्ट पर काम शुरू हुआ है। इससे करीब 10 लाख हेक्टेयर एग्रीकल्चरल लैंड की प्रोडक्टिविटी बढ़ेगी। इससे एमपी में वाटर मैनेजमेंट को भी नई ताकत मिलेगी। ऐसी सुविधाओं से फूड प्रोसेसिंग, एग्रो इंडस्ट्री और टेक्सटाइल सेक्टर में बहुत बड़ा पोटेंशियल अनलॉक होगा। साथियों, एमपी में डबल इंजन सरकार बनने के बाद विकास की गति भी जैसे डबल हो गई है। केंद्र सरकार कंधे से कंधा मिलाकर एमपी के विकास में, देश के विकास में जुटी है। चुनाव के समय मैंने कहा था कि अपने तीसरे टर्म में हम 3 गुना तेजी से काम करेंगे। ये स्पीड हम साल 2025 के पहले 50 दिनों में भी देख रहे हैं। इसी महीने हमारा बजट आया है। इस बजट में भारत की ग्रोथ के हर कैटालिस्ट को हमने एनर्जाइज किया है। हमारा मिडिल क्लास सबसे बड़ा टैक्स पेयर भी है। ये सर्विस और मैन्युफैक्चरिंग के लिए डिमांड भी क्रिएट करता है। इस बजट में मिडिल क्लास को एम्पावर करने के लिए अनेक कदम उठाए गए हैं। हमने 12 लाख रुपए तक की इनकम को टैक्स फ्री किया है। टैक्स स्लैब्स को रिस्ट्रक्चर किया है। बजट के बाद आरबीआई ने भी ब्याज दरें घटाई हैं। साथियों, बजट में लोकल सप्लाई चेन के निर्माण पर बल दिया गया है ताकि मैन्युफैक्चरिंग में हम पूरी तरह से आत्मनिर्भर हो सकें। एक समय था जब एमएसएमईज के सामर्थ्य को पहले की सरकारों ने सीमित करके रखा था। इसके कारण भारत में लोकल सप्लाई चेन उस लेवल पर विकसित नहीं हो पाई। आज हम प्रायोरिटी के आधार पर एमएसएमई लेड लोकल सप्लाई चेन का निर्माण कर रहे हैं। इसके लिए एमएसएमई की डेफिनेशन को और सुधारा गया है। एमएसएमईज को क्रेडिट लिंक इंसेंटिव दिए जा रहे हैं। एक्सेस टू क्रेडिट आसान बनाया जा रहा है, वैल्यू एडिशन और एक्सपोर्ट के लिए भी सपोर्ट बढ़ाया जा गया है। साथियों, बीते एक दशक से नेशनल लेवल पर हम एक के बाद एक बड़े रिफॉर्म्स को गति दे रहे हैं। अब स्टेट और लोकल लेवल पर भी रिफॉर्म्स को एनकरेज किया जा रहा है। मैं आपके बीच स्टेट डीरेगुलेशन कमीशन की चर्चा जरूर करना चाहता हूं, जिसके विषय में बजट में बात हुई है। हम राज्यों के साथ निरंतर बातचीत कर रहे हैं। राज्यों के साथ मिलकर बीते वर्षों में हमने 40,000 से ज्यादा कंप्लायंसेस को कम किया है। बीते सालों में ऐसे 1500 कानूनों को खत्म किया गया है जो अपना महत्व खो चुके थे। हमारा मकसद यही है कि ऐसे रेगुलेशंस की पहचान हो जो ईज ऑफ डूइंग बिजनेस के रास्ते में रोड़ा है। डीरेगुलेशन कमीशन राज्यों में इन्वेस्टमेंट फ्रेंडली रेगुलेटरी इकोसिस्टम बनाने में मदद करेगा। साथियों, बजट में ही हमने बेसिक कस्टम ड्यूटी स्ट्रक्चर को भी सिंप्लीफाई किया है। इंडस्ट्री के लिए जरूरी कई इनपुट्स पर रेट्स कम किए हैं। कस्टम केसेस की असेसमेंट के लिए भी एक टाइम लिमिट तय की जा रही है। इसके अलावा नए सेक्टर्स को प्राइवेट एंटरप्रेन्योरशिप के लिए इन्वेस्टमेंट के लिए खोलने का दौर भी जारी है। इस वर्ष हमने न्यूक्लियर एनर्जी, बायो मैन्युफैक्चरिंग, क्रिटिकल मिनरल्स की प्रोसेसिंग, लिथियम बैटरी की मैन्युफैक्चरिंग, ऐसे अनेक नए एवेन्यूज इन्वेस्टमेंट के लिए ओपन किए गए हैं। ये सरकार के इंटेंट और कमिटमेंट को दिखाता है। साथियों, भारत के विकसित भविष्य में 3 सेक्टर्स की बहुत बड़ी भूमिका रहने वाली है। ये तीनों सेक्टर्स करोड़ों नई जॉब क्रिएट करने वाले हैं। ये सेक्टर्स हैं टेक्सटाइल, टूरिज्म और टेक्नोलॉजी। आप टेक्सटाइल के सेक्टर को ही देखें तो भारत कॉटन, सिल्क, पॉलिएस्टर और विस्कोस का दूसरा सबसे बड़ा प्रोड्यूसर है। भारत का टेक्सटाइल सेक्टर करोड़ों लोगों को रोजगार देता है। भारत के पास टेक्सटाइल से जुड़ी एक पूरी ट्रेडिशन भी है, स्किल भी है और एंटरप्रेन्योरशिप भी है। और मध्य प्रदेश तो एक प्रकार से भारत की कॉटन कैपिटल है। भारत की करीब 25% ऑर्गेनिक कॉटन सप्लाई मध्य प्रदेश से ही होती है। मध्य प्रदेश मलबरी सिल्क, इसका भी देश का सबसे बड़ा प्रोड्यूसर है। यहां की चंदेरी और माहेश्वरी साड़ियां बहुत पसंद की जाती हैं। इन्हें जीआई टैग दिया जा चुका है। इस सेक्टर में आपका इन्वेस्टमेंट यहां के टेक्सटाइल को ग्लोबली अपनी छाप छोड़ने में बहुत मदद करेगा। साथियों, भारत ट्रेडिशनल टेक्सटाइल के अलावा नए एवेन्यूज भी खोज रहा है। एग्रो टेक्सटाइल, मेडिकल टेक्सटाइल और जियो टेक्सटाइल, ऐसे टेक्निकल टेक्सटाइल को हम बढ़ावा दे रहे हैं। इसके लिए नेशनल मिशन शुरू किया गया है। इसे बजट में भी हमने प्रोत्साहन दिया है। आप सभी सरकार की पीएम मित्र स्कीम से भी परिचित है। देश में टेक्सटाइल सेक्टर के लिए ही 7 बड़े टेक्सटाइल पार्क बनाए जा रहे हैं। इनमें से एक मध्य प्रदेश में भी बन रहा है। ये टेक्सटाइल सेक्टर की ग्रोथ को नई बुलंदी देने वाला है। मेरा आग्रह है कि आप टेक्सटाइल सेक्टर के लिए घोषित पीएलआई स्कीम का भी जरूर फायदा उठाएं। साथियों, टेक्सटाइल की तरह ही भारत अपने टूरिज्म सेक्टर में भी नए आयाम जोड़ रहा है। कभी एमपी टूरिज्म का एक कैंपेन होता था, एमपी अजब भी है, सबसे गजब भी है। जहां एमपी में नर्मदा जी के आसपास के स्थानों का, आदिवासी क्षेत्रों में टूरिज्म इंफ्रास्ट्रक्चर का बहुत अधिक विकास हुआ है। यहां कितने ही सारे नेशनल पार्क्स हैं। यहां हेल्थ एंड वेलनेस से जुड़े टूरिज्म के लिए भी अपार संभावनाएं हैं। हील इन इंडिया, इसका मंत्र दुनिया को पसंद आ रहा है। हेल्थ एंड वेलनेस के क्षेत्र में भी इन्वेस्टमेंट के लिए अपॉर्चुनिटीज लगातार बढ़ रही है। इसलिए हमारी सरकार इसमें पब्लिक प्राइवेट पार्टनरशिप को एनकरेज कर रही है। भारत की ट्रेडिशनल ट्रीटमेंट को, आयुष को भी बहुत बड़े लेवल पर प्रमोट किया जा रहा है। हम स्पेशल आयुष वीजा भी दे रहे हैं। इन सभी से एमपी को भी बहुत फायदा मिलने वाला है। वैसा साथियों, आप यहां आए हैं तो उज्जैन में महाकाल महालोक देखने जरूर जाएं। आपको महाकाल का आशीर्वाद भी मिलेगा और देश टूरिज्म और हॉस्पिटैलिटी सेक्टर को कैसे एक्सपांड कर रहा है, इसका अनुभव भी मिलेगा। साथियों, मैंने लाल किले से कहा है, यही समय है, सही समय है। आपके लिए एमपी में इन्वेस्टमेंट करने और इन्वेस्टमेंट बढ़ाने का भी यही सही समय है। एक बार फिर आप सभी को बहुत बहुत शुभकामनाएं, बहुत बहुत धन्यवाद।
बहुत बहुत धन्यवाद माननीय प्रधानमंत्री जी, आपके प्रेरणादायक संदेश के लिए, हमारे निवेशकों के लिए, हमारे विकास को दिशा देने के लिए, मध्य प्रदेश के लिए विशेष आशीर्वाद के लिए। आपके नेतृत्व दृष्टिकोण ने न केवल भारत को बल्कि हमारे मध्य प्रदेश के उज्जवल भविष्य की नई दिशा निर्धारित की है। देवी सज्जनों, एक बार जोरदार तालियों के साथ अपने
Well, that was the Prime Minister, Mr. Narendra Modi, addressing and inaugurating the Global Investors Summit 2025 from Bhopal. But, you know, at the same summit, let's hear out Gautam Adani. He's tracing the investment plans for Madhya Pradesh. Do listen in.
Honorable Prime Minister, Shri Narendra Bhai Modi ji, Honorable Chief Minister, Dr. Mohan Yadav ji, distinguished guests and friends. It is a privilege to attend the Global Investor Summit 2025 here in Bhopal and to address this incredible audience. It is also an honor to speak before both the Honorable Prime Minister and the Honorable Chief Minister on this momentous day. Honorable Prime Minister, under your visionary leadership, India has been reshaped forever. You have transformed our country from a nation that once followed global trends to one that now defines them. Your initiatives like Make in India, Digital India, and Atmanirbhar Bharat have propelled our economy into an era of self-reliance and innovation. Never before has India's confidence been higher, and never has our nation commanded greater respect on the global stage. When a country believes in itself, the world too believes in it. And Honorable Prime Minister, this resurgence of belief has been driven by our relentless efforts. Honorable Chief Minister, your administration's focus on an ease of doing business and an infrastructure development has made Madhya Pradesh one of India's most investment-ready state. The projected GSDP of over rupees 15 lakhs crore in FY25 is a testament to our pro-business vision and a commitment to growth. Leadership is not just about building roads and bridges. It is about paving the way for endless possibilities. And you are creating this for Madhya Pradesh. Now, as Madhya Pradesh takes this leap forward, the Adani Group is proud to stand beside you. We have already invested more than rupees 50,000 crore across energy, infrastructure, manufacturing, logistics, and agribusiness, creating over 25,000 jobs. But our journey here is far from over. Today, I'm proud to announce a new investment of over rupees 1,10,000 crore in the areas of a pump storage, cement, mining, smart meters, and a thermal energy. This multi-sectoral investment will create more than 1,20,000 jobs in Madhya Pradesh by 2030. Besides these investments, I am pleased to state that we are in further discussion with the state government for a greenfield smart city an airport project and a coal gasification project that would involve an additional investment of rupees 1 lakh crore. Honorable Prime Minister, Honorable Chief Minister, these are not just investments. These are milestones in a shared journey, a journey that will make Madhya Pradesh a national leader in our industrial and economic growth. They reflect our deep confidence in your leaderships and our unwavering commitment to the state's extraordinary rise. We stand ready to support your vision of a stronger, more prosperous Madhya Pradesh. Thank you. Jai Hind.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RR।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome to Profit Buzzers. I'm Anushya Kharia and with me is Rucha Smani. In this 1 hour segment, we'll be walking across a lot of themes and sector-specific action along with some stocks which are buzzing. But before we do that, let's go have a quick look across how the markets are faring in terms of where the Nifty 50 is headed right now. We are looking at a sea of red across the markets. We are looking at cuts of around 1% in trade today. Nifty Bank seeing cuts of around 0.82%. Now, this is the overall weak global cues also. Just to note that on Friday that US markets had clocked in one of their worst sessions of 2025, seen cuts of about 1 to 2% in the three indices that were there. But coming back to the domestic markets in terms of where the Nifty 50 is, let's pull out the point contribution table, which are the stocks which is leading to this track that we are looking at. Infosys, HDFC Bank, ICICI Bank, the top trackers in trade today. In fact, the Nifty IT index, we'll talk more about that. It's seeing a bit of point pressure. M&M ITC, Dr. Reddy's, however, bucking up the trend. Dr. Reddy's seeing about 2.4 points in the positive zone. But in terms of where the Nifty 50 is headed, we are looking at the levels of around 22,668, somewhere around those range currently, and it is majorly a choppy moves that we are looking at across the benchmark indices. Now, coming to the top losers and gainers of the Nifty 50, if we look at the top three names in the top losers, we are looking at HCL Tech, Infosys, TCS, all the three IT names standing up. In fact, Nifty IT is down more than 2% in trade today. Now, again, a lot of this is with whatever the economic data points that has come in the US, which points to heightened inflation concerns, along with now how there would be rate cut expectations. Would there be delays in that as well? Something that we should be watching out for. Otherwise, in terms of other sectors, Nifty Metal, Nifty Energy seeing about 1.55 to 1.02% of cuts, while Nifty Oil and Gas and Bank is also down about 0.97% and 0.86% respectively. The only spots of green that we are looking at is in terms of Nifty FMCG and Nifty Pharma. Nifty FMCG, now this is a sigh of relief for Nifty FMCG because if we look at the last 16 sessions, it has closed in red. So it would be interesting to turn out how the Nifty FMCG pans out at the close. While Nifty Pharma, we are looking at 0.35% of gains. But Richa, weakness persists in overall benchmark indices. This is going to, if you look at the broader markets also, small cap and mid cap, this is expected, right?
Yeah, definitely. It's a bloodbath across the markets over here. If you pull up the Nifty mid cap 150 index, this one is also down about 0.9% over here. Nifty small cap 100 also down about 0.7%, as we could see, largely near to the days. Okay, recovered from the day's low is what we could see over here, but still down in the red, as we can see. But also, let's see what constituents are pulling the index down. Well, talking about mid-cap 150 index, we have LTTS, that is an IT one because IT is beaten down to it. We have Escorts Kubota, we have 3M India, All India, KPI Technology. So a lot of technology names is what we could see. But moving on to talking about the small cap 100 index, we have Nalco and Angel One, which are not doing well in trade. We have Tejas as well, but up in the green, sustaining the index is Data Patterns, Netco Pharma, Glenmark Pharma, as Anushi mentioned, Pharma Pack is doing well in trade. But to talk to us more, we have Sharmila Joshi from sharmilajoshi.com joining us with her expertise. Thank you so much for joining us on the show, and it's always a pleasure speaking with you. My first question will be around the markets. People looking forward to Nifty, what do you think would be the support levels? Because I definitely am sure that there's fear among the investors, and is this panic loss booking, or do you think this might recover? Because also the March month is largely about tax loss harvesting, and we've historically seen March also kind of in the red. So what are your thoughts on Nifty recovering, and what are your support levels as well?
So obviously I don't have any support levels I can give you because I look at the market from a longer term perspective. Having said that, I can say that markets look very fragile to me at the moment, and definitely, as you rightly pointed out, I think that this volatility that we are seeing, given the fact that now we are sort of in the last week of February, will spill over to March because you do have the year end. Also, I think that one must understand that a lot of this uncertainty has had to do with what we've seen happening in the US. Apart from the FI selling, now we have this whole US tariff issue, which has sort of now entered into a negotiation phase. So I think those negotiations will sort of pan out over March, and you will get clarity as to what is exactly going to happen. Because I think April is sort of what has been indicated as a deadline for tariffs to be imposed. So let's see where that takes us. So I think in a nutshell, what one can say is that markets look to be, not in a hurry to move up. So we've seen the correction happen across. I don't think this is only retail selling, because that we've seen already play out from October, because we have seen mid caps and small caps correct largely, and that's where retail is invested. But now it seems that as if every type of investor is selling. So you do have selling from FIs, which continues. You do have selling from HNIs that we hear of. You do have retail lightning positions. So overall, market seems to be in a mood to get light, and perhaps rightly so. You should never argue with market wisdom in that sense. So while I feel that we are close to making a bottom, I think it's too early to say that it's been made. And as I said, markets look very uncertain as of now.
Sure, it's uncertain, but talking about a little long term, one quick question to you: what kind of returns do you expect in CY25 according to you, Sharmila?
That's a very difficult question to answer, but I think that even if you were to, depending on the low that you make, even if you were to return to the kind of highs that we made post-election last year, it will be a great thumbs up for the market. So let's wait and see how things pan out, because what has happened is that especially for small and mid caps, the corrections have been so severe. So for them to even come back to what levels they were is going to take time. And you're going to have to see some kind of affirmation coming even from numbers. So what I'm trying to say is that you can if you sense that this is the bottom, even from there is going to take you a couple of quarters to sort of see any kind of recovery. So I don't think you're going to see a sharp recovery. That's the mood the market is in now. So as I said, that even if you were to go back to the highs that we made last year, that would be great, and that is sort of what I'm penciling in for December end.
Right. So slow and steady returns is what I think one investor should expect from the markets. But let's move on to the banking sector. Federal Bank had reported a 5% decline in net profits at 955 crore in the third quarter. Well, it also aims to rank among the top 6 players across key profitability matrix over the medium term, and this would be largely driven by margin improvement. However, the execution of key initiative still remains crucial, according to analysts. The stock is up about 2% in trade, and Somit, who has tracked this one closely, joins us with more details.
Well, yes, it was an important analyst day for Federal Bank, given the fact that it was the first one that was done by the new MD and CEO, KVS Manian, and he has laid out a detailed strategy of how they plan to bring the bank to the top 5 private bank bracket by FY28. Now the new CEO launched a 12-theme business strategy to increase the bank's return on asset. Now, Federal Bank is currently the 7th largest private bank by asset with a return on asset of around 1.2%, while the top 6 banks have a return on asset of around 1.4 to 2.2%, and this is where he wants to be the bank over the medium term. That is what the strategy is. Now, if you look at the biggest driver for return on asset as per KVS Manian will be enhancement that would take priority over others, and that will happen by an improvement in the current account ratio. Now, currently, if you look at they plan to increase their CASA to around 36% from 30%, and this increase of 6 percentage point that we will be seeing, most of it will be coming in from the current account, and that is what around 4% is what he's aiming to get that from increasing current account, and that is something that will that is something that will also aid the company's return on asset going forward. Now, apart from this, the bank is also aiming to grow its net interest income faster than credit growth, and is also seeing that he also believes that fees income could grow much faster compared to its net interest income going forward. Now, the bank will focus on improving the share of mid-yield assets from around 31% that is currently to 34%, and high-yield asset ratio could increase from 5% to 8%, and these factors will aid the bank's net interest income as per the new MD and CEO. And the other factors that would aid the fees income would be trade forex, cash management, and increase in cards. These are the 3 points, these are the 3 things which will aid the fees income, while the other factors will aid the net interest income as per the new MD. Now, the new MD also clearly mentioned that they do not expect any repricing of deposit to happen anytime soon, despite the fact that there has been a 25 basis points rate cut, and they're also saying that the competitive intensity continues to remain high in the market, and they're also expecting another rate cut to come in April 2025. But despite that, they're not expecting deposit to be repriced, and competitive intensity would remain higher, and because of this, the net interest income for short term could be under pressure as per him. Apart from that, he's also saying that the focus will be on improving the granular liability mix, which in turn will drive the net interest margin for the banks going forward. And given that they currently have a very comfortable capital ratio, they do not plan to have any fundraise anytime soon. And when it comes to expansion plan, he said that the bank aims to open nearly 400 to 450 branches till FY28, and this will be based on selective state level expansion. So it is not that they will only expand in the southern region, they might expand in other regions as well, but it will be selective as per the new MD, and around 400 to 450 branches is what the bank is planning to add till FY28.
Okay, very detailed analysis over there. But Sharmila, coming over to you, do you think a turnaround is possible under the new MD? Well, clearly, as Somit mentioned, a lot of key milestones that the MD wants to achieve. What's your view on Federal Bank specifically? And then I can move on to the banking sector.
Yeah. So the results seem prima facie good, and overall, as was being outlined, I think what I liked, and I'll tell you there are some things that I liked and some things that I didn't like. Obviously, it's a new management, so you have to give them that. I think that you will see more such moves coming in, in terms of taking the bank to the next level, etc. So that all is very good to hear, because I think that if you're in that space, if you don't aim to be among the top 5, then what even are you doing, sort of. So I think that's a great goal to have. And overall, if you look at what they've outlined in terms of what they want to do with CASA, what they want to do with NIMs, what they want to do with NIs, all those plans really sound very good. And to my mind, that is something, at least some of those things will come through for the bank. So given the valuations that the stock is at, it looks reasonable. What I do think it's a little ambitious, too ambitious is one, the kind of branch rollout that they're seeing, because I don't know whether in this environment that is exactly the approach one should be taking. That is number one. Secondly, I think even their commentary on the kind of pressure that they, the competition pressure that they see, and because of which deposit rates will not get affected, even though interest rates are coming down. That sounds also a little challenging for banks as a whole, and definitely for Federal Bank as well. But as I said, I think the valuations of the stock are now reasonable. So you could look at this stock from a longer term perspective. It is a good quality stock. I would look at sort of targets of close to 205, 210. I think the stock is at around 180 levels. It could correct a little bit from here. But as I said, those are the kind of levels I could think that I'm penciling in for the stock.
Right. Okay, so target of 205 to 210 for Federal Bank, good time to enter, good quality stock, attractive valuation. But very quickly, your top banking picks in this kind of market for a one-year perspective?
Well, I think from the PSU banks, it would have to be SBI. And from the private banking space, it would have to be HDFC Bank and ICICI Bank in that order.
Okay, well, that's the view for the banking space in general. But another sector in focus is the steel sector. And this is especially after India's need for more safeguard duties on the steel imports. Again, this comes in the wake of the Trump tariffs and about 25% on all steel imports. But to give us an outlook on the overall sector, Mika joins in to answer this and more.
So, steel counters were in focus last week because safeguard duties were expected, but nothing has been announced so far. Now, the latest news flow that came in was when Trump announced 25% tariffs on all steel imports on February 10th. Now, in terms of who got impacted, well, the countries that got directly impacted included Canada, Brazil, EU, Mexico, South Korea, and Japan. And directly, India did not get impacted because of our immaterial exports to the US, which was only 1% as of FY24. But now there's a talk about how the steel exports could be redirected to India. India has free trade agreements which could allow more imports from other Asian players, and it could be, according to ICRA, there's a potential redirection of 4 million tons per annum of steel exports from Japan and South Korea initially. If you look at India's steel import picture as a whole, China already accounts for 25%, Korea is at 20%, Japan is at 17%. Vietnam has also emerged as a player at 8%, and other countries aggregate to 28%. And in terms of India has already been facing pressure from imports, especially cheap steel imports from China and Vietnam since FY24, and more imports being redirected to India could bring down domestic steel prices and thereby hurt the industry's earnings in FY26 as per reports. Now, an update on the safeguard duties. Well, the investigation for anti-dumping on China and Vietnam exports to India was initiated in September 2024. As per different managements, safeguard duties of around up to 25% was expected in the first 2 weeks of February. But now, as of today, no announcements have been made. And this is very important for the sector. Anything above 5% would be positive for the Indian steel industry. The safeguard duties could bring domestic steel prices up, which thereby helps the company's margins as well as their capex investment as per Morgan Stanley. And a potential duty could allow companies to hike their prices by 2,000 to 2,500 rupees per ton as per Nuava research. Lastly, if you have to talk, if the safeguard duties do come in, whether it's 10% or 15%, which is what analysts have been expecting, there could be a bump up in the FY26 consolidated EBITDA estimates of various players. For example, Steel Authority of India, 40% hike in their FY26 estimates on account of a 15% duty. JSW Steel at 28%, Tata Steel at 22% jump to their consolidated EBITDA, and JSPL could see a 15% hike to their consolidated EBITDA if a 15% duty is announced.
Okay, well, thanks for that, Mika. Now, Mika was talking about the potential impact on the EBITDA. We could look with the 10% or the 15% of cap coming in for these safeguard duties. Sharmila, I want to understand your view on the overall steel sector with the announcement, with the safeguard duties in place, and any of your preferred picks in the stocks that Mika was talking about.
So, really two takeaways. One thing is, I think that what we need to bear in mind is that whenever we are talking of tariffs, whether we are directly impacted or not, the world is too connected for you to not feel any impact. And I think this is one clear sector where directly we don't seem to be impacted. But the fact is that if there are going to be tariffs on other countries, we will face the pressure because they are producing X amount of steel or metal, whichever metal, and that they will have to find some place to sell it at. And obviously, other countries will be impacted. And we have been feeling that pressure, especially since China got out of the kind of cuts that they made during COVID and they went back to full production. We have been feeling the pressure, which is why this duty is being talked of. And overall, this sector is one sector that is very globally connected in the sense that anything that happens with prices is impacted by what happens. We are a clear reflection of what is happening in LME, etc. So while I would say that domestically, in that sense, there is a lot of demand and the sector looks good, there is no taking away from the fact that the prices as well as of metals and their performance in the stock market is going to be impacted by what is happening in the global picture. And which is why, I think it may recover on one day, it may fall on one day, but by and large, that's the trend it's going to follow as to what is happening with the sector globally and what are the considerations for the sector as a whole. So while the valuations, as I said, individually look good, I do like a Jindal Steel, I do like a JSW Steel, I think SAIL looks attractive. But I think that recovery in stock prices is going to take time because it's really going to happen with what happens around the world.
Okay, so recovery in stock prices could take some time and for the metal names that we're just talking about, but shifting focus from the metal sector to telecom sector, one stock can focus here is Bharti Airtel, as the company is going to increase its stake in Airtel Africa by up to 5%. Rucha, since you track this stock closely and the sector closely, what do you make of this development?
So definitely, Anushi, as you rightly mentioned, it is set to increase about 5% stake in Airtel Africa. Now remember that Bharti Airtel already has about 57% stake in this subsidiary. And this additional 5% stake, even if it happens at current market price, it would imply a cash flow of around 2,500 crore rupees. Now, if we look at the Africa's stock price, it was up about 46% in last 1 year. But what is concerning from this news is that Bharti Airtel's only motive to come out with the IPO of Africa was to divest in the non-core assets, and additional investment of up to 5% actually questions this kind of move, because this is more investment from Bharti Airtel into Africa, which could also imply that there is no clear picture of the dividend policy. So if Airtel uses that money into investing in Africa, wherein it already holds 57%, that would definitely make investors question on dividend policy. So unless Airtel comes out with some kind of dividend policy to its investors, this could be a question mark for the stock as a whole, is what analysts also believe. But Sharmila, these are my thoughts on the company as per what the analysts are also saying on the street. What are your thoughts on Airtel? I believe that Airtel is one of the fastest movers in the telecom space, up about 44% in last 1 year on the back of tariff hike, etc. But do you think that the room to move up has now gone down and might not be attractive to enter at this point in time?
Well, stock prices may correct because I think you outlined the concerns very well. But, I think there's no taking away from the fact in my mind that this is a sector where we are going to see a lot of growth. Given, how much all of us consume data on our phone, you're not really using your phone to make a call or to talk. It's really more the data consumption that we are seeing. And if you look at the numbers and if you look at our, the kind of scope that there is for growth, then I have a lot of comfort in telecom as a sector. But yes, I do agree that, these kind of moves and the fact that what we've seen time and again is that when you, when you sort of are invested in geographies across the world, if anything happens, negative happens there, it does impact your balance sheet here. And, so those kind of concerns do come in when companies sort of get broad-based and they invest in ventures overseas, etc. But if you were just to look at the pure domestic picture, I think it's a very strong sector that we're talking of, and a very capital intensive sector again. So which is why I don't like Vodafone idea, because at the end of the day, you need to keep spending to really stay ahead in the game. So as of now, for me, Bharti Airtel is the best pick within the telecom sector. But I do agree that it could correct a little bit because of bad news and the overall market sentiment. That said, this would be the stock that I would choose in the telecom sector.
Okay, Bharti Airtel, a preferred play in the telecom sector as again something like a Vodafone India. But shifting focus, power stocks surge as summer heats up. This is with the rising demand, energy storage boost and rating upgrades. Power stocks continue to remain in focus, and Mihika is joining us to explore the key trends, top gainers and market triggers driving this rally that we're looking at.
So I don't know about the summer, but the stocks have definitely heated up in the past week. When you look at the BSE power and utilities indices, it's up over 4.5% in the last 5 trading sessions, and this is just last week. Now, in terms of the stocks that could see strong gains in that have seen strong gains in the last 5 sessions, you have 18% NLC India, JSW Energy up 15%, followed by a CSC and NHPC at 10%. Now, in terms of the potential triggers, well, number one was this power consumption trend that has picked up. Jan 2025 saw 2% year-on-year growth in power demand. However, Feb 2025, and this is just the first 2 weeks, has seen a 6.6% year-on-year growth as per JM financial data. Even if you see the peak power demand is up 6% year-on-year to 237 gigawatts in Jan. The first 2 weeks of February showed the same kind of trajectory, and this suggests a likely rebound in power demand in coming months. Now, the second potential trigger is the boost that energy storage as a theme got last week. The government has mandated 2-hour storage in all renewable capacities. This can be in the form of battery energy storage as well as pumped storage system, which has put stocks like SJVN, NHPC, JSW Energy, Tata Power and Adani Green in focus, which are already involved in the space. And lastly, we've seen certain ratings upgraded in the past month. Last week on Friday itself, we had Adani Energy, JSW Energy and Suzlon all gotten and buy call initiated. In the last month, we've also seen NHPC upgraded by CLSA to a buy, Tata Power upgraded to a hold by HSBC. We've seen JSW Energy upgraded to a buy by both Investec and Elara in the last few days of January, and Suzlon Energy was also upgraded to a buy by Nuvama Research in the last week of January.
Okay, well, thanks for that, Mika. Sharmila, coming to you, some of the upgrades that Mika has mentioned, a couple of them are interesting, which includes the likes of JSW and Suzlon Energy. Want to understand your take and your preferred plays in this space?
Yeah, I think they're precisely the 3 stocks that were spoken of. I think I would add Tata Power maybe to the list. So I do like a JSW Energy, I do like a Suzlon, I do like Adani Green, I do like a Tata Power. I think the reasons are also sort of outlined and spoken about, in what we heard. Because apart from the fact that power as a sector should see greater demand going ahead, I think the focus has also shifted to anything that talks about renewable or solar or anything to do with green energy. Those are the kind of initiatives that market has been liking. So when you do see sort of buying return to this space, I think these would be the stocks that would lead, and I think all of them are at decent valuations, and they've done also reasonably well. So these would be the stocks that I would like.
Okay, well, that's the outlook for some of these power plays which are in focus. But it's time to slip into a short break. But stay here, stay tuned. A lot more lined up on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market.
Hello and welcome back. You're watching Profit Buzzers. We shift our focus to next theme, that is the healthcare space. KKR has secured controlling stake in Healthcare Global Enterprises. The stock is up about 2.5% in trade today, and Varsha joins in with more details.
Thank you for that. So yes, KKR will acquire up to 54% of equity in HCG, that is Healthcare Global Enterprises, via from CVC Asia V. Now remember that CVC holds almost 60.35% stake in the company, and the purchase price at which KKR will acquire is at 445 rupees per share, which is at a discount of 11% to Friday's closing price. KKR will be largest and controlling shareholder, and KKR will also launch 26% of open offer at almost 504.41 per share, and KKR will assume sole control of HCG operations. Dr. B.S. Ajay Kumar, who is the promoter of the company, will take a role of non-executive chairman, and the transaction is expected to close by third quarter of 2025. If I were to talk about the HCG, was founded in 1989 and is one of the largest oncology chains and hospital chains in India, and they operate 25 medical care centers across 19 cities with 2,500 beds, nearly 100 operating theatre and 40 liner accelerator machines that they have. Since we are talking about this acquisition, let us just know what are the past KKR investments that they have done. Baby Memorial Hospital, Healthium, Infinx, JB Pharma, Gland Pharma and Max Health is some of the investments that KKR has done in the past.
Okay, thank you so much. Okay, thank you so much for that, Varsha. But let's welcome in our guest, Amit Bhuptani, the technical analyst from Nirmal Bang Securities. And also, we have Ms. Sharmila Joshi, who is already there in the first half of the show. Well, thank you so much for joining us. My first question to you, Sharmila, will be around the fundamental view on the healthcare sector as a whole and the particular stock as well, Healthcare Global.
Well, I like the sector, and I think that hospitals as a space is a very interesting space to be in, because we have seen the return of a lot of tourism that comes for health purposes, because it is obviously more affordable for people to do certain operations here. And within that space, I think oncology is a great space to be in. So this is a stock that I like. I think the only negative is that since this deal has happened at a discount to the current market price, it may not go up in a hurry. But that said, as hospitals as a space, whether it's Apollo Hospital, Narayan Hrudayalaya, Healthcare Global, these are some of the stocks that I like. And I think this valuation is also reasonable. It's just that the deal has now taken place at a price which is at a discount to the current market.
So slow and steady recovery is what our fundamental analyst is recommending. But what about the technical charts, Amit? How is the space looking? Right time to enter in the bloodbath that's happening?
Overall, if you look at the setup looks positive. Currently, the breakout took place at 508 level. It is trading above all the important major averages, 50, 100, 200. But from the upside level, we have seen some kind of liquidation in today's day of trading session. Stock is continuously trading in uptrend. So once again, if counter goes above 516, it will get a confirmation for the momentum to be picked up on the buyer's front. So currently, there will be a conditional. Once if stock goes above 516 level, after that new long position can be created for the target of 545, 550 levels.
Okay, 545 to 550 is the level that we are looking for Healthcare Global. You know, there are a couple of stocks which are in focus after the US FDA action, and Varsha continues to stay with us, joins in with more details on this.
Yeah, thank you for that. So yes, let me start with Syngene International, wherein US FDA inspected their Bangalore facility, which was conducted between Feb 10 to 20. And this facility actually covers US market, and the US FDA issued almost Form 483 with the 5 observations, which is a negative news for the company, but company will address observations promptly. Next on the list is Jackson Pharma, wherein they've acquired Resilient Cosmetologists India business at 24 crores, and this will be funded from the cash reserves that Jackson has of almost 132 crores, and the deal is expected to close within 45 days. This acquisition will expand Jackson Pal's product portfolio to dermatology, actually it will strengthen their position in dermatology and gynec services, and they will also add wellness brand, expands into acne, hair care and moisturizers. They're going to increase their presence in Maharashtra, Karnataka and Kerala, and this will enhance engagements in dermatologists and gynecologists. Next on the list is Lupin, wherein they've received EIR, that is Establishment Inspection Report, for their Somerset facility, which is in New Jersey. This just means that the inspection has been completed, which was held between 27th to 31st of Jan. Last on my list is Zydus Life Sciences, wherein they've received US FDA nod for 2 of their products which are used to treat arthritis, and this will be produced at their Ahmedabad facility, which has an annual sales of around $3.6 million in US.
Okay, well, thanks for those details, Varsha. Amit, I'll come to you first on these couple of names. Varsha was talking about something like Syngene International, Jackson Pharma, Lupin, Zydus Life. Want to understand any of your picks from the names that Varsha was talking about, and overall view on the pharma space?
Currently, if you talk about all these 3 counters, currently none of them are giving a confirmation right now for the new long position to be created at this point of time. If you look at the Syngene stock is trading at the supportive levels. On the monthly chart, we are seeing that almost on the upward channel, we are seeing that the stock is trading, and it is about to break down below 680 level. 680 will act as an important support for Syngene. Once that level gets broken out, then we will see next leg of selling. But if it is holding 680 level, then the pullback can be strongly witnessed in this counter. So for the confirmation basis, we will see the 710 level breakout is very much important for this counter. Once the counter trades above 710 level, after that we will see momentum to be picked up in this counter. So if we want to create any new long position in the Syngene, it can be created above 710 levels.
Okay, well, that's the technical check on some of these counters. Sharmila, coming to you on the fundamental check on something like Lupin or Zydus Life or Jackson Pharma. I mean, it's not a stock that we've discussed a lot. Want to understand your picks in the sector?
Obviously, I think the news is negative for Syngene, so maybe and valuations also look a little expensive to me. So maybe that's not that great. Zydus Life, I think, looks to me the best stock among all those discussed, because I think the valuations also here look reasonable, and I like the space that they're entering in. So overall, I think given how their numbers have been, where the stock is at, as well as the news flow, I think this seems to be the best stock out of all the four discussed.
Okay, so Zydus Life is the preferred play in this pharma space that we are looking at. But shifting focus to the auto space, Bajaj Auto is likely to pump 1,360 crore rupees in KTM. Puneet joins in with more details on this development.
Well, thanks for that. But it's a very interesting, investment scheme that's coming about play now. Bajaj Auto, of course, has a collaboration with KTM globally, and they sell these vehicles in India as well. But the global parent is, currently under, they filed bankruptcy actually in November of 2024. So, investment of about 150 million euros or roughly 1300 to 1400 crores in the Netherlands-based arm of Bajaj Auto International. That's what they're doing. So, they're investing in their subsidiary, and this could be looked at as a precursor to what's going to happen tomorrow, which is the bankruptcy proceedings or something like in KTM, which will come out on February 25th. So that's going to be something to watch out for. What is the kind of creditors and what they decide to do going forward as well. But just some current structure, because the Netherlands-based arm of Bajaj Auto owns roughly 49.9% stake in Pierre Bajaj AG. The rest is of course held by Pierre Bajaj, which is of course the parent of KTM, and these two companies in turn hold roughly about 74.9% in a listed entity, which is Pierre Mobility AG in the Swiss National Exchange. Now, the company has been speculating and maintaining over the last 2 to 3 quarters that there has been a lot of business rejig in KTM globally, and while that has not affected the India business as of yet, it's something to watch out for globally, as Bajaj could actually take ownership with this particular investment as well. Now, the KTM AG had filed bankruptcy proceedings in November of 2024, and they mentioned that financial requirements of KTM AG amounts to roughly $3-digit million. So it's a lot of financial irregularities and dues that they owe currently, and that could impact the market. They've also mentioned that reduction in operating performance at its Australian site could cost it more than roughly about 1 billion euros in 2025 and 2026. Finally, just to wrap up this whole discussion, what could be the kind of impact for something like in Bajaj Auto? Because one of them could be that it currently has roughly about 20,000 crores in cash, and while that will this investment will come out of that, is it the most efficient use? That's question number one. And the second one is, if Bajaj gets global ownership of a premium brand like KTM, it could actually go into newer markets where it doesn't currently. So there are a lot of ifs and buts currently, and we wait for clarity on this tomorrow with the KTM AG's bankruptcy proceeding going forward.
Okay, well, thank you for that, Puneet. Sharmila, I want to come to you on this development that we're looking for Bajaj Auto. It's a considerable big investment, about 1,365 crore in KTM. While the ifs and buts remain, want to understand your view on this.
I think it's all going to be decided by the ifs and buts, because let's just to understand Bajaj Auto, I think a lot of what they do is now exports. So in that sense, they have changed their profile over the last many years, and they are now increasingly exporting more to a lot of different countries. That said, KTM is a sort of a premium brand, and every two-wheeler has made its presence in some or the other space over the last couple of years, which is what we've seen. So whether they really take, they really decide to take this to the next level and think that this is a good time to enter that market is a question that will get answered very soon. But overall, if you ask me, I think that two-wheeler is a great place to be in, and I like the fact that from a domestic point of view, to my mind, the EV of two-wheelers is going to happen far faster than what we are seeing in passenger vehicles. And so, two-wheelers and mobility trucks, etc., that would be my sort of first to move. Buses, that would be, I think, where electrical vehicles will catch up fast in the domestic space. And Bajaj has has made its moves, whether it's two-wheelers, three-wheelers. So overall, this is a space that I like. My preferred play in this space is actually Hero Motors. It would be Hero Motors, Bajaj Auto and TVS Motors in that order. But that said, where this news is concerned, I think it's going to be a question of the ifs and buts and how they get answered, and how the market really reacts to all that.
Okay. So while the uncertainties remain, two-wheelers is the preferred play for Sharmila. Amit, coming to you, your view on Bajaj Auto. Along with this, if you have any preferred place in the two-wheeler space.
Definitely. If you look at Bajaj Auto from last 6 months, stock is continuously into the selling zone from 12,800 level. Stock has come down reasonably towards the 8,400 level. Now the major support for the counter is at 8,300. Once the stock goes below 8,300, then only next leg of selling will be witnessed, or else there will be a time consolidation at this point of time. And whomsoever is holding long position should place stop loss at 8,300. Once the stock gets stable in this range and it gets created a base in this range for next 2-3 weeks, then we will see a strong pullback in this counter. But at this point of time, creating a new short or exiting long is not a point of or worth time at this point of time. So 8,300 need to be kept as a strict stop loss at this point of time. If we look at the any other counter on the auto front that looks positive. First one will be from the TVS Motor. TVS Motor and Aisha Motor, both these counter looks positive, as we have seen that not much of selling has been witnessed in both these counters from the selling which we are witnessing from the overall market front. So if new long position need to be created in Aisha Motor and TVS Motor, it can be created.
Okay, well, thank you so much for that. But moving on to the big brokerage call of the day, Citi has maintained their buy rating on Intergroup Aviation, that is Indigo. The target price is set at 5,200 rupees from 5,100. Puneet joins us with more details from the report.
Well, thanks for that. So, they've opened a 90-day positive catalyst outlook on something like an Interglobe Aviation, and there could be a Markham angle to all of this. Before I get to that, they mentioned that 3 key points in this particular report. The first one, they're seeing a pickup in overall traffic demand, and that will augur well for something like an Indigo, which has the highest market share in the country. The second key point that they're making is that they're expecting significant improvement in passenger load factor in Q4 of FY25, which is generally a seasonally weak quarter. So it could have a positive impact on this. And the third part is that, part of the increase in overall demand essentially could also be attributed to the Mahakumbh. We've seen roughly a lot of big figures coming in of the number of tourists that have gone in. So these are the 3 key factors that, Citi has indicated in terms of positive outlook for something like an Indigo. They see that, the higher demand could actually manifest in better yields going into Q4 of FY25.
Okay, well, thank you so much for that. But Amit, coming on to you, Citi thinks that this one is good one on the back of a lot of factors. But what are the charts indicating like good time to enter into this one?
Definitely, you can create new long position at this point of time. Still, the breakout is not taken out at this point of time, because the downward trend line breakout, which we are seeing on the chart, is at 4650 level. Still, but if you look at the momentum front, momentum is positive, and we expect the buying carry forward can be witnessed in this counter. Once the counter goes above 4650 level on the closing basis, then we will see fresh buying will be witnessed in this counter to above 5000 levels. So currently at this point of time, new long position can be created for 4650 first target with the support of 4480.
So Amit, do we wait for that buying opportunity to come in, or one should enter it right away?
We can create at this point of time, but with the strict stop loss of 4880. Once it goes above 4650 level, at that point of time, new long position can also be added on.
Okay, well, that's the view for Interglobe Aviation. But another brokerage, another stock which is passing on the back of brokerage is something like SBI. Now, InCred has downgraded the stock to SBI to hold, and this is on the and they have also cut the target price to 795. So, what they're essentially saying in the note is that they're bracing for lower return ratios now and expect the return on asset to moderate and ROE to decline to 14% over the FY26 to 27 period is what we are looking at. Non-core income contributes materially to ROA, so it is difficult to forecast on what is the expectation here that we can look. On talking about the core earnings growth, that is also expected to be impacted by the recent repo rate cuts that we have seen, and the risk to reward ratio is better at large private banks. So Sharmila, I want to understand your outlook on SBI. Do you have a bearish or a bullish outlook on this, and what do you make of the overall banking sector, some of these the public banks that we are looking at?
Well, I like this stock, and while I'm not sort of arguing with any of the negatives that have been pointed out, I think that my view is longer term. I'm looking at a 18-month, 2-year kind of a period, and then I think if you look at where the stock, where the bank is at, given the fact that within the PSU space, overall, it is the largest bank that we have, and if you're expecting any kind of recovery in banking, I think that we will see it in SBI first, and the valuation the stock is available at. To my mind, the results it has given, I think that it at. And also, I think when you do start seeing buying, you are going to see buying in the large caps first. And I think SBI would qualify as that. So overall, I think that if you're looking at the banking space with a 2-year horizon, as I said, the three stocks that I would be looking at would be SBI, HDFC, and ICICI Bank. And for different reasons. So I think a good strategy could be to make a basket of these stocks and buy them. But the view is definitely long term.
Okay, so the view clearly long term. Amit, want to understand your outlook on SBI Bank and whether your preferences towards the private place or the public place.
If you look at the overall setup for SBI as per technical setup, currently counter, we have seen that today's session is at open a gap down note, but still there are no signals for this counter to show some reversal kind of trades. Currently, if you look at the supportive level also, it has shifted downside almost 20-25 points. Support range has been shifted downside towards 690 to 680 zone on the downside. So currently more pressure can be witnessed in coming days of a trading session. Once the counter gets stable over 725 level, then only we might witness some break on the selling. After that, we will see some buying opportunity. But till the time it's not going above 725 level, till that point of time, we should avoid any new long position in SBI.
Avoid any long positions in SBI. But now shifting focus from the banking sector to primary markets, let's talk about Quality Power Electrical Equipment, which marked its debut on the Dalal Street today. We saw a minor premium of around 1.2% on NSE. In fact, I spoke to Mr. Pandya, the joint MD and whole-time director of the company, about the outlook forward. To listen into that slice of conversation.
The company is into manufacturing of high voltage power products and power solutions that help connect large renewable energy grids to the transmission network. We have been a very integral part, especially on a technology front, in sectors like HVDC and FACTS, not only in India, in across 100 countries.
Okay, and how do you plan to utilize the proceeds going forward? 859 crore is the total issue size, of which 225 crore is going to be utilized for various purposes that you've outlined. That includes the acquisition of Meru Electrical and Mechanical Engineers as well. Want to get a sense on what does this mean for the company? How would this aid in the growth for the company forward and expected synergies from this?
Meru is again into a high-end electrical equipment called instrument transformers. They have been market leaders in this business, which is complementary product to us. Since most of our markets tend to be global, this is a complementary sell in the same customer space. We believe that we will be able to increase a product basket in front of the customer, which will help us negotiate better. Also, what we see, our growth plans are both organic and inorganic. As we spend about 5 to 6% of our revenue on R&D, we are also looking at other inorganic opportunities that may be available. Almost 35% of our GCP is indicated towards other unidentified acquisitions that has to be done in the next 18 months. So it's a mix of both organic and inorganic. That's how our growth tends to.
Okay, well, that was the management of Quality Power Electrical Equipment. Sharmila, coming to you on this IPO, if you've got the time to track this company.
Sorry, I have not looked at this at all.
Okay, so let's talk about the sector in general, the power equipment sector. We have stocks like Volt Amp or something like that. Your overall view on this sector?
The view is positive because I think if you are positive on power, it sort of stands to reason that it will extend to some of the stocks within that space as well. One of the stocks that I like, sort of in a related space, is KEC International.
Okay, so KEC International is the preferred player. Amit, coming to you, I understand that it's a recent listing, so there's not much data for the technical outlook, but want to understand any of your picks in the power play sector?
Yeah, if you look at the power play sector, selective counter related to that is NTPC. We can create a new long position in NTPC related to some kind of a power distribution from that company, because the setup in NTPC, it's a completely positive front. If you look at the fall from this counter of 450 levels, it has came down substantially towards the 300 level, and it is showing on the technical front a downward trend and breakout in this counter. Stock is continuously holding 50 DM as support. So any new long position to be created and from the power front will be in NTPC.
Okay, well, thanks for that. Thank you so much, Amit and Sharmila, for joining and sharing your outlook on various of these counters. Always a pleasure to have you on NDTV Profit. Okay, now after a gap of 8 months, India and the UK will resume negotiations on a free trade agreement, which is the FTA today. This comes amidst the shadow of Trump tariffs decisions. Rishabh joins us with more details on this.
Major free trade agreements are set to get a big fillip this week with regards to the EU and the UK. So the UK Trade Secretary will be in talks with Commerce Minister Piyush Goyal today, and the two will resume the 15th round of negotiations of the free trade agreement. Apart from that, later on in this week, we'll have the European Union delegation coming in on Friday and opening the 10th round of negotiations for that FTA as well. So two very important FTAs, both with very important trading partners, could see a major sort of progress coming in this week. Both of them come at a very interesting time for India. India has already started talks with the US to negotiate the bilateral trade agreement. There are global trade concerns with regards to President Trump. There's still a lot of clarity that is being sought from various sectors and industries about the impact of how these tariffs will play out and how supply chains and global supply chains will be impacted from this. A line on what could be expected from the UK and India FTA talks. Visas have been a constant sort of point of negotiation for both of the countries, especially from an India POV, better visas and more access for Indian professions to the UK market. In exchange, the UK also demands better access to Indian markets for their telecom as well as fintech companies. There's also chatter on lowering tariffs on EVs, alcohol, as well as various financial and professional services. So that gives us some sort of a context on what can be expected later today.
Well, thanks for that, Rishabh. But that's all the time we have on this show today from my side, from Rucha, and for everyone who's put up the show together. But stay tuned to NDTV Profit, more news and updates coming on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV.
Venkatesh Balasubramanian. He's the MD and co-head of research at JM Financial Institutional Equities, joins us right now on the show. Venkatesh, good having you. Thanks so much for waiting by. I will just finishing some of the daily conversations. Now, before I get to Q3, Venkatesh, just the argument that people are making around the valuations at which we are trading at, and whether we should trade at average valuations, or at average valuations, do we get a chance to buy? Or because the Nifty is not showing growth, why should the Nifty be at average? It should be below average valuation. So why at 18 times? Why can't the Nifty trade at 17 times or 16 times fundamentally? What is your argument there?
Okay. So what we believe is at this point in time, the broader market is trading 1 year forward at close to almost 19 times based on our numbers. If you see the historical long-term averages, average PE multiples for the Nifty 50 have been closer to 17 times. We are still maybe 10% away from there. Given how the economy is, how earnings growth is, see, the economy is okay. We are seeing a lot of positives coming through. One is obviously government capex has once again started picking up for the last couple of months. We are also seeing that reservoir levels in India at the start of the year were very good, which basically means that rural consumption this year should be decent. The income tax cuts in the budget imply that urban consumption will also be good. Other than that, the fact that we personally believe that the EPS cut cycle, or at least for large caps, has already ended in the second quarter. Our numbers suggest that third quarter numbers have actually been ahead of expectations. The ask rate for the fourth quarter is quite weak. So we don't expect any more earnings cuts. We personally believe at this point in time, the market can very well trade at around those 17 or 17 and a half times 1 year forward, which is maybe another 5% or 7% down from current levels. So at our own expectation is worst come worst, you could see another 5 to 7% correction on the broader index.
That's interesting, and I think, Venkatesh, a lot of people will take heart from that. But the thing is, if we look at that correction at the index level, you're talking about quite a considerable amount of pain at individual stock level, right? And you've seen that play out already in the correction we've witnessed so far. In your opinion, based on the stocks that you track closely, have a few of these names gotten beaten down more than you think is appropriate? And from that perspective, are there any that you think that people should pay attention to?
Yeah, of course. When it comes to large caps, clearly, again, before I talk to you about individual stocks, as you approach this year is not about making money, it is to make sure that you don't lose money this year. So the key message, first message is stick to large caps, be very wary of small caps and mid caps. So that is the key message here. There are certain stocks where valuations are levels are very reasonable in large caps. Just to give you one name, Maruti is very reasonable. Reliance Industries looks reasonable. ITC looks reasonable. Larsen and Toubro looks reasonable. Bharti looks reasonable. So we have quite a few names. So it's not like one or two names. There are quite a few names where valuations looks very reasonable. And we personally believe that people could gradually start building positions in these names. I would still be very wary of small caps and mid caps. The re-rating in small cap and mid cap, if I can remember it correctly, started from July 2020 and valuations went completely berserk. Even after this recent correction, small caps and mid caps are trading once more than one standard deviation above the mean. So I don't think the correction in small caps and mid caps is over.
Okay. So you mentioned a few names on the large cap space, but there's one, at least from my perspective, glaring omission, particularly because it is dropped over 10% at least, right? And 14% as of Friday in 10 sessions. I'm talking about Mahindra and Mahindra. Post that, do you see any interesting value in that stock?
We really like, after Maruti, our next best pick on the auto side is actually Mahindra and Mahindra. Maybe valuations had run up a little bit. And if you pull up long-term PE band charts, you will see it may be slightly on the expensive side. But I think post this corrections, valuations have become reasonable. So we would be very constructive on Mahindra and Mahindra.
Okay. What about, and I'm only asking because, and obviously your views are not as short term as what's happening in the market today, but asking because this is one of the sectors that is getting beaten down at the start of the week. IT as a pack is down over 2% as we speak to you, Venkatesh. And there's so much that is a question mark around the US growth story and all of that from the perspective of these IT companies that have revenue exposure there. How do you play that space?
So specifically on IT, we believe we really like a couple of companies there. One is obviously TCS, and the other company which we really like there would be KPIT. So these are two companies which we are very constructive about for the current year. Now you did mention about the dichotomy between short term and long term, which is something which you brought up. See, in January, FII selling has been unrelenting. So if you pull up the charts for January, out of 22 out of 23 days, we have seen FII selling. And FIIs have sold around $8.4 billion. The selling has continued in the month of February so far. It's another, say, $3.5 billion of selling. I think there was a little bit of excitement in the second half of last week, I think. But I think on that particular day when FIIs bought, it was basically buying the Bharti block. So I am not sure whether the FII selling has ended. So while the economy is doing well, while your earnings are kind of rebounding from the trough, there are still a few technical factors which are actually negative over the short term. And that makes us very wary about the short term. One is obviously the FII selling. I believe you people would have also noticed the fact that in the month of January, SIP inflows have been a little bit on a month-on-month has been slightly negative. You would have also noticed the fact that new SIP additions, net SIP additions, which is basically new accounts added minus the accounts closed, are actually negative in the month of January. This is the first time this has happened in the last 12 months. The correction has continued in February. We will not be surprised if again the net additions are negative. And now why is that happening? Over the last 12 months, SIP returns across mid caps, small caps and large caps have turned negative. So we are a little worried about these technical factors playing out. While economy has started kind of looking up, earnings growth has bottomed out, and now it will start looking up. But there are these technical factors which worry us a lot about the short term. But over an year or 2 years time frame, we believe that India and the Indian stock markets is in very good shape.
Okay. Now, Venkatesh, so let's assume that the worries are well regarded. I was trying to understand where is it that you find the confluence of decent reportage and commentary in Q3? No major worries about order inflows if it's that kind of a business over the course of the next couple of quarters at the very least, and maybe valuations looking reasonable. Is there a confluence of all of these three factors currently in the market?
Yeah, I actually gave you a couple of names, basically Larsen and Toubro and BHEL. But if you are basically talking about the entire capital goods universe, see, third quarter numbers were quite good. It was not that it was bad. I think capital goods, we saw almost like 40% kind of growth. The problem in capital goods as a sector, if you look beyond an L&T or a BHEL, valuations are absurd.
Venkatesh, sorry to cut you, but the skeptic would argue that how is it that one can argue for the valuations of BHEL being quote unquote reasonable?
Okay, see, BHEL is coming out of a trough. Okay, you had a 10-year trough where you've hardly had any order inflows. Thermal capex had come to a standstill. Now the whole thing is kind of rebounding. So you've seen massive order inflows over the last 2 years. You need to remember that power is a long cycle play. It is not a short cycle play. So once the capex cycle starts here, it is not like it is going to stop in like 2 to 3 years. It will definitely continue for 4 to 5 years. So when it comes to BHEL, the numbers are only started rebounding now. Order inflows have started coming. It usually takes you 3 years to execute a power plant. So as the execution kind of picks up, you will start seeing better revenues, which will bring in operating leverage, which will lead to margins improving. And if you actually look at numbers, maybe on say 26 or 27, valuations are very, very reasonable vis-a-vis the historical numbers.
Okay, so you were saying on FY27 earnings, BHEL trades at what, sub 30 times or thereabouts?
Yeah, most definitely.
Most definitely. Okay. The other question, and we were just talking to somebody else, Venkatesh, on the power sector, since we are now kind of breaching that some of the targets that are set are very stiff, but the execution on the ground, the PPAs being signed, etc., aren't quite happening. So the conversation was about the wind sector, wind power sector, and therefore whether the generational companies or the equipment suppliers, have they seen a bit of a near-term top, considering that, apparently I was told that one of the CEOs in the con call said that they do not expect that the wind sector will see more than 5 gigawatts of addition in any given year in the future as well. How are you thinking about the wind sector, both the players and the equipment suppliers?
Okay, so you need to clearly distinguish between the IPPs and there is the equipment suppliers. It is possible that when it comes to equipment suppliers, there is a short-term peak which is forming. So stocks could kind of stagnate or consolidate here. It will be very difficult for them to kind of, continuously keep going up. Because what happens when it comes to equipment supplies, people basically trade it on order backlogs and order inflows. If order inflows are kind of, even if they are flattish on a YOY basis, the stock actually stops going up. Maybe the upsides on the equipment supplier is less, but there are quite a few, renewable IPPs which I've listed where there is significant capacity growth and EPS growth expected over the next 4 to 5 years. We would definitely look at some of those names.
Interesting. Venkatesh, a quick view on this one. It's a development on the regulatory front in the BFSI space with regard to foreclosure of loans. Now, we've already seen quite a few regulatory moves in that space, and that's had a bearing on lending growth as well. Some of the aggression that some of these lenders were displaying has gotten tempered somewhat because of those risk weights being increased, etc. But now if you're doing away with foreclosure,
would the interpretation be that shopping for loans from the customer's perspective becomes easier and pricing of loans has to be that much sharper, as a result of which you could see some more depression in net interest margins, which have already been trending lower?
See, I haven't had a look at this. I need to have a look at it and then get back to you on this particular question.
Okay, so then let me ask a broader based question, which is based on the trends that you've seen and not accounting for today or this latest update, are you expecting there to be a little bit of pressure on the downside, considering that deposit growth is not coming through as strongly as you would hope? Lending growth to a certain extent getting tempered in the pockets that I just spoke about, and in the microfinance space, asset quality in particular, right? And agri as well. So where do you see strength and where do you see sustained weakness continuing in the NBFC space?
Yeah, I personally believe on the deposit growth side, things could kind of start rebounding. Because as you know, over the last, 3 to 4 years, a lot of household savings was going into the stock market. Now, the incremental savings could continue going into the stock market, but maybe the portion that people are apportioning towards deposits might actually go up. Now, that should be beneficial for banks as a whole. I think that was one of the bigger complaints that a lot of banks had over the last 2 to 3 years, that everything is going into the markets and we are finding it very difficult to increase our deposit growth. So I think that could kind of reverse, or at least even if it doesn't reverse, that decline could kind of get arrested, and I think deposit growth could start going up again. We still remain on the NBFC side. We are still very, very positive on a few names. We really like Bajaj Finance. We like Bajaj Finance in the current year. The reason being that the RBI rate cut cycle has already started, and we believe actually Bajaj Finance could actually do much better than some of the banks on the Nifty this year. We also like housing finance names. Microfinance, the pain, maybe there are a couple of quarters more of pain there.
Fair call. Venkatesh, good talking to you. On your note, thank you so much for sharing your views as well. Appreciate your time. Well, let's talk about some of these points with an expert, Nikhil Nigania. He's director at Bernstein Johnson right now on the show. Nikhil, good morning to you, and thank you so much for taking the time out and speaking with us. This is Neeraj here. Good morning. Before we get down to the brass tacks of how would you look at this bucket, which has also seen a correction with the rest of the market, just a word on power demand. I for one didn't think that there was any material dip necessarily, but clearly, as Mihika is saying, that there is a pickup seen in the last few days and weeks, and factors point towards an uptick and a significant one in demand for the next few. How have you observed the pulls and pressures in the pocket in the last, let's say, quarter or thereabouts?
For sure. Thanks for having me on the show. So firstly, on power demand, see, that is the biggest driver of the sector. For any capex to happen in the sector, for any growth that ways, and earnings as well for merchant power plants, power demand is the most important thing. So power demand, historically, India used to see like 0.8x of GDP, real GDP kind of a growth multiple. Last 3 years, 2021 to 24, it grew at 8-9% CAGR. That's why the sector did so well during that phase. Last 6 months, though, power demand growth slowed down to low single digits, even dipping in some months Y-on-Y. A key reason for that being high rainfall. February, as rightly said, February we finally saw some demand uptick. First 14 days saw 6.5% power demand growth. Long term, our view is 1x of real GDP growth. That's how we would forecast power demand. That's our base case forecast of power demand. And globally, it's accelerating. Globally, as people switch from using energy in terms of fossil fuels to electricity, there is an acceleration of power demand, which is the medium-term story we have for power sector. But near-term, though, to be honest, it's difficult to predict. We saw a lot of trades happening into summers for power shortage. But first half of this calendar year, at least our expectation is power demand might not grow as fast given the high base that we have of last year. And as you also mentioned, weather possibly could be warm, but not as warm as last year, which is a big driver for demand.
Nikhil, just wondering about what the best prospects are. So you mentioned that it's tough to predict, but having said that, you've also said that the best is likely behind for wind and thermal equipment and transmission and capex estimate revisions as well. I'm just wondering what the implications of that are, because you don't only play the power producers, you also play the transmission and distribution players, you play the equipment manufacturers. Are you essentially saying that the valuations are too high to justify where they stand right now, and the prospects are not very bullish going forward?
No, see, overall on the power story, we are positive, but there are pockets or themes where we see some headwinds. So medium term, we definitely think the power capex is going to be massive in India. But the spaces where we see headwinds, number one is wind. Wind, as we have said earlier, wind land acquisition for wind, getting large, good land parcels with wind speeds is very challenging. So while the intent is there by the government, executing wind power plants are not easy. So that is why we are a bit concerned on wind. On thermal equipment, again, we love NTPC. It continues to be a top pick. But thermal equipment per se, the challenge we are seeing is batteries as well. So batteries have become very cheap, much faster than anyone envisaged. So when we are trying to solve for non-solar hour power, battery becomes a good challenger to thermal power beyond what government has planned. And third point is transmission. Transmission as a theme, we are positive, but we don't expect further capex revisions to happen beyond what the government has already announced, which is 9 lakh crores by 2032.
Nikhil, sorry, come in on this one, because the story, and rightfully so, I'm not saying it's a wrong one, but the story that comes out after every quarter from some of these wind power equipment companies, for example, right, is about the 500 gigawatts by 2030 wind's share out there, because there's only as much that solar can do and hydro can do, and therefore wind is inevitable, if you will. But I hear you say that there is an issue there. I saw your note which says PPAs are not getting signed in certain cases as well. So are the valuations prohibitive for some of these wind power equipment companies, or even power generating companies, if you will? And again, the reason that I ask this specifically is because, like every other sector, this sector has also seen price derating, and people would believe that if indeed the quarter 3 results or the commentary is anything to go by, then the things are smooth, and therefore this give an opportunity. You beg to differ.
So on valuations, to your point, so if you break it down into two parts, valuations for developers and then valuations for equipment suppliers. So our coverage is more on the developers, which is the likes of NTPC, Power Grid, etc. See, developers valuation, if you look at the global multiples, globally utilities trade at about 10 times EV/EBITDA. The state-owned companies, which we like, NTPC, Power Grid, today are at about 9x EV/EBITDA. So they are cheaper than even global peers, not just Indian peers for that part. The private utilities, though, are slightly pricier despite the correction. They are about 12 to 14x EV/EBITDA. So hence our preference towards state-owned entities to play this trade. Now, coming to equipment suppliers, we don't cover those stocks specifically. But what we can see from a demand perspective is wind, for example, as you said, government is very keen to push it. Orders look very good for wind, new wind assets. But even if I quote a renewable CEO who earning call happened just a couple of weeks back, he said it's unlikely that India will see more than 5 gigawatts of wind come in a year, right? And government aspiration was at least 10 gigawatts a year of wind capacity addition. Because land is a challenge, as I said, and battery is also negative for wind, right? Because for non-solar power, people were going to wind, but now they can go to batteries as well. They can reduce wind, increase batteries, given how cheap they've become.
Interesting. So, and you've already mentioned, I'm just reiterating, NTPC, Power Grid, and you like REC PFC as well. The last point that I want to raise with you, Nikhil, is, and it's interesting, I saw this in your note, nuclear energy. You find it interesting, you find it a good prospect, but the thing is, you say that you would be very surprised if a private player takes a jab at it, and that's based on how regulations currently stand. How do you play this theme, if at all? Because a lot of people argue, yes, of course, if India has to achieve its targets and its power needs, will definitely have to be served by nuclear, whether it's modular or otherwise.
So nuclear as a theme, I mean, and the government push is very fair, right? I mean, again, why is there such a big noise on nuclear recently? Everything is to solve for non-solar power, or firm power. People know renewable will come, solar will come. But the challenge is how do we get base load power, which is there when the sun is not out? Among the multiple options, one is nuclear, which is clean. So that's why the push on nuclear all across the world. And it's not too expensive. Levelized cost of nuclear power is 6 rupees. A new thermal plant costs 5.5, so it's not really that expensive. The biggest challenge in nuclear power plants is the construction timeline. It can take 10 years on average in India to set up a nuclear power plant. A greenfield plant, Gorakhpur, which we are building, the work started in 2018 and expected to get commissioned in 2031. So that's how long it can take. So for the asset to become cash flow positive, it can take multiple decades. So that's why we feel it's a risk one should take only if you have a cost plus kind of a business model, which state-owned companies do, but not private ones. So we are not super keen on private developers chasing this opportunity, given how long the construction take and the risk associated. To play the theme, either you play a developer like NTPC or the JV with NPCIL, or you play the equipment supplier. So L&T we cover, which does the engineering construction work for nuclear power plants in India. So we like L&T, and then there are smaller names which we don't cover, like Walchandnagar, etc. But we don't have a view on them since we don't cover them.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy?
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching India Market Close. I'm Hiral Datia, and with me is Soumit Sarkar and Nika Barve. Clearly, if you see in terms of where markets go, the pressure has continued. Nearly little over 1% is the kind of cuts that we're seeing in terms of Nifty 50. We are hovering somewhere around that 22,550 mark, but nearly at the day's lowest levels is what we're tracking so far. If you see in terms of Bank Nifty as well, mild bit of outperformance, though cuts are almost to the tune of 0.8%. 400 points is the kind of cuts that we're seeing with regards to Bank Nifty goes as well. If you see the advance decline ratio, specifically with regards to Nifty 50, you have almost, if I'm not mistaken, 11 advances to 39 declines. However, on the overall NSE stats, similar is the kind of ratio as well. 528 advances versus 1,712 is the number that you're tracking on the declines. So yes, there is that negative sentiment that continues in terms of where markets are concerned. Let's quickly look at the sectoral heat map and understand where the pressure is coming in versus what's happening, what's holding on. FMCG, around 0.4% higher. Pharma is also holding up, and Nifty Auto is pretty much on the borderline. What's losing out? It's mainly the Nifty IT pack, which is down nearly 3%. And that's how the sector did start trading as well towards the day-to-day. Metals is trading under pressure. There is a lot of chatter with regards to where US tariff implication goes. Though there is no clarity, we've almost crossed that date as well. Nifty Realty under pressure. Infra is also down and about in trade as we speak. So that's with regards to where the sectors are concerned. Let's build up the sector, the heat map with regards to Nifty 50 and see what the stocks are looking like. There you go. What's losing? Wipro, HCL Tech, Infosys, TCS. The top 4 losers coming in from the IT pack, and that's what is putting pressure. Tata Steel, JSW Steel, Hindalco, that's under pressure as well. Bharti Airtel, a 2.1% downtick coming in terms of that counter. And you have a Tech Mahindra and Grasim, which are trading under pressure. So that's the top ones that we're talking about. What's holding up is a M&M, and that's on the back of the brokerage note that we've seen that stock is holding up to gains. Pharma is on a winning foot. iShares is up in trade. Hero Moto, ITC, Nestle, Kotak, these are few of the other names that we have been tracking so far in terms of where the benchmark indices are concerned. But let's quickly look at few of the other names. Healthcare Global, if you can have that one on the screens. You have KKR, which is looking to acquire 54% equity in that counter. That stock is up nearly 2.5% in trade. You have Zydus Life Sciences. They've got an approval for a drug from the US FDA, on the back of which a percent upside coming in on a Zydus as well. Interglobe Aviation, no major movement on that one, but a target price hike of almost 15% is what we've seen in terms of Interglobe right now. Near the day's highs, but 1.3% is the kind of up move on that counter. You have Utkarsh, small finance bank, they're considering an equity fundraise, so that's another stock. RVNL will be speaking to the management as well on the back of the order win. So that stock is again down almost 2%, though there's an order win coming on that one. Bharti Airtel, we already mentioned about increasing stake in Airtel Africa. That stock is down a little over 2.5% in trade. And you have NBFCs that are in focus on the back of the RBI proposal to remove the prepayment penalty. So that segment is probably seeing some bit of pressure. Shriram Finance is under pressure. Bajaj Finance is down around 0.4%. So these are the broader names that we are tracking so far in terms of the markets. Clear pressure building up in terms of towards the end of the day. If you can just quickly have the Nifty mid cap and the small cap index, though Mika will get you to more details, but there is also the performance in terms of broader markets is also very similar, Mika, with regards to where the benchmark indices are concerned, right?
Yeah, a smidge better, but under pressure nonetheless. I want to pull up the Nifty small cap 250, which is doing fairly better when you look at it against the Nifty or the Nifty mid cap. It's seeing cuts of 0.95%. If you look at the advance to decline ratio on the Nifty small cap, well, you have 186 declines versus 55 advances losses on this index. Some of the counters that are heavily under pressure in today's day of trade is the Vijay Diagnostics, under pressure since the start of trade, down about 7.5%, followed by an EPL. It's seeing cuts of 7.3%, and even Nalco, a counter that gained quite a bit, last week, is down about 5%. We did have aluminium futures fall to an intraday low to 2.3%, so it could be some of the action coming from the commodity price perspective. You have Rajesh Exports, a Tejas that's also seeing cuts of 4.5% to 5%. And lastly, I want to quickly pull up the Nifty mid cap, down about 1%. Some of the counters that aren't doing so well on the Nifty mid cap. Well, you do have something like an L&T Technologies, but this is the whole IT pack and focus that is under pressure in trade today. L&T Tech down about 4.8%, followed by Steel Authority of India, as well as Bharti Hexacom and Hutco, seeing cuts of 3.5% to 4.2%. But on that note, let's welcome our guests for today.
Yes, let's welcome in Hemang Jani, our fundamental guest, and Gaurav Bissa, technical guest. Gaurav, coming to you first. What are your Nifty and Nifty bank strategies for the day now?
Good afternoon, and thank you for inviting me on the show. See, as far as Nifty is concerned, if you look at the 15-minute chart, half-hourly chart, or even hourly chart today, we are witnessing a small bounce back, and which is met by fierce resistance, and it's making lower lows. The immediate resistance, the next set of further supports are placed at 22,500 spot, which is about 30-40 points from the current levels. So in my opinion, if one has to play a trade or play Nifty, then I think buying around 22,500 would make sense, keeping stop loss of 70-80 points and playing for a bounce of 150-200 points. So you buy around 22,500 spot, keeping stop loss of 22,430 and buy for 22,700 kind of level. So if you look at the daily charts, there is still some positive divergence in RSI and MACD that again shows that there's a possibility that this current trend might see some exhaustion going forward. So that's a good sign. Another interesting aspect, which is Bank Nifty. While Nifty has been making new swing lows, same is not true for Bank Nifty. Today also it's down, but slightly outperformance as compared to Nifty index. But if you look at the chart levels, it has much more outperformance. The previous swing low was made around 47,800, and it has been sustained so far. So if somebody wants to buy, keeping stop loss of 47,800, one can buy again for a bounce back of 1,000 points. So in my opinion, between Nifty and Bank Nifty, structure of Nifty Bank is more stable. Bank Nifty index with some amount of divergences can be used to play for a bounce back.
Right, thanks Gaurav for the update. We'll come to your picks shortly. Let me also welcome in Hemang Jani. Hemang, good afternoon and welcome to the show. What is it that you're picking up? Because clearly it seems that the trend that is happening so far, Nifty is set for its worst monthly losing streak in 28 years. Taking into consideration the outflows by the FIs, the way the earnings season for the third quarter has panned out, and the growth expectation that we have from here on. Today, almost a 800 points crash is what we've seen. We are below that 22,250 mark. US growth worries are a key factor that we're tracking as well. Now, all of this put together, what would you advise investors to do? Where from here on?
Yeah, hi, good afternoon. I think a large part of the pain we've already seen in the market. And when you look at the Nifty, Bank Nifty in particular, almost, last 1 year's gains are wiped out. Nifty would be down about 2% for, last 12 months, which is surely, a bit of, concern. And what we feel is that while there might be a bit of a negative sentiment because of multiple factors, the key being the FI's sell flows and the way the US markets are actually panning out. But this is a time where, you just have to basically wait for the market to stabilize and look out for opportunities wherever the earnings are good or where the levels are good, rather than trying to be away from it, because this kind of a negative sentiment offers you a good entry point across many sectors and stocks. So we should gradually look to buy into it rather than getting negatively affected by the news flow around us.
So Gaurav, I'll come to you. Amid the market action that we've seen in the past several trading sessions, any top picks, something that's looking attractive at these levels now?
Certainly so. First would be a recommendation on Berger Paints. If you look at Berger Paints, you have seen a lot of correction happening in the entire space, and Berger for last few days has been stable one. Mild outperformance, ironically, from Berger Paints in the last couple of trading sessions, and a good bounce back has been seen. If you look at daily charts, it's bounced back after forming again positive divergence on RSI and MACD, a bullish MACD crossover. It's now on the verge of giving a breakout from inverse head and shoulder pattern on daily charts. This is a reversal pattern, and once confirmed, this can lead to a move towards 530. Keeping in the stop loss of 485, one can buy Berger Paints for the next 2 days. Second would be buy on Glenmark Pharma. As you mentioned in the beginning of the show, the pharma space is looking stable at this point in time. Some amount of outperformance has been seen. Many of the stocks, if you look at the stocks list which are on high point of day, you will find majority of them belonging to Nifty Pharma. So in my opinion, Glenmark Pharma is one that has seen a correction. It's giving a retest of the breakout area. One can keep a stop loss of 1270, play for target of 1420.
Well, moving on to the stock of the day, Mahindra & Mahindra. After several brokerages came out with positive note, and they are saying that there won't be much of an impact coming in from Tesla's entry into the Indian market. We have Puneet joining us with all those details.
Well, thanks for that, Sumit. So definitely a 50% upside. That's what Jefferies is projecting on something like a Mahindra & Mahindra. They mentioned that, a target price of roughly about 4,075 rupees per share, and mentioning that, it has been falling, of course, down roughly 18% from the Feb 7th, highs of about 3,200 odd levels. And it could be because of potential entry of Tesla. But, these kind of numbers are not stacking up in terms of the pricing. But, especially Jefferies mentioning that they're seeing limited impact on M&M with the entry of Tesla going forward. They're also seeing a gap in, portfolio specifically for something like an M&M, which gets, eventually will get covered because of 2 more launches after the BE6 as well as the XCV90. They've also said that, they find M&M's new orders of about 30,000 on the first day itself as being very strong. And according to their dealer checks, also it is continuing going forward as well. Finally, they are also estimating that M&M's core valuation of about 20 times price to earnings for FY26 is attractive, based on the earnings CAGR of about 18% seen over the next 2 years. But we also, just saw the calculation in terms of Tesla's entry. What could be some of the key models? So the first one, of course, is the Model 3, which costs roughly about $42,000 in the US market. That translates to 35 lakhs in terms of Indian rupees. But, including, freight costs about 2 to 3% and about 15% of the import duty, that was earlier about 110%. The cost anyway increases to about 45 lakhs. If I add in another 6 lakhs of, road tax, essentially, as well as insurance cost, the output comes to more than 50 lakh rupees compared to Mahindra & Mahindra's top end variant of XCV90, which costs roughly about 33 lakhs. So the stock price correction might be some kind of valuation re-rating, but the Tesla factor might be very limited in that aspect, and hence brokerage is also realizing this aspect, maintaining their earnings estimates for next year, and the outlook for EVs looks promising for Mahindra & Mahindra.
Thanks, Puneet, for getting us the details as well. Clearly, Somit, if you see in terms of M&M, the stock has been firing on all cylinders, right? And across, if you see from positioning, talk about EVs, SUVs to tractors, all segments have been strong. The stock itself has actually more than doubled as well in the last 3 years. Now, key over here is, what is the competition doing? Valuations almost are at historical highs right now. So taking all of these into consideration, will M&M be actually able to sustain that run is what we need to wait and watch and understand, right, for cross parameters.
Well, sustain or not, we can't say, but then given the fact that the stock has fallen or corrected so much, it definitely looks like the fall has been much more than what it should have been warranted, given the fact that there have been multiple global companies that have come into India and have not survived. There was Ford, there was Chevrolet, General Motors, which entered India and they could not make it big in India. because of various reasons that they had, and Tesla could be one of the same reasons as well. There's no guarantee that Tesla will succeed in India, but despite that, we have seen such a sharp correction in the share prices. And as you were mentioning, yes, M&M has been firing on all fronts. They have been number one when it comes to SUVs. EV also, they got around 30,000 booking, which is
catching up on EVs now.
Nearly 30% mark, 30% of the total size they got booking in the first day of the launch that they did. So, which is pretty much a strong sense that we are getting, at least when it comes to M&M based on the EV bookings and
Absolutely.
SUVs.
In fact, let's also check with Gaurav what M&M is looking at. Gaurav, what are charts indicating with regards to M&M? Because a good run in terms of the last 3 years, there has been a correction that has happened right now. Do you see further buying interest that's coming in now?
If you look at the charts since September last year, the stock has done nothing actually. It's more of a time correction that we're witnessing. People are just remembering the correction that we have witnessed in the last few weeks. But overall, even before that as well, if you see, it's been more of a yo-yo ride where there have been multiple attempts to break 2,600 and there have been multiple attempts to break 3,200 on the upper end. But both have been met by ferocious resistances and there have been failures. To keep the answers short, if somebody wants one, keep a stop loss of 2,620 and buy Mahindra. If it's not breaking out below this, and we have seen that not happening since June, July last year. So on that perspective, it can see another 10 to 12, 15% upside in coming days. So in my opinion, it's a risky trade, but worth doing it.
Right. Hemang, coming to you, after the sharp fall that we have seen when it comes to Mahindra and Mahindra, is M&M the top pick for you in the auto space, or is Maruti also looking much more attractive given that there's an export opportunity also coming in for Maruti going forward?
So I think M&M has been the best performing auto stock, both in terms of the actual business performance and stock price performance. And even the latest quarterly numbers, Q3 numbers were exceptionally good. And what was very encouraging was that on the tractor side also, the outlook is getting better. Now, because of Tesla's entry, there may be some concerns and it might be an excuse for the stock to correct. But I think given the fundamentals and the fact that the impact on the overall business because of Tesla's entry could be very minuscule. So I don't think one should really worry too much about M&M at this point. This would be one of the best performing auto stocks even for 2025 to our mind.
And Hemang, how are you looking at Bajaj Auto if you have to look at the two-wheeler space? Because now there is murmur whether Bajaj Auto will actually go ahead and rescue a KTM and will own a KTM from here on, because they're looking to invest almost, a good amount in the international arm now from here on. How do you look at this? Do you think this is a move with regards to rescuing a KTM and then an expansion in the export market?
So Bajaj Auto also has corrected, in the last, let's say, couple of months by almost about 15 to 20%. And KTM part, we feel that we need to really watch out for the further developments, whether there is going to be a significant, amount that the company is looking to invest, or exactly what is going to be their strategy is something that we will have to wait out for. But purely on the basis of the fundamentals and the fact that there is a bit of a moderation in the growth when it comes to two-wheelers, from 7-8%, it's come down to 3-4%. So I think, we should just wait for some more clarity and let the stock stabilize. At the moment, I would not be comfortable buying into Bajaj Auto at this point.
Got it. Another sector we should focus on is the IT sector, which is, under pressure, and IT stocks have cracked as the top loser in terms of your sectoral indices. But is this an opportunity to buy or just the beginning on a part of a correction? Well, we have Rucha joining us to present both the sides of the story. Rucha, what do you have for us?
So definitely IT sector is down in the red, about 3% Nifty IT. But let's look at the bull and the bear case over here. I'll start with discretionary demand. Well, I remember that in the last quarter, many of the IT company management talked about how discretionary demand is recovering and therefore clients are also increasing their spending. But remember, this was in the month of January. On the bear side, the higher inflation expectations which came out yesterday can actually hit the spending over here, because it can decrease increase the room that the clients have to spend on these discretionary expenditure, and therefore could affect the top line of the IT company as well. But moving on, let's look at how the sectoral or segmental vertical analysis indicate. Well, the bull case over here indicates that BFSI and the US segments are recovering, and this is what actually we saw in most of the IT companies. In fact, all of the IT companies in the last quarter. Remember that BFSI was actually very muted over the last couple of quarters, and this is the sector or this is the segment from which most of the IT companies get majority of their revenue from. But on the bear side, that the retail, healthcare and manufacturing, which accounts for also a significant portion of the IT companies' revenue, are still under pressure. So a segmental analysis or vertical analysis is also giving us a mixed picture over here. But lastly, I want to talk about valuations, and this has been a peculiar point for most of the investors in this kind of a market, and this is very important for most of the IT companies which have run up in last 2 years. The bull case is that the top tier IT companies are attractive in terms of valuation, the likes of TCS, Infosys, Wipro. All these companies, the top tier IT companies are looking good in terms of valuations, but the mid cap companies valuations are really expensive because they have run up a lot in last 4 to 8 quarters, and this is a valuation picture. I'll first start with the top tier IT companies over here. TCS, I'll compare FY26 PE versus the 5-year average. TCS trading lower, Infosys trading almost at par. HCLT is the kind of exception over here because this was one of the top performers, and that is why it is trading above 5-year average. But again, Wipro and Tech Mahindra as well, almost near to its 5-year average is what we could see over here. But also, let's move on to the next slide and compare what our mid caps doing over here. LTI Mindtree, 27.2 versus 32.6. This is again a top tier company. But Coforge, look at the kind of valuations, 36.3 versus 34.3, higher than the 5-year average over here. Emphasis largely around LTTS. It is an underperformer because the ER&D space didn't do much well, and Persistent System. Look at the FY26P, 50 times versus a 5-year average of 39 times. So mid cap IT is really bad or expensive in terms of valuations, and top tier IT companies looking decent enough, but I would say better than the mid cap IT companies. So this is the overall picture of the bull and bear case for the IT sector.
Well, thank you, Rucha, for giving us that extensive link on the Nifty IT Index. Gaurav, coming to you first. The Nifty IT Index is the top sectoral loser in trade. The index has fallen below its 200 DMA and also broken the crucial 40,000 level. How are you looking at the Nifty IT Index on charts?
See, if you look at the Nifty IT on a daily or the weekly charts, and there's a triangle pattern breakout that we witnessed in early part of July last year. Since then, we have seen the IT index trading above this breakout area. Even if it falls another 2 or 3%, I think that is a time when it will make a retest of the breakout. And at that point, I would be more interested in buying the IT names, whether mid cap or large cap names. But at this point in time, I would not call it a negative one. For me, it is becoming more and more lucrative. On daily charts, yes, your indices is trading below the 200 DMA, but so are many of the stocks. But for me, what is more important is the triangle breakout retest, which is going to make it extremely lucrative going forward. It has been an outperforming sector for a while now, and if it sustains above the breakout area, I think it will come back to the good books of buyers in a short period of time.
But let's move on, and we have the management of RVNL joining us right now. In conversation with us is Mr. Mrityunjay Pratap Singh, the Director of Operations at RVNL. Welcome to the show, Mr. Singh. Multiple orders, a 156 crore project from the Southwestern Railway, a 554 crore order from the Rail Infrastructure Development. Amid all of these new orders, where is the company's current order book right now, and how much do you expect to execute in Q4?
Yeah, thank you very much, NDTV Profit, for inviting me and giving me opportunity on this show. The current order book of RVNL is roughly 97,000 crores, which roughly 47,000 crore is the orders we have secured through bidding in the current year or last 2 financial years. And in Q3, we hope to continue the momentum, and we hope to have our revenue guidance of 22,000 crore achieved during the current financial year.
But in terms of, what kind of order bookings, in terms of what is executed in Q4 FY25, what are your expectations? And could you maybe give us an estimated timeline on how the 97,000 crore order book will be completed in the next 2 to 3 years?
Yeah, this 97,000 crore order book comprises of both the railway sector as well as the other sectors also, including the projects which we have won abroad also. And we hope to continue this this book completion in next coming three to 4 years time.
Right, sir. Sir, with your order book at around 97,000 crore, I believe with 1 month to go, you will easily achieve the 1 lakh crore guidance that you had given for FY25. Any guidance for FY26 also that we should watch out for, sir?
Yeah, with the current momentum, we certainly hopes to, because certain bids are under opening or finalization, and we hope to gain the total order, reach the order book of around 1 lakh crore by the end of this financial year. And as far as coming financial year, that is FY 25-26, our expectation is much bigger, and we want to make our order book take it to say 1,50,000 crores.
Okay, so a target of 1,50,000 crores in terms of order book. But sir, I want to talk about your margins. In terms of your Q3 year-on-year numbers, they were fairly stable at around 5.2, 5.3%. 9-month FY25, you've seen a slight contraction. So in terms of the margin trajectory, what should we expect, it to go in, say, in FY25, and could we see it inch upwards slightly in FY26?
Yeah, we hope to raise our margins in the coming financial years because there are some projects which we have won at better margins because there is an intense competition in many sectors. So we are diversifying in some of the sectors where competition is not that intense, and the larger we are focusing on the larger order books, be it an irrigation sector or road projects on BOT or HAM projects, where the order size is pretty large and their margins are also better, and revenue visibility is also for the longer duration on those projects.
Right, sir. Lastly, before letting you go, sir, can you just share your outlook when it comes to the metro and railway electrification segment? Are you planning to increase your focus in these segments, given that I believe margins are a bit higher on these two segments?
Yeah, obviously, metro projects are one of our priority segment, and we are already executing railway metro projects in 7 cities. And the currently one Bangalore suburban project is one of the major projects which we expect to have a very good margin, where our order is on roughly 10% above the estimated rates. Similarly, the railway electrifications are also good margin projects, and the current SWR projects, where we are the lowest, is also on very good margin, where our percentage is roughly 17% above the estimated cost. So we hope to continue this momentum in metro sectors, railway electrification sectors, transmission line sectors, and many other sectors also.
Got it, Mr. Singh. Thank you so much for joining us today and giving us closer insight of what the company expects in the coming financial year. And with that, Gaurav, I'll come to you. Your thoughts on something like an RVNL? It's been under pressure year to date, down about 15%. But if you look at your one-year gains, it's seeing gains of 36%. How does it look on the charts?
Yeah, overall, the long-term trend remains very strong. It's been forming higher tops, higher bottoms. On a lower time frame, yes, there has been correction, and it's bounced back from a falling channel support. If you ask me whether one should be buying here, I would not be too keen or in a hurry to buy. The simple reason being that it's at the middle of the range. The supports were seen at 330 levels, whereas we have a hurdle at 400. So it's middle of the range. I don't see a trading bet here. But if somebody has a long-term horizon, then I think these are good enough levels. We have seen, again, divergences, bullish crossovers, and everything positive that one stock should see. So long-term structure is positive. For long-term, one can add the stock, but if somebody wants to play for a trading bet, I would recommend to avoid this.
Hemang, coming to you, sorry we didn't take your view on the IT stocks. Given the sharp fall that we are seeing today, do you think that this is unwarranted and global issues won't actually impact Indian IT companies that much? How are you looking at the IT pack currently?
I think IT stocks are going through a bit of an underperformance, primarily because of the signals coming from US. But when you look at the numbers and the management commentary, and in some cases the growth outlook, it's looking quite okay. There is no real negative, data points talk about. The only thing is that some of the mid-cap companies are sounding far more confident about the growth, something like a Persistence or Coforge, but again, they are quoting at a much higher valuations. So I would, think that if there is any material correction in names like TCS or HCL Tech, I definitely think that would be a good, entry point. At the same time, I would not be comfortable buying into a Persistent and Coforge, because of the fact that they have remained quite expensive even at this point.
So TCS and HCL Tech could look better if a warranted correction does come in place. But on that note, we'll take a quick break. But Hemang, Gaurav, thank you both of you all for joining us and giving us our viewers more insights. And till then, it's a quick break. Stay tuned to NDTV Profit. Lots more lined up on the other side.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Welcome back. You're watching India Market Close. The pressure in terms of markets does continue, and I think it's the global impact that we're seeing so far as well. But one important aspect that we have on the show is all the chatter that Somit hears from the dealing room. Somit, what's the buzz that you're picking up so far?
Well, firstly, it's on Chola Finance. Now, today, if you look at all the NBFCs, they have been trading lower in trade, and that is largely because of the RBI draft regulation that has come in, where they are looking to waive off prepayment charges. But what I understand from dealers is that large institutions have been accumulating Chola Finance at lower levels. Hence, if you look at even the stock price move, it was down around 3% but right now it's just down 1% in trade. Apart from that, it's Vedanta and Nalco. Now, dealers are indicating a paired trade here. Now, and this is because of the fall in alumina prices. Now, they are saying that this is negative for Nalco and positive for Vedanta. So, what dealers are suggesting here is go short on Nalco and go long on Vedanta. That's the pair trade coming in from dealers on Vedanta and Nalco. And what I understand is that fall in alumina prices is negative for Nalco and it's positive for Vedanta, given the fact that it still buys nearly or more than 50% of its alumina requirement from the market, and hence it could be positive for Vedanta over the longer term. Hence, dealers might be suggesting this pair trade. And lastly, it's VIP Industries. Now, what I'm understanding is that there's a potential stake sale by promoter or a fundraise that could be done from a private equity investors. Now, this is pretty much on cards and might happen soon, is what I'm picking up from my channel checks. And earlier, if you look at, the company has been suffering from a lot of issues when it comes to high inventory levels, stiff discounting, lower sales velocity, employee attrition. These have been ongoing problems for VIP Industries, and they have not been able to recover in a massive way from these issues. And right now, they might be considering a fundraise or a stake sale by the promoter, which is pretty much on card. So keep an eye out for VIP Industries as well.
That's going to be an interesting one with regards to VIP, because the kind of market share loss that they are sitting on also is massive, and the capacities that they have added is also pretty much underutilized, right? So VIP is going to be an interesting one. But let's also welcome in Hemen Kapadia from DR Choksi Finserv. Hemen, good afternoon and welcome to the show, and a pleasure to speak to you after very long. Before we get into stock-specific action, what are the levels that you're tracking with regards to Nifty as well as Bank Nifty? Because clear pressure that does continue.
A very good afternoon to you, Hira. Thank you for having me on the show. It's always a pleasure. And yes, it's been ages. Great talking to you after a long time. In terms of Nifty levels, frankly speaking, that 22,800 level was quite important, Hiral. And now after multiple attempts and days, we finally breached that. So on downside, the levels that one needs to keep an eye on is 22,522. We are close over there. Sorry, 22,526. And the next level below that is 22,300 and 22,125. So 22,526 is a significantly important support level here. Let us see whether this holds or no. Up till now, except 2200, no levels have been given their proper respect. There's a bearish gap today as far as the Nifty daily chart is concerned, which is not a very positive sign. Having said that, markets are deeply oversold. We have a holiday-filled expiry week. I believe this bearish daily gap today should get covered in the next 5 trading session itself. So, frankly speaking, difficult to put a level where you can expect a reversal, but fair enough to say that we are deeply oversold. I won't say downside appears limited, but I think it doesn't make sense to short anything now. Let's just wait for things to play out. Maybe things begin to pick up after the expiry. But as of now, 22,526 remains crucial. Either.
Right, sir. So, and your view on the Nifty Bank Index?
Okay. If you look at the Nifty Bank Index, the corresponding levels. Okay. Firstly, there is some relative strength. The Nifty has made a new low, or has made a new low and made another new low. As far as the Bank Nifty is concerned, Somit, the low cash market levels obviously posted on 27 Jan of 47,844. That has held. So relative strength coming in. It could also be because of the fact that Kotak Bank has done nothing for 4 years. It's now looking better, and even HDFC Bank. So frankly speaking, a little bit of relative strength. But yeah, in terms of levels, you have 48,200 important support. Below that is the swing low of 47,844. Upside 49,057 is resistance, followed by 49,800. So some relative strength coming in, a bearish gap coming in nevertheless. But yeah, there is some, I wouldn't say respite, but yeah, some relative strength coming in as of now. Somit.
Right, sir. And what would be your top picks, sir?
Okay. Well, that seems like a slightly difficult thing. But yeah, like I said, markets are deeply oversold. Wouldn't like to short anything at this point in time. So firstly, I have a buy on GAIL. GAIL looks interesting. Oversold, positive divergences, crossover buy by the mechanical indicators. Somit, a recovery is what we are playing for. I mean, the whole market is that way. So a buy on GAIL at 165, stop loss 159, target 177. Secondly, a buy call on Union Bank of India. Okay, the Bank Nifty is looking relatively better, like I mentioned. But HDFC, ICICI, and probably Kotak Bank would account for maybe more than 50% of the weightage of the bank nifty. PSU banks have shown relative strength, especially some of the smaller ones, Somit. So Union Bank is not an exception. I'll just take 30 seconds more. We posted a low of what, as far as Union Bank is concerned, 100.81 on 13 Jan, and we haven't even come close to that, where the market has gone haywire. So it's made a couple of higher bottoms also. Buy on Union Bank at 116, stop loss 111, target 126. I believe it has the potential to surprise on the upside once the market turns even more. Somit.
Right. So that's with regards to the picks coming in from Heyman. But let's move on to the next segment, which is the top 3 stocks that are buzzing in trade today. You have the likes of a Bharti Airtel on the back of, in terms of the Africa business. Pfizer is in focus, and EPL, which is trading under pressure. Let me head across to my colleague to get us more details. Anushi, what are you picking up on the 3, and what's the kind of reaction that has come through on the back of the news?
Hey, afternoon, Hiral. I'll start off with Bharti Airtel firstly. Now this is in focus now if you look at Bharti Airtel, it plans to increase its stake in its Airtel Africa, which is its subsidiary. The company already holds about 57.3% of a stake there, and it plans to acquire about 5% of an additional stake in Airtel Africa. If you look at the market cap of Airtel Africa, it stands roughly around 55,000 crore. So this 5% stake purchase could imply a cash outflow of around 2,500 crore for Bharti Airtel. Do note that Airtel Africa's share price has jumped 46% in the last 1 year, and Bharti did this Airtel Africa IPO back in June 2019. This is at a 70 pence consideration as compared to a current market cap of around 138 pence. What we are looking at for Airtel Africa, it has a dividend payout policy of around 85% of its free cash flows. So Bharti Airtel, if we see in comparison, it is yet to come out with its own dividend policy. So a key holding re-rating valuation for Bharti Airtel is something that we would be looking out for in terms of where the dividend policy is critical for the visibility on the capital allocation for the business and rewarding analysts as per the analyst that we are looking at. Second, moving on to Pfizer. Now they have entered into a marketing and supply agreement with Mylan Pharma. This is for marketing and sale of their 2 brands of the companies, and the agreement period for the same is around 5 years. This would be within the territory of India itself, and this agreement with Mylan is expected to enhance the distribution and clinic presence of the products of the company. Do note that Mylan already has a good presence in central nervous system therapy area and is there in the neurology and the psychiatrist areas. Lastly, coming to EPL, now this is in focus after Epsilon. It's planned to sell 24.9% of stake in the company to Indorama Netherlands for a consideration of 1,908 crore, and this stake sale that we are looking at is at a price of 240 per share, which is a 1% of a premium to its current market price. Epsilon is the current promoter of the company, holding about 51.45% of the stake, and Indorama Netherlands has a listed entity, that is Indorama Synthetics, in which it holds 38.6% stake. So these are the top 3 stocks in trade today, and why they're in focus.
Right. Thanks, Anushi, for getting us the details. Interesting moves in terms of EPL. Bharti Airtel also at the day's low, Somin. It's very interesting, I mean, in terms of the company looking to increase stake in the Africa business. But what is it that the street is not really happy about, according to you?
Well, it seems like an unwarranted move is what I'm picking up after speaking to multiple analysts and investors who have actually been a part of Bharti Airtel for a very long time. So what they have said is they will be investing or increasing their stake in Airtel Africa, which is the subsidiary. Now Bharti Airtel already owns around 57.3% stake in Airtel Africa, and they plan to acquire additional 5% stake, most likely from open market, because they haven't disclosed from how they will acquire the stake. I'm assuming it will be from open market, and given the fact that Airtel Africa's current market capitalization is close to 5.1 billion pound, that is close to 55,000 crore rupees, this 5% stake purchase could cost them around 2,500 crore rupees. Now this amount itself, 2,500 crore, must not be big for Bharti Airtel, given the fact that they generate a lot more free cash flow every quarter. but it seems to be unwarranted as of now, because a few years back they did this IPO of Airtel Africa where they divested their stake. In fact, to be sure, in 2019, June 2019, they did this IPO at 70 pence. Currently, it's trading at 138 pence. So why are they buying back some stake from market at a higher price at this point of time? And at this point of time, also because the company is still not come out with that dividend policy. So the street is also not pretty much clear on what is the capital allocation policy of the company going forward. They have not been, how will they reward investors given the fact that now the company has been generating a lot of free cash flow. So that is also something crucial that street wants to know, and there's no clear answer on that. And in front of that, the company is going ahead and buying more stake on Airtel Africa. So that's something that has been concerning the street, and hence the stock is at days low.
Interesting move on that one. In fact, let's also get in Siddharth Khemka, head of research as well. Siddharth, good afternoon and welcome. As Somit was just taking us through what's happening with Bharti Airtel, what is the key according to you with regards to where a re-rating for a Bharti Airtel goes, or what would you advise investors to do?
Yeah, I was listening to what Somit was saying. I think, yes, in an environment where the domestic business is doing very strong, cash flow generation has improved, while the market would have loved to see some more, you can say, value unlocking from the African business. I think with the kind of performance that the Africa business is doing, we saw strong double-digit growth in Africa business. Revenue was up almost 5% Q on Q in Q2. EBITDA also significantly above the expectation. So I would believe that it's a good step at this point in time to add up to your stake in the African business. The domestic business too is doing very well. The key trigger has been the tariff hike and the increase ARPU, because market share gains, I think, is more or less stable now. And the key trigger going forward would continue to be the increase in wireless ARPU, as well as market share gains in some of the newer businesses, the broadband business as well as the enterprise segment. But I think overall, Bharti has done significantly well in terms of the financials. We are expecting a strong CAGR, almost 15% revenue CAGR and 19% EBITDA CAGR over the next 2 years, mainly driven by tariff hikes as well as growth in the broadband business, as well as good contribution from the Africa business. So I think it's a good opportunity for investors to keep adding Airtel at any dip. We have a buy rating and a target price of almost 2000. We have a target price of 1990 on Bharti Airtel.
Right, sir. Okay. So how's the metal pack looking like? Nalco is a top F&O loser in trade. It's down around 5%. Anything that has been concerning to you when it comes to Nalco?
I think we saw metals pack outperforming last week. There were few news reports, A, on the China front, B, on the coal prices, that being low, coming down. So I think both of these and the base metal prices, that was improving. Among the metal stocks, I think what we like, we believe Hindalco can do better in this environment, given its presence, Novelis presence inside US, where the reciprocal tax impact will be minimal. There will be some impact on the import of scrap, but that will be very minimal according to us, as well as the value addition that Novelis is doing through the in its can business and the automotive business. That again looks pretty steady and stable. The other one from the domestic side, what we like, JSW Steel is something again we like from the metal space, which is doing better than compared to some of the other metal companies in India. It is on track to achieve a 50 MTPA capacity by FY31. That will be a strong expansion over the next few years. It is one of the most efficient cost-wise player in the metal space, plus a steady volume growth of 8 to 10%, leading to an EBITDA CAGR of about 15%. So that makes us positive on JSW Steel. We have a buy rating and a target price of 1100.
Right, so that's a 1100 target price coming in on a JSW Steel. In fact, the key is why India needs safeguard duties on steel imports. That's the crux that we're looking at. In fact, Mika joins in to give us little more details on the same as well. Mika, over to you.
So, steel counters were in focus last week because safeguard duties were expected, but nothing has been announced so far. Now, the latest news flow that came in was when Trump announced 25% tariffs on all steel imports on February 10th. Now, in terms of who got impacted, well, the countries that got directly impacted included Canada, Brazil, EU, Mexico, South Korea, and Japan. And directly, India did not get impacted because of our immaterial exports to the US, which was only 1% as of FY24. But now there's a talk about how the steel exports could be redirected to India. India has free trade agreements which could allow more imports from other Asian players, and it could be, according to ICRA, there's a potential redirection of 4 million tons per annum of steel exports from Japan and South Korea initially. If you look at India's steel import picture as a whole, China already accounts for 25%, Korea is at 20%, Japan is at 17%. Vietnam has also emerged as a player at 8%, and other countries aggregate to 28%. And in terms of India has already been facing pressure from imports, especially cheap steel imports from China and Vietnam since FY24, and more imports being redirected to India could bring down domestic steel prices and thereby hurt the industry's earnings in FY26 as per reports. Now, an update on the safeguard duties, well, the investigation for anti-dumping on China and Vietnam exports to India was initiated in September 2024. As per different managements, safeguard duties of around up to 25% was expected in the first 2 weeks of February. But now, as of today, no announcements have been made. And this is very important for the sector. Anything above 5% would be positive for the Indian steel industry. The safeguard duties could bring domestic steel prices up, which thereby helps the company's margins as well as their capex investment as per Morgan Stanley. And a potential duty could allow companies to hike their prices by 2,000 to 2,500 rupees per ton as per Nuava research. Lastly, if you have to talk, if the safeguard duties do come in, whether it's 10% or 15%, which is what analysts have been expecting, there could be a bump up in the FY26 consolidated EBITDA estimates of various players. For example, Steel Authority of India, 40% hike in their FY26 estimates on account of a 15% duty. JSW Steel at 28%, Tata Steel at 22% jump to their consolidated EBITDA, and JSPL could see a 15% hike to their consolidated EBITDA if a 15% duty is announced.
Right. Hemant sir, coming to you, how are metal stocks looking like on charts? Do you prefer the steel names or the aluminium names like Nalco, Vedanta?
Okay, I'll just take first 30 seconds, Sumit, to run a brief about the Nifty Metal Index, Sumit. We've been moving sideways. There is relative strength coming in. For the last 6 weeks or so, we've held, and the levels, the lows haven't been broken, Sumit. So a little bit of relative strength coming in. If you look at international copper, it's on a tear. It looks good, probably for the next few months or maybe even half the year. So that's the setup internationally. Over here, like you mentioned, Hindalco is something which I used to like, but it has had a move of sorts. But even a Tata Steel, I mean, they've all made bases of some sort. So difficult to differentiate between a Hindalco, Nalco, and a Tata Steel and maybe Vedanta. But generally speaking, they all seem better. I think steel looks slightly better than alumina right now, relatively, Sumit.
So that's with regards to where metal names are concerned. But moving on the sidelines of NASSCOM Technology and Leadership Forum 2025, my colleague Haripriya had the chance to catch up with LTTS CEO Amit Chadda and Cognizant CEO S. Ravikumar and spoke to them about the way ahead for the space. Let's quickly listen in, taking into consideration the sector has been under pressure today.
I do expect the industry to have a double-digit CAGR for sure.
The company, sir?
I do have an ambition to have a double-digit CAGR for sure, right? So both of those. And I do believe that LTTS, with our differentiated offerings, will grow faster than industry average in the current year as well as in the future years.
You've also recently made acquisitions, which was kind of the drag on the numbers that you spoke about in the quarterly results. So when do you expect the acquisitions to start paying off? When do you aim to be accretive on these acquisitions? And what's the kind of value that these acquisitions are bringing to you?
So number one, let me start with the value and then I'll come to the numbers. See, if I look across, as I took over as CEO about 4 years ago, there was a couple, 3 areas that I thought we were not playing in. We were not playing in the Middle East. And for that, we went ahead and acquired Smart World, which I believe has capabilities that gives us a sure foot, a meaningful foot in the Middle East. Second, we sat down and we said cybersecurity as part of that was an area that we were not there in. So again, Smart World brought with this cybersecurity. Net result, the Maha-Cyber order that we received, which was $100 million last year, a lot more partnerships in that area, and globally we've been able to expand cybersecurity offering to all our customers.
You know, the way I see it is the total addressable spend for companies in the IT services space was about what was spent on enabling technologies. Now, over the years, technology is no longer an enabler for businesses. It's actually the business. Software is actually deeply embedded into every business in every industry. So if you look at that paradigm, the addressable spend is very different, because it's not about enabling a business, it's about the business, which means core products which are built on technology, core services which are built on technology is your new addressable spend. So the TAM, the total addressable spend, is very different. With the advent of AI, what you're really doing is you're applying technology in operations of enterprises. As you apply technology in operations of enterprises, you are unlocking that service pools for more leverage. So we could address those service pools, those are net new service pools. To address those service pools, it's a force multiplier, but to address those service pools, you need capability at the intersection of technology and a domain. And if you have capability in that domain, operations strength or industry strength, and then you have technology strength, you can actually do that. So the total addressable spend significantly changes.
We can say sky is the limit with AI?
I mean, with this, the total addressable spend is, very different. It's not just the cost budgets, it's the revenue budgets, it's new product development, it's operations budgets of enterprises.
Right. Also, sir, with the talent, you spoke about the talent, the change in talent as well with AI. We saw that the headcount was basically down for the company the quarter ago. Does this anything have to do with increased efficiency and productivity that the company is seeing? Is that the kind of, can we read into it?
It's a combination of things. We are running our business more efficiently with higher utilization. Of course, I've spoken about how 20% of code is written by machines. So that also helps us to do more for less. But we also believe when you do more for less, you will actually end up getting more. That's the paradox. When you do more for less, it is highly productive. More will be consumed in technology. That's the elasticity technology has.
You know what's interesting, Somit, with regards to IT is, the kind of crack that you're seeing, you're almost at the day's lowest levels. The question is whether it's time to buy or wait and watch, because clearly your managements are actually calling out a recovery as well as they're talking about healthy client spending, whereas you're talking about high inflation expectations that could probably hit spends in the US as well, right? So it's a very difficult question to understand what to do, and I think the best is to ask Siddharth as well on it. Siddharth, how are you looking at the sector and what would you advise? Because from what it comes across, markets are not really reacting well in terms of the inflation number that's coming in, which could hit spends, but the managements are really not calling out any concern.
Yeah, Hirel, I think at the start of the year, we heard many of the management talking about the recovery in the discretionary spending as well as the decision making cycle coming smaller. So the deal cycle have been coming down, indicating a faster decision-making cycles, especially in the key markets of US and Europe. However, things have changed in the last couple of days with the talk of the Trump trade policies. I think there is a bigger concern about the impending inflationary impact. A lot of large key US companies have also sounded out caution going ahead. So it's a mixed trend, I would say. From last year, definitely the IT spending is going to go up, but we need to see definitely, for example, some of the companies highlighted that there is a priority in terms of the cost. So wherever the projects that are key to improve cost, those projects are being taken up, while some of the other projects are being a little slowed down. Having said that, I think in terms of any correction, this would be a good opportunity for investors to look at IT, because things are looking up in terms of the demand environment. Plus, you also have the rupee at all-time low. That also supports the sentiment. Definitely, there will be some volatility because of the you can say uncertain political environment, policy environment in US, which could sway things either ways. Having said that, again, some of the companies are the tier two companies are reporting significant growth, where we believe that the tier two will outpace growth in terms of compared to tier one, where we prefer something like a Coforge and Persistent in the mid cap space. Within the large caps, where valuations are comfortable, HCL Tech clearly is at a very comfortable valuation. Along with that, LTIM is the other large cap stock that we like from the IT space.
Hemant sir, coming to you on the IT index, it has slipped below the 200 DMA. It has fallen below the 40,000 level. That was a crucial level for the Nifty IT index. How is the index looking like on the charts?
Moment, it doesn't look very good. We formed a rounding top, which is basically a distribution pattern, a bearish pattern. And like you said, we've slipped below the 40,000 level. That's a low posted in November 24. So I think one can wait just a wee bit. There seems to be further pressure around the corner. There was a high of 38,559 posted in February 24, which is expected to be the next support level. But if you look at the medium-term picture, it's gone for a toss, and any recovery, at least in the medium-term point of view, doesn't look like sustaining. So I think this is going to take some time to play out. So I would prefer to wait a bit. There is nothing remotely positive as of now on the charts, even from a medium-term point of view. Yes, longer-term, there is still some hope. But I mean, the longer it takes for the recovery to come in, even the bigger picture gets damaged. So technically, situation not looking very pretty, Samit.
Interesting, not pretty situation in terms of where IT goes. But you know what's interesting over here is the commentary that we hear from the management, but it's going to be a wait and watch from here on. But let's quickly slip into a short break. On the other side, we get to the top by today's Sell Tomorrow picks and all the other brokerage calls as well. Please stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Close on NDTV Profit. The top two brokerages that stood out for the day. Firstly, it was on Citi on Indigo, where they have hiked the target price to 5,200, and the second one was on SBI, where InCred has downgraded its rating on the stock. We have Anushi joining us with more details on both the counters.
Hey, so I'll start off with Citi on Indigo first, wherein they've maintained a buy call but have hiked the target price to 5,200 now as compared to 5,100 earlier. Now they've opened a 90-day of a positive catalyst watch on the stock basis. A lot of reasons that they've highlighted. First is the pickup in overall traffic that they're seeing in terms of demand, and overall strong market share is something that is going to benefit Indigo going forward. Significant improvement in their PLFs, that's the passenger load factors, in Q4 FY25 is expected, which is again a seasonally weak quarter for the business. And even a part of this increase in overall demand that we're looking at is also on the account of Mahakumbh, which had taken place in the first 2 months of this year. Higher demand could also manifest itself in better yields for the fourth quarter going forward. Now the second one that we're talking about is InCred on SBI, and quite a bearish outlook on the stock if we look at in terms of the key highlights that they've given. They've downgraded the stock to a hold from an AND rating, and I've cut the target price from 1,000 to 795. So what the note is essentially saying is to brace for lower return ratios going forward. They expect the return on asset to moderate and ROA to decline to 14% over the fiscal year 2026 to 2027. Non-core income contributes materially to ROA, which is currently difficult to forecast going forward. So core earnings growth could be impacted by the recent repo rate cuts as well. However, if you look at the risk to reward ratio, that is better at large private banks as compared to something like SBI. So downgraded to a hold, and this is the target price of 795 is what InCred is saying about SBI.
Right. Siddharth, coming to you first on Indigo, given the fact that Q4, which is usually a lean quarter, but given the fact that it was Mahakumbh this time, and numbers could be on the higher side for Indigo, how are you looking at this counter? Is it a good buy at this level?
Yeah, I think definitely Indigo looks interesting. In even Q3, they have reported a good set of numbers, and I think the domestic market is witnessing strong growth. But what also is supporting a long-term investment view on Interglobe is the global markets, where they are not only improving their brand presence, they are expanding a lot of new routes, and going forward, they are looking at a 30% share from the India to the global market. So that kind of, so domestic market, they are already excess of 60% market share. In the international routes from India, they are targeting 30% market share, where the profitability is much better, the occupancy ARRs are much better, and I think the company is doing well with the Q4 numbers expected to be strong. Kumbh has been a big factor. We'll also have some of the other domestic events like IPL also coming up where travel will improve. So overall travel hospitality is a space that has been witnessing strong growth. We have seen strong business from the hotel companies as well. Indian hotels is another topic in that space. So we like Indigo as well as Indian hotels from the overall travel tourism space.
Siddharth, do you happen to cover EPL as a stock?
Unfortunately, I've not looked at the stock.
Well, it has hit a low circuit of 10% after the morning announcement that came in, where they said that the existing promoters will be selling a part of their stake to another company, which is actually the promoter company of Indorama Synthetics, which is listed on the Indian Stock Exchange. Now, analysts believe that the stake sale does remove the overhang of promoter selling its stake, but given the fact that there is no open offer coming in here and the deal has been done at a current market price, this could be kind of negative for the stock, and hence the stock has hit a lower circuit of 10% in trade today.
Right, so that's with regards to where EPL goes. In fact, the power stocks are also in focus as summer heat is increasing with the rising demand, energy storage boosts and rating upgrades. Mika joins in to explore the key trends, the top gainers and the market triggers that are driving this rally.
So I don't know about the summer, but the stocks have definitely heated up in the past week. When you look at the BSE power and utilities indices, it's up over 4.5% in the last 5 trading sessions, and this is just last week. Now, in terms of the stocks that could see strong gains in that have seen strong gains in the last 5 sessions, you have 18% NLC India, JSW Energy up 15%, followed by a CSC and NHPC at 10%. Now, in terms of the potential triggers, well, number one was this power consumption trend that has picked up. Jan 2025 saw 2% year-on-year growth in power demand. However, Feb 2025, and this is just the first 2 weeks, has seen a 6.6% year-on-year growth as per GM financial data. Even if you see the peak power demand is up 6% year-on-year to 237 gigawatts in Jan. The first 2 weeks of February showed the same kind of trajectory, and this suggests a likely rebound in power demand in coming months. Now, the second potential trigger is the boost that energy storage as a theme got last week. The government has mandated 2-hour storage in all renewable capacities. This can be in the form of battery energy storage as well as pumped storage system, which has put stocks like SJVN, NHPC, JSW Energy, Tata Power and Adani Green in focus, which are already involved in the space. And lastly, we've seen certain ratings upgraded in the past month. Last week on Friday itself, we had Adani Energy, JSW Energy and Suzlon all gotten and buy call initiated. In the last month, we've also seen NHPC upgraded by CLSA to a buy, Tata Power upgraded to a hold by HSBC. We've seen JSW Energy upgraded to a buy by both Investec and Elara in the last few days of January, and Suzlon Energy was also upgraded to a buy by Nuvama Research in the last week of January.
So interesting moves. Thanks, Mika, for getting us the details. Siddharth, how are you looking at the power companies, specifically the ones which have seen an upgrade? Would you still be positive?
Hiral, I think one more thing needs to be added to the list that we just discussed. So we saw that Asian coal prices last week saw the lowest since 2021, and that is because of the inventory buildup that is happening because of a mild winter and slower demand growth in China. That is also helping both the steel companies as well as power companies getting a lower raw material cost in the form of coal. Plus, we have the added advantage of the improvement in the power demand in India. That is also supporting the overall thesis for power sector. What we like within the power space, not to mention another factor, was the Prime Minister's visit to France, where they are talking about adding a lot of nuclear power capacity going forward, where some of the domestic utilities will take forefront in developing and managing the nuclear facilities. So NTPC would be at the forefront from the government side to manage some of these nuclear power facilities that would come up in future. So coming down to stocks, we like JSW Energy, which is our preferred pick, followed by Tata Power, both of where we have a buy rating. NTPC is something that we like more from a long-term perspective from the power space.
Right. So that's with regards to where power stocks are concerned. Before I just, go to one of the managements, Heyman, very quickly, in terms of power companies as well as the consumption companies, specifically if you look at the durables, any topics where charts are looking interesting?
Most of them are corrective here, in line with the rest of the market. So not much to pick and choose, but from a slightly longer term point of view, if I have that option here, I think Tata Power as one thing looks good in the sense it looks like a correction within a bull market. I know if it come off from a high of 490 to 330, that doesn't is a bit disconcerting, but the bigger picture remains bullish. And if I can venture into a couple of these PSU companies here, something like a PFC and REC, they've had a phenomenal mind-boggling bull run. But if I were to take a 3 to 4 year point of view, or maybe a 3 year point of view, they also seem like it's a retracement in a bull market. So from the private space, I think Tata Power looks interesting. And if I could go into the PSU space, I think a PFC, looks very interesting. But I think one should spread your purchases because markets are going to be volatile. I believe at least half the calendar year is going to be upsy downsy. So something like this would need some patience and spread your purchases. Either.
Right, sir. So, speaking about the consumer space, the Nifty FMCG has been bucking the trend, but given the backdrop, it has been falling for the last 15 consecutive sessions. So, is it just a dead cat bounce that we are seeing when it comes to the FMCG index?
I think so, Sumit, because like you said, if you look at the boss man of FMCG, you look at the Hindustan Unilever. So that has come off quite a bit. And if you're looking at the FMCG daily index, yes, it's just a recovery and not a rally. So frankly speaking, whether it's Dabur or whether it's Hindustan Unilever, okay, Dabur has gone nowhere, but many of these stocks, the setup has got spoiled. We've taken a hit. So yeah, I would totally agree. Looks like a dead cat bounce.
Right. Siddharth, coming to you, on the consumer space, given that the stocks have fallen so much, are the valuations now attractive when it comes to the FMCG basket at least?
I think if you look at some of the specific names, definitely lack of growth has led to fall, and we have seen the consumption slowdown for the last 2 years. Most of these stocks, we are seeing an earnings growth decline this year as well, and that is again leading to the pressure on the stock prices. So finally, we saw the government pivoting the budget from a capex focus to a consumption-oriented budget, and I think that impact we'll start getting to see from only second quarter of next financial year, plus the benefit of the interest rate cut that the RBI has started. All this should lead to an improvement in demand from the second quarter onwards. So I think 1 or 2 more quarters of a slower growth and a subdued share price movement could be seen. Again, stocks that we like, where we feel bottom out formation is happening. Tata Consumer is one stock that we like. We believe risk reward is favorable. Earnings should recover this year as well as next year. We should see about 20-22% earnings growth, which should lead to improvement in its share price as well. So we have a target price of 1130 on Tata Consumer and a buy rating on Tata Consumer.
That's with regards to where Tata Consumer is concerned overall. In fact, let's just also look at Havells in trade today. They're all set to enter the EV charging market, and this is on the sidelines of Elecrama 2025. My colleague actually, Sesa Sen, spoke to the executive VP of Havells India, that's Vivek Yadav, about Tesla's potential entry to EV charging infrastructure. The stock, though, is at the day's highs with gains of marginal 0.2% higher. But let's first listen into that conversation.
EV scene in India is going to grow very, very fast, and in fact, it will multiply in the coming years. And looking at the potential of how Havells can contribute in that area, we identified chargers as one of the business, and we feel that the charging infrastructure in India today is at a very nascent stage, and it is set to explode in the coming years. And looking at that opportunity, we have developed a suite of products for both AC and DC charging, and we'll be in the market very soon.
All right, how soon can you give us a timeline? And also on the demand for chargers, what is the kind of inquiries are you getting from the market?
You see, we'll be in the market in the next 6 months, and we looking at the demand. So it's coming from various sides. So one is the OEMs, of course, who are manufacturing the vehicles. They give a charger along with the vehicle to the consumers. So that's one market segment. Then we are also looking at the charging infrastructure developers, large developers who set up the infrastructure. They will take chargers, so they could be one customers. The consumer themselves, when the population of electric vehicles increase, every consumer, when he is wanting to charge his vehicle at different places, his workplace or if his home, every place he will need a charger. So they will start buying directly from the market. So it will be in a retail market as well. That's one segment. Then all your real estate developers, it's becoming mandatory to put up a charging station in housing societies. So they could be one customer. So we are seeing that there will be multiple customer segments which will evolve over a period of time. And as I said, the demand is going to grow exponentially in the coming years.
Right, that was the Havells management. Hemen, 8 minutes to market close. What are your closing ideas? BTST, STBT trade for today?
Sumit, I'll go for a BTST on Godrej Properties, but I'll have to tweak the figure just a bit because I think there has been a little bit of change from the time I gave the call. So one can buy Godrej Properties at 2029, stop loss of 2019, target of 2049. Risk reward ratio 1:2. All the oscillators, MACD, stochastic, RSI have given a buy on the hourly charts. It's formed a higher top, higher bottom. One gets the feeling that this bounce intraday bounce should spill over to tomorrow.
Right, so that's with regards to calls that you should be watching out for from a technical perspective. Siddharth, the way the markets are moving currently, any top picks that you can see from a value perspective in any of the sectors, any top picks that come to your radar?
Yeah, sure. I think we discussed some of the stock today. One stock that came to our focus was Federal Bank. The stock has not done well in the past, but under the new management, the company hosted its analyst meet and has presented a strategic vision to be among the top 5 private sector banks in India. I think it's if they are able to achieve what they are promising, that will be a strong growth ahead. We are also expecting almost 19-20% earnings CAGR with ROAs improving to 1.3%, ROEs to 14.6%. And if you look at in terms of valuation, the stock is trading at about 1.2 times price to book, which looks attractive given the ROAs of 1.3%, 14-15% ROEs and growth of 20%. So that stock can be a good potential long-term investment bet. We have a buy rating with a target price of 225.
Right, so that's with regards to where Federal Bank is concerned. But let's quickly shift focus to what will be the key things that we should be watching out for from here on. No major impact will be seen on all of these, but from a macro perspective, we will be watching out for the EU inflation data. Secondly is with regards to where the US Dallas Fed Manufacturing Index goes. So that's going to be a number that we will be looking out for, as well as South Korea interest rate decision that will be coming out. Because clearly, if you talk about Asia Forex as well, on the back of the dollar dip, there has been some bit of a relief, but the BOK rate decision is what Asian markets will see. And from the domestic front, corporate action with regards to a record date for interim dividend for SBI cards at 2.5 rupees is the key that we will be looking at. So that's with regards to where what's on our radar so far. But overall, let me just look at pharma as a sector as well. There is some good move that we are seeing in terms of trade in today's session. That is one of the top sectoral gainers as well. Siddharth, very quickly, your view with regards to where pharma stocks, specifically the CDMO players, because they are the ones who are actually seeing some bit of traction.
So yeah, definitely. I think while the entire healthcare space was doing better, we saw sixth consecutive quarter where the entire pharma space has reported 20% earnings growth. But with the latest change in policy, the threat of a reciprocal tax coming in from the key markets, especially the US, I think the US generic firms in India are under pressure and will continue to be under pressure till the clarity emerges in terms of the reciprocal tax. Even if a 10% reciprocal tax were to be included, we believe the impact could be very less because the Indian prices are competitive, and even if the companies were to pass on a marginal or a portion of this hike, they could have easily absorbed the remaining portion, in limiting the profitability impact to 4 to 5%. In this entire space, yes, CDMO is something that looks interesting, and I think is largely not getting impacted by the reciprocal tax. So demand has
Right,
been
sir.
pretty strong. Yeah.
Right, sir. Hemant, quickly coming to you on Bata India, the stock seems to have taken support around the 1250 level and has also crossed above the 50 DMA in trade today. How's that looking like on charts?
Oversold, stabilizing, downside appears limited, like you said. We need to sustain about 1340 for a further upside.
Right, so that's with regards to where individual stock action goes. But thank you, Siddharth. Thank you, Hemant, so much for joining us on the show and sharing the views. So that's with regards to what you should be doing with regards to markets. But we're just around 2.5 minutes away from closing. But the kind of moves that we're picking up right now, 24,549 below the 22,550 mark so far. 250 point is the kind of cuts that we need to see. Probably this could be the worst monthly losing streak in 28 years. Is what we're picking up. We will confirm that shortly once we get further data on closing. But Bank Nifty as well, 0.6 to 0.7% lower. I think what's interesting in terms of Bank Nifty is it's the PSU index, which has seen somewhat of a recovery. So your PSU banking stocks have been off the lows in today's day of trade. If you can see the chart, there you go. From the day's low of 5885, we've come up to a high of 5969. So very much hovering towards the day's highest levels with regards to where the PSU banks go. Let's just pull up the chart with regards to Bank Nifty as well, because it's not only the PSU banks. Let's see if there is some bit of a recovery that's come in as well. There you go. From the lows, pretty much near the day's highest levels is what we've seen. So a good recovery coming in with regards to banking counters in trade today. Apart from that, you have IT and metals, which have been the top losers in trade today. So there you go. Day's lows, major downtick, 2.8% is the kind of cuts that we are seeing in terms of IT. And if you talk about the metal index as well, that has seen some pressure. So the sell-off has continued. FMCG has interestingly bucked the trend as well in today's session. So if you pull up the FMCG index, there you go, gains of around 0.3% coming in there. Pharma has also bucked the trend in spite of all the weakness that we've seen in terms of markets. If you see the pharma index, but pretty much now on the borderline. And auto was an interesting one to watch out for in today's session. So let's just pull up the auto index and see what's happening on that one. There you go, 0.3% higher with regards to where Nifty auto goes. In terms of broader markets, they were pretty much in line with what the benchmark indices were doing throughout the session. And overall, if you see, there you go, 1%. So the cuts with regards to mid-cap 150 as well as the small-cap 250 are slightly deeper than what we saw in terms of the benchmark indices. The advanced decline ratio absolutely in favor of the declines, and that's not only across the board, but even if you see in terms of Nifty 50, there you go, 13 advances to 37 declines, whereas 550 advances versus almost a 1800 number coming in terms of the declines as well. Let's quickly look at individual stocks. If you can just get the heat map in terms of Nifty 50, that will give you an idea of what's happened to individual counters. M&M, top gainer, Hero Moto, Eicher, Maruti. So all of them on the top, FMCG on the top. Dr. Reddy's a good one as well, is what we're watching out for. Cipla, Trent were bucking the trend. But IT, the major loser. Wipro, HCL Tech, TCS, Infosys. Top four down to the tune of almost around 2 to 4% in trade. Bharti Airtel as well has been seeing under pressure. So what's happening with Bharti Airtel is going to be interesting from here on as to whether it's a re-rating candidate or what's the kind of interest that comes in over there. Metal names, Tata Steel, Hindalco, L&T, again on the losing streak. NTPC, Grasim, Coal India, a few of the other names that we should be watching out for. Reliance as well. 1% kind of a downtick. Let's see what the Nifty contribution and see which are the contributors that have actually impacted the markets and pulled us lower. So the biggest one being Infosys, 41%. So Infosys, HDFC Bank, TCS, Bharti Airtel. The biggest ones coming in terms of the kind of downtick that we are seeing, but the support did come in to a marginal extent by M&M, Kotak Mahindra Bank, ITC, Dr. Reddy's. Really negligible, cannot really count in terms of the kind of support that did come in. But overall, if you see in terms of individual counters as well, EPL was one of the names that was in focus. Major pressure on that one. Pfizer was another name which did see some good moves in trade today. So clearly, if you see, the pressure continues. Individual stock-specific action is what we've seen in terms of the markets. Now, whether this continues in tomorrow's session is a wait and watch, because no major macro events that are planned so far that could be impacting. So the key is going to be in terms of the FI and the DII number that comes out today as well, whether FIs have continued to remain sellers or not. But overall, a negative day of trade. Pressure is there. Whether there will be buying opportunities or not again tomorrow is what we need to wait, watch and see. But completely out of time. But that it's a wrap on this edition of India Market Close. Lots more lineup on the other side. Please continue to stay tuned to NDTV Profit.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
Actually, instead of Viksit Bharat, we should call it Reviksit Bharat.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company.
The Nifty Sensex declined for the fifth day post, the worst session of 2025 so far on weak global cues. The IT index was the top laggard on Monday, falling more than 2% in early trades during the session. Prime Minister Narendra Modi inaugurates the Madhya Pradesh Global Investors Summit 2025 in Bhopal, lauding the state's progress and highlighting its potential to become one of the top 5 states in India in terms of GDP. Adani Group pledges to invest 1.1 lakh crore rupees in Madhya Pradesh for various projects from infrastructure to smart metering, with additional investments worth 1 lakh crore rupees in advanced talks. The group added that this would create more than 1,20,000 jobs by 2030. Everyone wants a bite of the booming EV pie, and Havells India is ready to throw its hat into the ring as well, with plans to enter the electric vehicle charging market in the next 6 months. This is an NDTV Profit exclusive. Trump's steel tariffs make a strong case for safeguard duties in India. While direct impact of restrictions on Indian imports is limited due to minimal steel exports to the US, India could possibly face additional cheaper imports from countries like Japan and South Korea. Negotiations for free trade agreements with the UK and European Union are set to get a big push this week. Commerce Minister Piyush Goyal says the talks will have speed but not haste. Adds that India has never discussed immigration in its FTA talks. Ukraine enters the 4th year of its all-out war with Russia. Ukraine's President Volodymyr Zelensky says he was willing to give up his position if it meant peace in Ukraine. This is along with added uncertainty over financial and military support from its ally, the United States. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's get it right into it. Indices ended on a weak note with Nifty around 22,600 and Sensex around 74,400. Now, Nifty mid-cap and small-cap indices shed 1% each, except for auto, FMCG and pharma. All these sectors closed in the red, with IT and metal down nearly 3%. Puneet, my colleague, now joins us with the market roundup of the day. Puneet, over to you.
The broader markets as well as the main indices were under pressure in trade today, with the Nifty as well as the Sensex down by almost 1%, which was led by the IT pack. We saw Wipro as well as HCL Tech being the top losers in terms of the Nifty for today, while the mid-cap 150 also ended 1% lower. When you also look at the small cap 250 indices, it was down by 1.24% in trade today, and the Nifty auto as well as FMCG gained despite any kind of larger market correction that we saw across the sectors today. Now, the Nifty IT, of course, is the top loser of the day, and it ends lower for the 4th consecutive trading session. Apart from that, we've seen that the Nifty Metal Index also had some kind of impact on the downward trend, down by about 2.25%. We've seen the Nifty Metal snap a 5-day gaining streak that it had before this and has impacted, all the stocks in its indices today. Apart from that, we've seen some pressure on Nifty Pharma as well. But overall, it was a down day in trade today, with the Nifty IT being one of the biggest losers in trade, led by Wipro, HCL Tech, as well as the mid-cap peers.
Thank you so much for that update. Moving on, the Nifty IT index, let's focus on that for a little bit, has fallen by almost 2.4%. This decline is part of a broader global trend where IT stocks have been affected by economic concerns, understandably. So the possibility of higher inflation in the US has caused market volatility, because inflation data actually showing us that prices continue to rise, which could prevent the Federal Reserve from cutting interest rates, which led to a decline in US stocks, as higher interest rates can make borrowing more expensive and reduce consumer spending. My colleague Rucha now brings us more on how this decline is linked to broader economic concerns, which have led to a decline in global stocks.
So definitely IT sector is down in the red, about 3% Nifty IT. But let's look at the bull and the bear case over here. I'll start with discretionary demand. Well, I remember that in the last quarter, many of the IT company management talked about how discretionary demand is recovering, and therefore clients are also increasing their spending. But remember, this was in the month of January. On the bear side, the higher inflation expectations which came out yesterday can actually hit the spending over here, because it can decrease the room that the clients have to spend on these discretionary expenditure, and therefore could affect the top line of the IT company as well. But moving on, let's look at how the sectoral or segmental vertical analysis indicate. Well, the bull case over here indicates that BFSI and the US segments are recovering, and this is what actually we saw in most of the IT companies. In fact, all of the IT companies in the last quarter. Remember that BFSI was actually very muted over the last couple of quarters, and this is the sector, or this is the segment from which most of the IT companies get majority of their revenue from. But on the bear side, that the retail, healthcare, and manufacturing, which accounts for also a significant portion of the IT companies' revenue, are still under pressure. So a segmental analysis or vertical analysis is also giving us a mixed picture over here. But lastly, I want to talk about valuations, and this has been a peculiar point for most of the investors in this kind of a market, and this is very important for most of the IT companies which have run up in last 2 years. The bull case is that the top tier IT companies are attractive in terms of valuation, the likes of TCS, Infosys, Wipro. All these companies, the top tier IT companies are looking good in terms of valuations, but the mid cap companies valuations are really expensive because they have run up a lot in last 4 to 8 quarters, and this is a valuation picture. I'll first start with the top tier IT companies over here. TCS, I'll compare FY26 PE versus the 5-year average. TCS trading lower, Infosys trading almost at par. HCLT is a kind of exception over here, because this was one of the top performers, and that is why it is trading above 5-year average. But again, Wipro and Tech Mahindra as well, almost near to its 5-year average is what we could see over here. But also, let's move on to the next slide and compare what our mid caps doing over here. LTI Mindtree, 27.2 versus 32.6. This is again a top tier company. But Coforge, look at the kind of valuations, 36.3 versus 34.3, higher than the 5-year average over here. Emphasis largely around. LTTS is an underperformer because the ER&D space didn't do much well, and Persistent System, look at the FY26 P, 50 times versus a 5-year average of 39 times. So mid cap IT is really bad or expensive in terms of valuations, and top tier IT companies looking decent enough, but I would say better than the mid cap IT companies. So this is the overall picture of the bull and bear case for the IT sector.
Rucha breaking it down over there. And moving on, Prime Minister Narendra Modi inaugurated the Invest MP Global Investors Summit 2025. Now, the event that aims to bring in mega investors into Madhya Pradesh was attended by many prominent political and entrepreneurial dignitaries, including the Chief Minister, Mohan Yadav. The Prime Minister also launched 18 new industrial policies in connection to sectors like MSME, food startups, semiconductors, drones, and a lot more. And during his inaugural address, the Prime Minister mentioned World Bank report that projects India to continue being the fastest growing economy. Let's listen in.
वर्ल्ड बैंक ने कहा है
भारत आने वाले सालों में ऐसे ही दुनिया की फास्टेस्ट ग्रोइंग इकोनॉमी बना रहेगा। OECD के एक अहम रिप्रेजेंटेटिव का कहना है, फ्यूचर ऑफ द वर्ल्ड इज इन इंडिया। कुछ ही दिन पहले क्लाइमेट चेंज पर यूएन की एक संस्था ने भारत को सोलर पावर की सुपर पावर कहा था।
And on the sidelines of this Global Investors Summit 2025, Chairman of Adani Group, Gautam Adani, announced multi-sectoral investments worth 1.1 lakh crore in Madhya Pradesh. The business tycoon said that this investment is expected to create around 1.2 lakh jobs in the state by 2030. The Adani Group is also in discussions with the state government for a greenfield smart city, an airport project and a coal gasification project that would involve an additional investment of 1 lakh crore. Let's listen in from the event.
We have already invested more than rupees 50,000 crore across energy, infrastructure, manufacturing, logistics, and agribusiness, creating over 25,000 jobs. But our journey here is far from over. Today, I'm proud to announce a new investment of over rupees 1,10,000 crore in the areas of a pump storage, cement, mining, smart meters, and a thermal energy.
Moving on, a safety net or a safeguard duty was what the Indian steel sector was expecting by mid-February after US President Donald Trump announced 25% tariffs on all steel imports without exceptions or exemptions. All of this on February the 10th. Now, we know India is not a major exporter of steel to the US, so the direct impact on exports to the US is limited. However, the tariffs can lead to a global trade diversion, with steel exporters who lose access to the US market diverting their exports to other countries, including India. India has already seen a rise in steel imports, particularly from China, and these tariffs could exacerbate this trend, leading to dumping and downward pressure on domestic steel prices. To counter this, India has considered imposing safeguard duties on steel imports to protect its domestic industry. But we are still awaiting the same. Meanwhile, on the sidelines of NASSCOM Technology and Leadership Forum 2025, Salil Parekh, CEO at Infosys, is of the view that the US government's discussion is benefiting their businesses in America, and it will also help Indian IT markets grow. Let's listen in.
A week before last, I was in the US meeting with several clients. There's a view that what is being discussed by what the government is doing is benefiting the US businesses, maybe through less regulation, maybe through policies that will help the economy. So our view, if that is what plays out, is as the economy in the US or Western Europe markets becomes more stronger, which is already in the US in good shape, we will see more business for tech. And there are two types of things. We've talked a little bit about this in the past. We see a lot of discussions which are tech and ops on efficiency, and that's going extremely well right now. Then there's a lot of work on tech, which is to build for growth. Let's say cloud, AI, other things. And as the economy numbers start to become better, we will see more of that. And so that gives us the second leg of growth. So we have that one leg which is giving us decent growth right now. With the second leg of growth, if that comes, when that comes, we will see more and more growth.
And L&T Technology Services plans to increase its compound annual growth rate to achieve double-digit growth. This announcement comes on the sidelines of the NASSCOM Technology and Leadership Forum, where my colleague Haripriya had the opportunity to catch up with the CEO. She also caught up with CEO of Cognizant's Ravi Kumar about their outlook on the industry.
I do expect the industry to have a double-digit CAGR for sure.
The company, sir?
I do have an ambition to have a double-digit CAGR for sure, right? So both of those. And I do believe that LTTS, with our differentiated offerings, will grow faster than industry average in the current year as well as in the future years.
You've also recently made acquisitions, which was kind of the drag on the numbers that you spoke about in the quarterly results. So when do you expect the acquisitions to start paying off? When do you aim to be accretive on these acquisitions? And what's the kind of value that these acquisitions are bringing to you?
So number one, let me start with the value and then I'll come to the numbers. See, if I look across, as I took over as CEO about 4 years ago, there was a couple, 3 areas that I thought we were not playing in. We were not playing in the Middle East. And for that, we went ahead and acquired Smart World, which I believe has capabilities that gives us a sure foot, a meaningful foot in the Middle East. Second, we sat down and we said cybersecurity as part of that was an area that we were not there in. So again, Smart World brought with this cybersecurity. Net result, the Maha-Cyber order that we received, which was $100 million last year, a lot more partnerships in that area. And globally, we've been able to expand cybersecurity offering to all our customers.
You know, the way I see it is the total addressable spend for companies in the IT services space was about what was spent on enabling technologies. Now, over the years, technology is no longer an enabler for businesses. It's actually the business. Software is actually deeply embedded into every business in every industry. So if you look at that paradigm, the addressable spend is very different because it's not about enabling a business, it's about the business, which means core products which are built on technology, core services which are built on technology is your new addressable spend. So the TAM, the total addressable spend, is very different. With the advent of AI, what you're really doing is you're applying technology in operations of enterprises. As you apply technology in operations of enterprises, you are unlocking that service pools for more leverage. So we could address those service pools, those are net new service pools. To address those service pools, it's a force multiplier, but to address those service pools, you need capability at the intersection of technology and a domain. And if you have capability in that domain, operations strength or industry strength, and then you have technology strength, you can actually do that. So the total addressable spend significantly changes.
We can say sky is the limit with AI?
I mean, with this, the total addressable spend is, very different. It's not just the cost budgets, it's the revenue budgets, it's new product development, it's operations budgets of enterprises.
Right. Also, sir, with the talent, you spoke about the talent, the change in talent as well.